Just wait for a few minutes. We're going to start.
Recording in progress.
Everybody, shall we make a start? Okay, right. Very good response. Okay. Let us start the revision, sir. I think today we are almost having 8 hours, 2 hours per session, 4 sessions we are having. We'll try to cover maximum topics. Maybe you can understand within 8 hours, it's impossible to cover all the topics. We'll try to cover maximum topics. We'll try to allot one session for the standards. The last session we'll try to allot for the standards. In standards, we'll cover some important standards, including AS10. AS10 will definitely be covered, don't worry. In addition to AS10, we'll cover any 2 standards. So good standards which contain some important concepts. Okay, right. So first, let me start with some normal chapters in the first session. Are you all ready? Okay, right. So first, let me take up the chapter, one of the simple chapters. No voices, sir. So let me start the chapter hire purchase. Sir, here I'll try to give logics whenever difficult aspects are there. Other time, it will be just quickly briefing the concept only, sir. Briefing the chapter. Wherever some difficult issues are there, I'll bring the logics also. But otherwise, it's just briefing and how to solve the problems. And what I thought to do is, in every chapter, whatever I deal from now onwards, I'll take 2 or 3 questions which covers 70% of the concepts. Are you getting the point? Because straight away learning the concepts also will not help you solve the problems. So what I will do is, so I'll take any 2 or 3 problems from the chapter, and that 2 problems covers 60 to 70% of the concepts. If there are any other good concepts, then we'll go to the other questions and discuss that specific point. Not questions, we'll discuss that specific point. So hope it is clear how we are going to proceed. So first, let us discuss conceptually what is hire purchase. Of course, in hire purchase, what accounting treatment we usually follow. So okay, let me start. Sir, I think we are having 2 parties in the case of hire purchase. Who are the 2 parties? One is hire purchaser, the other one is hire vendor. Okay. Now, basically, we write few entries, sir. In the case of hire purchaser, now what are the entries we usually pass, sir, whenever an asset is taken on hire purchase basis? So, hire purchase asset account debtor to hire vendor. So, this is the basic entry. Hire purchase asset account debtor to hire vendor. Sir, at what amount we will write, sir? Usually cash price. So, this is the first entry that we pass. Then, what is the difference between hire purchase price and cash price, sir? Interest. That will be recorded over the period. So, interest account debtor to hire vendor. So, this is what crediting the hire vendor for the interest amount. Then finally, what we will do, sir, for any payment made, may it be the down payment which happens at year 0, or may it be any other installment, entries will be hire vendor to bank, cash or bank. Hire vendor to cash or bank. So these are the entries in the case of hire purchaser, sir. Now, if we look after entries in the case of hire vendor, what will be the entries, sir? It's just like debtor to us. So thereby, hire purchaser account debtor to hire purchase sales. Actually, we say sales, but to indicate that it is in the form of hire purchase, we say HP sales, hire purchase sales. Then once again, interest will be there, no? Here we are paying. It's an expense for us. For the other party, it's a income. So what we will do, income means we have to debit the hire purchaser, credit the interest. Entry will be hire purchaser to interest. For any receipt of amount, may it be the down payment or installment, the entry will be bank account debtor to hire purchaser account. Sir, does the hire vendor account or hire purchaser account gets closed in the first year? No. Because we are writing here, we are crediting him for the entire cash price. But here we are debiting or crediting only for the installment amount. Every year some balance will continue. Sir, is that clear, everybody? This is the normal method, maybe we call as cash price method. The another method is also there, which is called as interest suspense method. What is that method? Interest suspense method. The only difference between this method, our normal method, and interest suspense method is the first entry we are not going to record at cash price, we are going to record at higher purchase price. That doesn't mean asset will be recorded higher purchase price. Entry will be recorded higher purchase price. Then what is the difference, sir? We will write the entry like this. The first entry will be higher purchase asset account data, interest suspense account data, higher purchase interest suspense account data to higher vendor. That means higher vendor is to be recorded, higher vendor account is to be recorded at higher purchase price. In the first case, higher vendor account is recorded at cash price. That's the only difference, sir. Now what about this interest suspense, sir? Usually every year what we'll do, interest to higher vendor. But because already higher vendor is credited with entire higher purchase price, now every year whenever we need to make that interest due, we will not credit to higher vendor, we will credit to interest suspense. That's the only difference, sir. No other difference. The difference between cash price and higher this interest suspense method is, in this method, in the first year itself, what we will record, sir, of course, the first entry itself will record for the entire higher purchase price. Higher vendor account is to be credited with the entire higher purchase price. The same concept applies even in the case of higher vendor books also. Instead of higher purchase sales, here we will also credit what, sir? Interest suspense. A totally higher purchaser account should be debited with higher purchase price. In that way, interest suspense will be there, sir. Generally, most of the times normal method only will be asked, but we should be ready for interest suspense method also. So hope these entries are clear. Next, in the entire chapter, number of times for passing these entries, of course, even if you want to pass this entry, what is required, sir? Interest relating to each year. What is that? Interest relating to each year. Now, how do you compute that, sir? For that, you usually prepare a table. Hello, do you remember, sir? For that, you usually prepare a table where in installment, we find what is the interest portion, what is the principal portion. Now, how do we do it, sir? We'll start like this. Maybe first opening balance, then any interest, then maybe any installment. Of course, out of the installment, now if we reduce the interest portion, we'll get the reduction in principal reduction. Then finally, we get closing balance. So like that, we form a table, sir. We form a table where we start with opening balance, interest we'll apply on that opening balance, and we look at the installment. From that, if we reduce interest portion, we'll get the principal portion. From the opening balance, if we reduce principal portion, we'll get the closing balance. And this will continue for the entire period. At the last year, closing balance will be 0. Is that clear, everybody? Now, what should be the starting amount, sir? You are starting with some amount. No, what should be the base with which you should start? Usually cash price. If there is any down payment, first reduce the down payment also. It is cash price less down payment, if any. Cash price less down payment. So that should be the starting value, sir. Generally, some people start with always cash price. In year 0 itself, you will show down payment as a reduction. Once again, you will get opening balance as what, sir? Cash price less down payment. So that is the table preparation. I think you might have prepared number of times. Now, this is not a difficult scenario at all. But usually, in some questions, what they will do is, sir, they will give installments. They will give installments. Maybe they'll give interest rate also. Hello, they'll give interest rate also, but they don't give cash price. Installments will be given, interest rate will be given, but they don't give what, sir? Cash price. That means we need to find cash price. Are you getting the point? How do we find, sir? Maybe we have to apply backward approach. We have to apply backward approach. We will see a question now. Of course, I'll take a question which is also having a complete repossession. So first we'll discuss this backward calculation. Quickly, immediately for the same question, we'll proceed to complete repossession also. Is that clear, everybody? Now before proceeding to that table where we proceed in backward approach, I'll just tell you one simple way to apply that backward approach. Usually everybody does this easily. Sometimes a little confusion arises in the case of backward approach. I'll tell you one single equation, sir. If you remember that equation, backward approach is very, very simple. I'll just tell you one single equation. What is that equation, sir? Now, observe carefully. Sir, opening balance plus interest, it is the total due amount, accepted or not? Suppose 2 lakhs is the opening balance, sir. Interest is 10% on it. So thereby 2,20,000 is the total receivable from the hire purchaser. Accepted or no? Now from this, if I reduce installment, will I get closing balance or not? Hello? Closing balance of a particular year. Will I get or not? Please observe carefully. Nothing but from hire purchaser, what is the due amount to me? Opening balance plus interest minus installment should give you what, sir? Closing balance. I'm going to take the same equation, sir. Just I'll change it slightly. Can I write like this? Closing balance, observe carefully, closing balance plus installment is equal to, I'll not change anything big, opening balance plus interest. Opening balance plus interest. Can I write an equation like this? Closing balance plus installment is equal to opening balance plus interest. Can I write like that or not? The same equation. Now, what happens is, sir, in the last year, can you tell me what is the closing balance? In any hire purchase, in the last year, what is the closing balance? 0. I think if we are proceeding under backward approach, for the last year, closing balance will be 0. And in fact, you should know, in backward approach, we'll come back from the last year. We'll come back from the last year. Closing balance will be 0. And in the question, they will give what, sir? Installment amount. Now, this installment amount is equal to opening balance plus interest. Sir, every year I don't know opening balance. Let us assume it is X, sir. Hello, how much, sir? X. Now, interest is, they will give interest rate, sir. Let us assume 10%. Now, that means 0.1x. So, that means 1.1x. Okay. It is opening balance plus interest. Now please observe carefully. Sir, that means every year we don't know opening balance, but that means we know installment. And if we are just able to find this is equal to 1.1x, am I right or not? Opening balance plus interest will be equal to installment. Now can I find now that x value or not? Yes. Every year what we will do is we'll find closing balance plus installment, and that will make it equal to opening balance plus interest. Maybe if the interest rate is 10%, we'll assume it as equal to 110. Hello, we'll assume it as equal to 110. That only we will divide into 10 and 100. Sir, okay, this year we have found. Now let us assume installment amount is some amount, sir. Now based on that we'll divide. Now opening balance of this year will be the closing balance of the previous year. Accepted? Opening balance of last year will be the closing balance of the previous year. As a result, once we find this, we can once again find the closing balance. Anyway, installment amount will be given in the question. Once again, we will know these two. If we know these two, we will make it equal to what, sir? Opening balance plus interest. So that means that will be equal to 110. Suppose interest rate is 10%. So that 110 we will divide into 10 and 100. Like that, this equation will continue. We'll apply the same equation, sir. What is that equation? Closing balance plus installment is equal to opening balance plus interest. So now let us see through a question, sir. Sir, I will not do all calculations. It will not be sufficient. I will not be having sufficient time to do calculations. What I will do is, I'll just show the procedure, sir. I have already taken the solutions. I'll just show the procedure. Just wait it. Just wait, sir. Okay. Now, shall we make a start, sir? Okay. Please observe carefully. On 1/1/2011, Beta Limited purchased a machine from Yamaha Limited on hire purchase basis. The terms of agreement provided for 40% as cash down payment and the balance in 3 installments of 1,30,000 on first year end. Second year end is 1,42,000. Okay, there was a difference, I think. It was not continuous years. Then 31/12/2014. Okay, 3 years was given, sir. Now let me show you how it will be done. How this equation will be done. What we'll take, sir, we'll come back from the previous year. Hello, we'll come back from the last year, of course. Last year closing balance will be 0. Installment amount will be given in the question, 1,10,000. Of course, this is the last year, 1,10,000. Now this we will assume equal to what, sir? What is the interest rate given in the question? 10%. So thereby this is equal to 110. This 110 will divide into 10 and 100. Now this becomes the closing balance of the previous year. Once again we'll add the installment amount. So as a result this becomes equal to 110. Once again this we will divide into 10 and 100. So this becomes once again the closing balance of the previous year. Like that we prepare the table, sir. In that way we will get the opening value. Now what is opening value? We know it, sir. Usually we start with cash price minus down payment. Hello, what is that? Cash price minus down payment. So to find cash price, now cash price down payment they have said as 40% of the cash price. Hello, 40% as cash down payment. So thereby x minus 0.4x should be equal to opening value. Am I right or not? That x value minus down payment should be equal to the starting amount for us. So thereby this is the equation. In this way we'll find the cash price. Is that clear, sir? With this we have completed that backward approach also. Now let me move to 2 important concepts in this chapter, sir. Only 2 important concepts will be there. Mainly repossession, the 2 partial repossession and complete repossession. First let me start with complete repossession. Complete repossession. So what we will do in the case of complete repossession, sir? Okay. Okay. Let us continue. We are there in complete repossession. Sir, I think you know the usual entries that we pass. What are the 3 entries that we pass, sir? Hire purchase, asset account at R to hire vendor, interest account at R to hire vendor, hire vendor to cash or bank. Sir, whenever we enter into a contract with a third party, until that payments are not done, the same process will continue. Only when he doesn't make the payment properly, we'll try to repossess the asset. Until that point of time, the same accounting treatment will continue. Now, whenever payment is not done, we'll wait for some period. Immediately, we'll go for repossession. Complete repossession means, suppose we have given a single asset on a hire purchase basis. The same asset we are taking back. So that is complete repossession. Or else we have given 2 assets. The 2 assets we are taking back. That is complete repossession. Partial repossession in the sense, now 3 assets you have given, you are taking only 2 assets for the amount due from him. Or 5 assets you have given, you are taking only 2 or 3 for the amount due from him. So that is partial repossession. Complete repossession means you will take the full assets you have given. Is that clear, everybody? Now what we will do? What is the accounting treatment in the case of complete repossession? Sir, very simple. When complete repossession was done, the relationship between hire vendor and hire purchaser is over. Hello? Name itself conveys the relationship between hire vendor and hire purchase is completed. No more relations between hire purchaser and hire vendor. So thereby, those 2 accounts has to be closed. Something I have said. What I have said? Hire vendor account is to be closed. Hire purchaser account is to be closed. Now how we will close, sir? Now suppose there is some amount due from hire purchaser. This is due to what, sir? Asset only. This due amount is due to asset only. So what I will do is, whatever balance is there in hire purchaser account, I will simply transfer to hire purchase asset account. Which account? Hire purchase asset account. That means usually hire purchaser will have which balance, sir? Debit balance or credit balance? Sorry, in the books of hire purchaser, hire vendor will have which balance, sir? Debit balance or credit balance? credit balance because it is payable. It is payable. Now what we will do? We will write hire vendor to hire purchase asset. The entire amount of due amount of hire vendor we are going to transfer to hire purchase asset account. With this hire vendor account will be closed or not? Just think carefully. When we prepare that hire vendor account, usually you will be having credit balance. So by balance brought down will be there. So what you will do, sir? Simply you will write to hire purchase asset. As a result, the ledger account will be closed. Now what you will do in hire purchase asset account, sir? In hire purchase asset account, what will be there, sir? Debit balance or credit balance? Sir? Debit balance. Okay. Already by the year end you might have provided some depreciation also. Now what we will do? Simply we will write the due amount transferred, nothing but by hire vendor. Whatever difference is there, we'll simply transfer to P&L. That's all, over. Whatever balancing figure is there in asset account, we'll simply transfer to P&L. Why, sir? This asset also being taken away. Hello? This asset also being taken away. We thought this is some worth 40. Now today they have taken away 30 something. So the difference amount fully will be transferred to P&L. In the case of complete repossession, accounting treatment is very simple, sir. We'll simply do only two activities. First one, hire vendor account, we'll close it by transferring to hire purchase account. Then in hire purchase account, we'll write the same value by hire vendor. The difference will transfer to P&L. That's all. Is that clear, everybody? Now what will happen in the books of hire vendor, sir? Now this is in the books of hire purchaser, sir. What will happen in the books of hire vendor? Now in his books, whose account will be there? Hire purchaser account will be there. Asset account will not be there. Asset account will not be there. Whose account will be there? Hire purchaser account. Hire purchaser account will have which balance, sir? Usually for him it is receivable. For vendor, receivable is there from hire purchaser. So usually debit balance might be there. To balance brought down. Are you getting the point? Now what we will do, sir? Whatever value we are, that means whatever due amount is there, of course, tell me one thing. If it is receivable for one amount, payable also will be for the same amount. Payable, that means whatever amount is there here and whatever amount we are going to record now will be the same. Because if I am I am going to receive 1 lakh, other party has to pay me 1 lakh. So thereby, what I will do? I will write by goods repossessed account. What is the account name, sir? Goods repossessed account. Goods repossessed account. That's right. It is goods repossessed account, sir. In the hire purchaser account, we'll simply write by goods repossessed account. In that way, we'll close the hire purchaser because the purpose is elimination. So relations are over. So eliminate both hire purchaser as well as hire vendor. Now we will prepare another account called goods repossessed account. In that account, we'll write to hire purchaser. Then simply, if we have incurred any other expenses on that goods for making it, bringing into saleable condition, we'll incur those expenses. We'll write the sale value by bank. Then difference will transfer to profit or loss. In that way, we'll prepare the goods repossessed account. Complete repossession, a very, very simple concept. Is that clear, everybody? Okay, so let us see a question, sir. We'll have a better clarity quickly. Once again, I'm telling, we'll not be doing calculations. I'll be just simply showing you the solution. Look at the same question, sir. In the same question which we have seen previously, Beta Limited made the down payment. Down payment was completed. First installment also completed, but could not pay the second installment on 31st December. Yama Limited repossessed the machine from Beta Limited. Okay, right? Yama Limited later on spent some expenses on it and once again sold it for 1,95,000. Now in the books of hire purchaser, how many accounts will be there? 2 accounts. One is hire purchase asset account, the other one is hire vendor account. Let me show you how that will behave, sir. First let us see hire vendor account, sir. Now when this default happened and when he thought to repossess, sir, now you could observe, just wait. Now whatever amount due was there, now you could observe last year, total amount how much, sir? At the time of repossession, I think it is in 2013 that repossession was done, sir. He has not paid. Now at that time, total amount is 2,20,000 plus that interest on that day 22. Totally due amount from higher purchaser, due amount payable to higher vendor is 2,42,000. Simply will transfer to asset account. Till that point of time, the regular accounting treatment we pass, sir. Now, what we will do in higher purchase asset account, here we simply write by higher vendor 2,42,000. Already we'll write the opening balance as usual. We'll provide depreciation as usual. The difference will be transferred to P&L. That's the only point we are going to observe. Sir, clear? Have you all understood this, sir? Okay. Now this is in the books of higher purchaser. Now in the books of higher vendor, whatever due amount was there, of course, will be the same. 2,20,000 plus 22, 2,42,000 will be transferred to goods repossessed account. Now we'll open goods repossessed account. We'll write to higher purchaser, of course, 2,42,000. Because sale was done on a different date here in this question, we have written by balance carried down, and in the next year, to balance brought down. Then we have incurred the expenses to bank. Then we have received the proceeds from sale by bank. The difference will be transferred to P&L. This is profit or loss on sale. Sir, clear? In this way, complete repossession concept will be there. Now, let us move to the last concept, which is what, sir? Partial repossession. Everybody, are you all listening, sir? Let me move to the last concept, partial repossession. Okay. Sir, what is the difference between accounting treatment in the case of complete repossession and partial repossession? Only one difference. In the case of complete repossession, relations are completed, over. But in the case of partial repossession, relations are still continuing. That means we are not going to close higher vendor account, and higher vendor is not going to close higher purchaser account. And still higher purchase asset account also will continue, because still one or the other asset is left with us. Partial only repossessed, sir. Still one or the other asset is left with us. That means in this scenario, still once again the four accounts will be there, but slight difference only in amount. Let me tell you, sir, as usual, till the time payment is done properly, the regular entries will be passed. What are the regular entries? Higher purchase asset account at R2, higher vendor, interest account at R2, higher vendor to cash or bank. These regular entries will be passed. Once the payment is not done, then what we feel is not making payment. So much amount is due. So let us repossess some assets. So now we are not repossessing entire asset. We are repossessing only partial. Now for this partial repossession, what is the entry? Once again, the entry will be same, sir. What is the entry? Higher, because already higher vendor is having credit balance. Now higher vendor to, what we have written, sir, previously, higher purchase asset. Here also same, sir. Higher vendor to higher purchase asset. But what is the big difference is, previously when we have written this entry, for what amount we will write this entry, sir? We will write this entry for the balance in higher vendor account. What is that? Balance in higher vendor. Because our target is to eliminate or close higher vendor account. Now our relations are continuing, so we will not close higher vendor account. Then for what amount we should debit, sir? Very simple. You are taking some assets, no? Now at what value you are taking that assets, the same value has to be debited. Something I have said. Sir, asset you are taking back, you are repossessing some asset. When you are taking back some asset, that means some amount payable to me also should reduce, no? So that's why I am debiting higher vendor. So how much should reduce? At what value you have taken the asset, the same value should reduce. But keep one point in mind, sir. Sir, how he decides the value of the asset? How higher vendor decides the value of the asset? Very simple. He will not take book value as the base. Please remember that. Already we are maintaining the asset account by providing some depreciation. He will not take this as the base, sir. He will consider on his own what was the asset usage, and based on that he will decide the value. In other words, what I say is, the depreciation rate which we follow, and the depreciation rate which he takes for the purpose of valuing, both may be different. Is this point clear, sir? Because hire vendor is taking only few assets, he should decide the value. In the case of a complete repossession, no decision, sir, because simply at the due amount only he is taking the asset. But now, because partial repossession is happening, he has to decide the value. How the value will be decided? It is usually based on the depreciation as per the hire vendor. Hire vendor will say, okay, asset has been used this much percentage. So thereby, in that way, we will compute. Have you all understood, sir? For that value, we will write hire vendor account debtor to hire purchase. Now, how our ledger accounts will behave, sir? Usually, hire vendor account will have which balance, sir? Credit balance. Am I right or not? Buy balance brought down. Now, what we will do? We will write to hire purchase asset, but not full due amount. We will write only as valued by hire vendor. The difference will continue. To balance carried on. Of course, if there is interest, we will add that interest also. Then we will get the closing balance. Now, what about hire purchase assets, sir? Here, as usual, you will have to balance brought down. Then you will write by depreciation. This is also common. Now you have to write by hire vendor. How much you will write, sir? What is valued by hire vendor? Now, previously in complete repossession, we used to write the difference as a balancing figure. Now we cannot write the difference, sir, because one asset is still continuing. Now what we should do? Here there are two ways, sir. One way, just to find the value of the asset not taken away. Hello, what is that? Find the value of the asset not taken away, because one asset is still left with us and we are valuing as per our own depreciation rate. Please find that value. From the, suppose, five trucks or something are there. Now 3 are taken away. Now for 2 trucks, divide this opening balance. Now reduce this depreciation also for those 2 trucks. Now you will get for those 2 trucks left with you closing balance. Am I right or not? Now the difference you can write as profit or loss. Or else what you can do? Find for those 3 trucks which were taken away the value, book value. In other words, in this you are having 5 values, 5 asset values. Now proportionately divide into 3, depreciation also divide into 3, you find the book value of those 3 trucks. Now you know the value taken away by hire vendor, you will compare both and you will get the profit or loss. 2 ways are there. Either you find the existing asset value and write the balance as profit or loss, or else straight away you compare those assets which are being taken away. Is that clear, sir? So this is in the books of hire purchaser. Now if you ask me in the books of hire vendor, more or less it remains the same, sir. Whose accounts he will maintain? Hire purchaser account. Sir, hire purchaser account usually have which balance? Debit balance. Now what we will do? We will write, hello, what we will write? Buy goods repossessed. Once again same way, sir, we will write buy goods repossessed. At what value? Not due amount, but as valued by hire vendor. So buy goods repossessed, like that we will write. Sir, are you getting the point? Now the balance will continue because relationship is not completed. Still the closing balance will continue. Now in the case of goods repossessed, the same procedure, sir. We will write to hire purchaser. Any expenses incurred we will write to bank. Any sale value we will write by bank. The difference we transfer to profit or loss. That's all. Complete repossession also completed. Only one thing I want to tell. Partial repossession also complete. In the case of partial repossession, the entry will be same, sir. Hire vendor account debtor to hire purchase account. Here for hire vendor, what he will write, sir? It is goods repossessed to hire purchaser. So entry remains the same whether it is partial repossession or complete repossession, but amount itself differs. In the case of complete repossession, we will write the due amount of hire vendor and hire purchaser. Here we will write that amount which is valued by hire vendor, the corresponding differences to profit or loss. Let me show you in the form of a question, sir. You will have a clarity. Shall we proceed, sir? Okay, right. Let me show you through question number 5. Sir, I am not dealing with any table etc. I'll straight away deal with that partial repossession point. I'll quickly read the question, but I'll deal with only partial repossession. X Transport Limited purchased from Delhi Motors 3 tempos costing 50,000 each on hire purchase based on 1/1/2010. Payment was to be made 30,000 down payment. That means still how much is left? 1,20,000. And the remainder in 3 equal installments. That means this 1,20,000 only paid in 3 installments. Now please observe carefully. Together with interest they are telling. That means that 1,20,000 only divided into 3 installments. It is not that 1,20,000 plus interest is divided into 3 installments. 1,20,000 itself is divided into 3 installments. That means every year 40,000 along with interest. 40,000 plus interest. Is that clear, sir? Sometimes they will not give specifically like this. In such a case, balance amount due together, that including interest, will be divided in the form of installments. That is 3 equal installments. Like that they may say. Here they are telling clearly the balance 1,20,000 only in 3 installments together with interest. So this is the format, sir. Now, X Transport Limited writes off the depreciation at the rate of 20%. It paid the installment due at the end of first year, 31/12/2010, but not pay the next on 31st December. Delhi Motors agreed to leave 1 tempo. That means how many were taken away? 2. Adjusting the value of 2 other tempos with the amount due, Delhi Motors spent 8,000 on the repairs and sold it for 60. Now, tempos were valued on the basis of 30% depreciation annually. That means who have valued it? Higher vendor might have valued on 30%. Now, let me show you the value of the assets, sir. Now, actually, the cost is how much? 1,50,000. Am I right or not? So, when we maintain tempos account, we will maintain at 1,50,000. The higher purchaser is writing depreciation at how much percentage? 20. So, at 20% we will provide depreciation. When it comes to second year, when that repossession was done, you could observe book value is how much? 1,20,000. Now, anyway, at the end of the year it happened. So, it was depreciation was 20% once again, 24,000. Now, total how many tempos were there, sir? 3. How many is being taken away? 2. So, thereby, can you tell me 1,20,000 minus 24 how much totally? 96,000. This is related to how many assets? 3, and we want relating to 2. So, just into 2/3, you will get the book value of the tempos which are being taken away. Now, we have to compute the value which is computed by higher vendor, that is at the rate of 30%. 50,000 into 2. This is the original cost, sir. Now, from that, you have to reduce depreciation at the rate of 30% for 2 years. So, thereby, first year 1,00,000. From 1,00,000, you will reduce depreciation of 30,000, 70,000. From that, another 30%, 21. You will get the book value as 49. Sorry, you will get the value as 49,000. But what is the book value? I think you might have computed 64,000. Hello, what is the book value? 64,000. So 49,000 is the book value. Sorry, 49,000 is valued by higher vendor, whereas book value is 64. So profit or loss? 64,000 book value is being taken away only at 49. So there is a loss of 15. So that will be recorded here, sir. So the remaining value asset will continue. You can observe the remaining value asset is 32,000. 96,000 is for 3 assets. For 1 asset it is 32. So you can find even this one also and write this one as a balancing figure. But of course computation is required in the examination. So this is the asset account. Vendor account also same way, sir. So we'll write as usual. So you could observe here 2 tempos 49,000, and the year of repossession we'll write that. In the next year it will continue, interest also will be there, payment also will continue as it is. Okay. Now next, even you could observe in the books of higher vendor also, whatever value at which was considered, for that amount will transfer to goods repossessed account. Now in goods repossessed account we'll write to higher purchaser, to bank, to by bank, then difference as profit or loss. Sale value is 60, whereas our cost is only 57. So thereby we are having a profit of 3,000. That's all. This is what partial repossession we have completed in each and every books. Sir, in some questions they may not ask you to prepare ledger accounts, they'll simply ask you to find various values. You could observe agreed value of 2 cars. Now I think higher vendor value, that means reducing at the depreciation rate of higher vendor. Then book value of the car left with higher purchaser, maybe in our question 32,000. Similarly, profit or loss to higher purchaser on 2 cars taken away by the higher vendor. In our question 15,000. That 15,000 is the loss. Similarly, profit or loss of cars repossessed when sold by higher vendor. For higher vendor it is 3,000. That means instead of asking you to prepare ledger accounts, sometimes they may ask you to find the values. Most of the times in examinations, questions are based on partial repossession, sir. Sometimes on complete repossession. Rarely they go to regular methods, either cash price or interest suspense method. That's all. Is that clear, everybody? With this, we are closing higher purchase. I think we have covered almost all the concepts. We have taken almost 40 minutes, 45. Okay, right. Now, let me continue to next chapter. Okay, all the students from YouTube, hope you are also understanding. Okay, right. Now, okay. Shall we continue? Now, let me proceed to another chapter which is usually asked from the same group. What is the same group, sir? Usually, in examination, I can say 3 chapters will be asked as a single question. One is investment accounts. The other one is hire purchase. The other one is insurance claims. Take it as granted, in examination, out of these 3 only, any 2 questions will be given for 10-10 or 8-12, but for a 20 marks question, pakka. You cannot get any other combination. That means investment accounts 1 question and financial statements another question. No. Because in ICAI, in the module, they have given this one as a section, these 3 chapters together, and in a public exam also, they used to ask in the same way. That means if you want to prepare 2 chapters, it's not wise. You have to prepare all the 3. Because from these 3 only, any 2 will be given. Is that clear, sir? So let me complete that section. So immediately, let me move to investment accounts. Okay. Shall we proceed? I know it's hard to sit for many hours and listen, but I can say each and every minute you spend here will definitely help you for a quick revision. Okay. For investment accounts, what I want to do is, I'll just summarize whatever adjustments we usually have, sir. I'll just summarize it and then quickly I'll show you 1 or 2 problems. Then we'll have a better understanding. Okay. Just let me show you. I thought once again we have to consume lot of time if I need to write here. So thereby I've just written it prior and I am showing it now. Please observe, sir, in investment accounts, usually we'll deal along with the standard also, sir. First we'll complete AS 13, then we go to the normal chapter, but right now I am not covering standard portion, which is simple. Now I am going to only normal chapter, in other words, where we prepare debentures account or any equity shares account. So first, let me move to debentures part. Hello, what is that? Debentures. Here, usually with respect to debentures, these are the 4 adjustments you will have, sir. What are the 4 adjustments you will have? One is purchase, one is sale, one is accrued interest, the other one is conversion. If you know these 4, any debentures question you can solve. Of course, one more is there, interest, not accrued interest, normal interest. But I don't want to insult you by discussing about computation of normal interest. Interest computation, Lily puts there. Accrued interest is a discussion. Okay, right. Now, let me start with purchase, sir. Now, purchase can be done on 2 ways, sir. Either on come interest or ex interest. Sir, please remember, both are the ways of quoting a debenture. When a seller quotes the price, either he may quote come interest or he may quote ex interest. But understand one thing, whatever is the scenario, he will collect interest from you, sir. Hello, whether it is come interest or ex interest, he will collect interest from you and you have to pay the interest also. It is just a way of quoting the price to avoid that brokerage, etc. But usually, whatever is the type, that is come interest or ex interest, interest receipt and payment is common. Okay, right. purchase can be done on two bases, sir. One is cum interest, the other one is ex interest. If it is on cum interest, how do you find the cost? Very simple. Take the number of debentures, multiply with debenture price. As you are telling cum interest, price also will be given cum interest. You please multiply with that. Now, for that, you have to add what, sir? Brokerage. Please remember, brokerage will always be computed on transaction value. Which value? What is transaction value? This one only. Whether on cum interest or ex interest, whatever is there, on that only we'll compute brokerage. We'll add brokerage. Now, because we are telling cum interest, sir, interest payment should not be made part of the cost. It is an expense for us. Hello, interest if we pay, of course it is really not an expense also, because later on we are going to recover at the interest due date. At the time of interest due date, we will receive the interest amount which we have paid to the seller. So usually this is not a cost, that's why we will reduce, because price is inclusive of interest. So we will add brokerage, reduce the interest. Suppose if it is on ex interest basis, we'll simply add brokerage and there is no need to reduce any interest. Is that clear, sir? Now, sir, then shall we write that interest payment in our debenture account? We will not reduce interest here. In our debenture account, will we write interest payment, sir? Yes. That is what I am telling. Whether cum interest basis or ex interest basis, interest receipt and payment is common. Maybe you will not reduce it here, that's all. Because it is already reduced with interest, you will not reduce it once again. That doesn't mean you will stop making payment. Payment has to be recorded. So hope it is clear. Another one, how to compute interest. Sometimes interest computation also will hit you, sir. Very simple, sir. I'll not explain big logics, but simple way to remember is from the last due date to the date of transaction. Over. Hello, what is that? Any question, any place, just apply that period. Over. So what is that? From the last due date, take the interest last due date, because till that time already you might have received. Last due date to the date of transaction. That is, whatever transaction date is, please consider this much only interest computation will be there. Is that clear, sir? This is what? Purchase. This is what? Purchase. Number of debentures into debenture price, add brokerage, reduce interest. If it is ex interest, only adding brokerage. Now let me come to sale transaction, sir. Now what we have discussed is purchase. Now let me move to sale. Sale also possible on two ways. If you are purchasing on two ways, sale also possible on two ways. Seller only no doing that. So thereby sale might happen on cum interest basis or on ex interest basis. If it is on cum interest basis, once again, first you will write number of debentures into debenture price. Now you should not add brokerage, sir. You should reduce brokerage, because when you are a seller, what stockbroker will do? He will give you the sale amount net of brokerage. He will give you the sale value of the securities net of brokerage. Hence first we need to reduce brokerage, then it is proper sale value, but in that interest is included. So reduce the interest. How to compute? Once again same, from the last due date to the date of transaction. If we reduce that, what we get is net sale value. Once we find the net sale value, we'll compare with the cost. How to compute cost, sir? It is either on FIFO or weighted average basis. But if nothing is mentioned in the question, we usually follow weighted average. That means if they say FIFO, FIFO. If they say weighted average, weighted average. If nothing is mentioned also, weighted average. So that is what we finding the cost. Then we'll compare with the net sale value. Difference will be recorded as profit or loss. Then if it is ex interest, once again same, number of debentures into the debenture price. From that we'll reduce brokerage. No need to reduce interest. That's all. Interest reduction alone will not be there. Brokerage will be computed on what? Once again same, sir. Always on the transaction price. If it is cum interest transaction, on cum interest value. If it is ex interest transaction or ex interest value, that's why I say transaction value. Which value? Transaction value. Either it may be ex interest transaction or cum interest transaction. So hope everybody have understood. Now let me move to two important aspects which are usually committed as a mistake. These two are usually mistakes which will be regularly committed, sir. Please be careful. First one, accrued interest. Why we will do mistake in accrued interest? You know the concept, but you overlook it, sir. In the process of writing the solution, you will forget about that accrued interest. Another one is conversion. Sometimes debentures may be converted into equity shares. You write wrong answer here because you don't know the concept. Hello? Accrued interest, you know the concept. But in the process of writing the solution, we forget about that accrued interest. But conversion, you will write the mistake because you don't know the concept. Anyway, these two are usually committed as mistakes. So let us discuss quickly these two. One is accrued interest. What do you mean by accrued interest? Very simple. Sir, let us assume interest due dates are 30th June and 31st December. What are the interest due dates? 30th June and 31st December. Year ending is 31st March. What is the year ending, sir? 31st March. Year ending is 31st March. Now tell me one thing. What is the last date on which you have received interest? 31st December. Now you are closing books of accounts on 31st March. Now can I say I should receive this 3 months interest? No, because next due date is 30th June. Then when we should record that 3 months interest? Shall I go and record on 30th June or shall I record today itself? If I go and record on 30th June, you will say that I am following cash basis. Hello, because when you will be receiving interest 30th June. So if I record on 30th June, that means I am following cash basis. I don't follow cash. I have to follow accrual. So thereby when I should record 31st March only, but not the receipt showing that it is receivable. That is called as interest accrued but not due. It is not due, sir. It will be due on 30th June, but it is what? Accrued. So that is called accrued interest or interest accrued but not due. So usually when it will happen, sir, just remember this statement, you will never go wrong. What is that? If interest due dates and year ending is matching, accrued interest will not be there. Let me take the example. Interest due dates are 30th September and 31st March. Year ending is also 31st March. Now tell me, last interest due date, what is that? 31st March. That means you have received interest till 31st March. You are closing also books of accounts on 31st March. Any receivable? No. So thereby accrued interest will not be there. When accrued interest will be there, sir? If interest due dates and year ending are not matching. Here you could observe interest due dates are 30th June and 31st December, whereas year ending is 31st March. Is it matching? Interest due dates, are they matching with year end? No. In such a case, definitely for some period accrued interest will be there. How to compute, sir? Interest. Once again same. Last due date to the date of transaction. Here you are closing the books of accounts, hence till the 31st March. Usually 3 months only. Usually for 3 months only you will book that accrued interest, because in all our questions interest due dates are given half yearly. Discussion clear? So this is what accrued interest, sir. Now let me proceed to another topic, conversion. The most important topic, sir. Usually mistake every time. Most of the, if out of 100 students, 80 students commit mistake with respect to this point, sir. What is the entry for conversion, sir? Sir, first of all, think carefully. You are an investor, a company? Investor. You are a investor. For you, debentures or equity shares are a asset. So, debentures are getting converted into equity shares, means from you, they are taking away debentures and they are giving equity shares. What you are receiving? Equity shares. So, you will debit equity shares. What you are giving? Debentures. So, you will credit debentures. So, entry will be equity shares to debentures. Now, the question is, what about profit or loss? Now, look here carefully. Let us assume the cost of the debentures which are being converted is 1,20,000. How much, sir? They may give in the question like this. Instead of this 1,20,000, that means in conversion of this 1,20,000 worth debentures, I will give you 10,000 equity shares of rupees 10 each. Like that they may communicate. Now can you tell me profit or loss for us? Sir, profit or loss for us? Is there profit or loss? Loss, because out of, for 1,20,000 worth debentures, today we are receiving only 1 lakh. So 20,000 is the loss. Now if you think in this way, that is completely wrong, sir. This is what the mistake committed by majority of the students. Tell me one thing. Suppose you are investor. Now what is the worth of your investments? 1,20,000. What I am telling? You give me 1,20,000, I will give you 1 lakh. Any investor will accept. Will any investor will accept? You are telling you will give 1,20,000. I'll give 1 lakh. Any fool will accept? No fool will accept. Please understand, this is an exchange, sir. It's just like a barter. You are taking one, I am giving you one. You are giving me your debentures, I am giving you equity shares. It's just like a barter. In a barter, no party will have profit. Hello? They'll try to exchange for equal value. Sir, are you getting the point? Then you may get a doubt. So then why they have said you are receiving only 10,000 shares of 10 each? When they have given like that, 10 rupees might not be market value, that might be face value. Because we will never consider face value, we'll always consider market value. If at all they say for 1,20,000 worth debentures, they are giving 10,000 shares of 10 each, its market value might be 12 rupees each. Its market value might be 12 rupees. As a result, they are also giving you 1,20,000. In fact, companies will do something favorable to the shareholders, but they never do something loss, because no investor will accept. Sir, are you getting the point? Suppose if there is any student who say that, no sir, this 10 rupees is not market value, sorry, this is not face value, this is market value, then something else should be given in the question, that balance 20,000 is paid in cash. If they give like that, I accept that it is a market value, because equal settlement should happen, sir. If you feel that only 10,000 equity shares can be allotted, then for the balance 20,000 cash should be given. If they don't give like that, that means that 10 rupees is face value only. That is not market value. So I will tell you one thing. Please remember this point. What is this? Never any profit or loss arises on conversion, because it's a barter, sir, exchange. You are giving one thing, you are taking another thing. Who will accept any profit or loss, sir? Rarely company might face some loss and give some profit to the investor, but never investor would accept any loss. So please don't think that that 10 rupees will be of any face value, sorry, will be any market value. That is only face value. So hope everybody have understood. Now with this second point also complete. One last point, sir. Sir, suppose conversion is happening somewhere on 31st Jan. When it is happening, sir? 31st Jan. Now interest due dates are 30th September and 31st March. That is the interest due dates. Now conversion is happening on 31st Jan. Now tell me, relating to these 4 months, because already interest paid on 30th September, relating to these 4 months, will you receive interest now or on the interest due date? Company will pay you interest now immediately on the date of conversion, or on the interest due date? There is no rule. There is no rule as to what should be the pattern. Because obligation for the company is only on interest due dates, sir. That is why interest due dates are fixed. But usually what may happen is, now if today debentures are converted into equity shares, our procedure is on the interest due date, whatever debentures are there, for them we pay entire interest for the 6 months period. That is what our procedure, sir. We may forget about the debentures which are already converted. Please understand, our procedure is, we look at the closing debentures, for them we'll calculate interest and we'll pay them. We'll never look after those debentures which are converted, suddenly issued. All those things we'll forget, sir. We'll simply look at the closing balance. So when we look at the closing balance, possibility is there that you may forget those debentures which are already converted. That's why usually on the date of conversion only settlement also will happen. But nothing wrong if you settle on the balance sheet date also. But usually ICAI, we will, as per ICAI, we settle on the date of conversion. Discussion clear? That's all, sir. Not even one point will be extra with respect to debentures. All these points we apply in questions I have written here. Have you understood, sir? Now let me quickly apply into a question. The 2 convertible debentures question only. Sir, once again, I will not be doing any calculations, sir. I'll just simply show you the question and solution. That main points I'll just explain, that's all. Just wait, sir. Okay. Right. Oh. Sir, shall we start? Once this much discussion was done, this question I think will take only 5 to 10 minutes, sir. Quickly we can complete. Let me show you. A Private Limited follows the calendar year for accounting purposes. Many students don't look at that year properly, sir. Please look into the question carefully, whether it is calendar year or financial year. So what is the year? Calendar year. The company purchased 5,000 numbers of 13.5% convertible debentures of face value of 100 each of P Limited on 1st May 2018 at the rate of 105 on come interest basis. So this was the transaction, sir. So how we will record, sir? For the purchase, we'll write the working note. Now, usually how we record, sir? How many debentures are purchased? 5,000. Each at 105. 5,000 into 105. For that, look into the question, is there any brokerage? You should be careful, sir. Is there any brokerage or not? Nowhere they have given that brokerage is there. So thereby, if brokerage is there, we have to add brokerage. So then we have to reduce any interest because it is come interest. So 5,000 into 105 minus, so face value is 100. So thereby 5 lakhs into 13.5% into how many months, sir? The interest due dates they have given is 31st March and 30th September. What is the last interest due date? 31st March. So thereby for 1 month we will receive the interest. So that interest if we reduce, so interest amount is 5,625. If we reduce, we will get the value as 5,19,370. Is that clear, sir? So whatever interest we pay, we will write here. Cost portion we will write here. Sir, look into the question, year ending and interest due dates, are they matching or not? Because accrued interest otherwise. Year ending and interest due dates, are they matching? Year ending is 31st December. Interest due dates are 31st March and 30th September. Matching, accrued interest will be there or not? Yes. Sir, have we written accrued interest? For writing first there should be some opening balance, no? If you are having debentures in the last year, then interest will be receivable, sir. In this question, you are not having any opening balance. If you are having debentures in the last year, say that it is receivable. You have purchased only in the current year. How could you say there is any receivable? But be careful. That means at the year end, accrued interest will be there. Because year end, it may not be zero, no. Some debentures may be there, but definitely accrued interest will be there. But anyway, let me conclude for you, sir. Whenever you solve any debentures question, always write, keep in mind 4 things before you. If you just keep 4 things, you will never write wrong, sir. What is the first thing? Year ending, you please write down separately. Then, interest due dates, you please write down separately. Because based on these 2 only, we will decide whether accrued interest is there or not. Similarly, which year is it? Is it calendar year or accounting year? So that anyway you will write. Then another thing is, you could observe brokerage. Hello, what is that? Brokerage. What is the brokerage? So here when I say year ending, sir, it is along with the calendar year or financial year. So just to keep these 3 points in mind, definitely you will not commit mistake. Because there are some students who don't look at brokerage and write the entire answer, and suddenly at the end they see brokerage. So just write down brokerage at the beginning only, note down it, sir. Some students, they wrongly apply interest due dates. They take wrong interest due dates. Some students, they forget that it is calendar year and they go for financial year. All these are the mistakes which are regularly committed. But if you write these 4 aspects at the beginning of the question separately, at least in rough, you will never commit mistakes. Because when we know concept, we should never commit mistakes, sir. This is a question where we know concept. So ensure that you follow some basic aspects so that you will never commit any mistake. Shall we proceed? Okay. So first transaction is completed. Let me proceed to next one, sir. On August 1st, 2018, company again purchased 2,500 debentures of 102.5 on come interest. I think exactly same transaction. So we will record in the same way. 2 bank interest we will record. Cost also we will record. So next, I am proceeding, sir. On 1st October, company sold 2000 debentures at the rate of 103 each. Sir, is it cum interest or ex interest? I think printing mistake, right? Not given in the question. First of all, interest only not there. Whether cum interest or ex interest, interest receipt and payment is common, I have said you. Now understand, what is the last interest due date? 30th September. On which date you are selling debentures? How could you collect interest, sir? Yesterday only you have received interest. Today when you are selling debentures, buyer, you please pay me interest. How it is possible? So thereby, sometimes question will confuse you, sir. You will think where is cum interest or ex interest. But please understand, yesterday only you have received the interest. Okay, right? So sale value is there, sir, 2000 into 103. So you will record 2000 into 103, 2,06,000. You have to compare with the cost. How many debentures you are selling? 2000. So this will be the cost for 7,50,000. Of course, 7,500. You have to find for 2,500. You will find the cost, sir. Cost of acquisition. So 2,03,000. You could observe here. The two costs will divide by 7,500. Will multiply with 2 lakhs because we are selling 2000 debentures. So we'll get the cost. The difference is profit. How much, sir? 2,167. So that we will write in our P&L because it is profit. I will write to P&L 2,167. Sir, interest receipt and payment is common. Don't forget to write that. I am not explaining that, though it is there. Interest receipt. Look at the interest due date and please record it. Okay, right. Next, let me move to the very good point which is committed as mistake usually. On 31st December 2018, company received how many shares, sir? 10,000 equity shares of 10 each in conversion of 20% of its holding. Hello? 10,000 equity shares of 10 each in conversion of what, sir? 20% of its holdings. Let me tell you one thing. So 20% of its holding means today how many debentures are there with us? 5,000 plus 2,500 minus 2,000. So that means 5,500. Out of 5,500, 20% conversion is happening. That means how many debentures? 1,100 debentures. We already know the cost for 7,500. Out of this 7,500 only this 1,100 is also there. Out of that 7,500 only this 1,100 is there. So simply once again these two divided by 7,500 into 1,100. Or else what you can do, reduce this 2,06,000 minus 2,167. In other words, you are having the cost of those 2,000 debentures, 2,03,833. That is the cost for 2,000 from the existing two values. If you reduce this cost, you will get the cost for 5,500 debentures. In that case, divided by 5,500 into 1,100. But it is not required, sir. Make it simple for you. So total, this is the cost for 7,500. Now you are having the cost for, you require the cost for 1,100. So divide by 7,500 into 1,100. The cost will be how much, sir? 1,12,108. How much, sir? 1,12,108. Now how much equity shares you are receiving, sir? 10,000 shares of 10 each. Now tell me profit or loss. Now tell me profit or loss. Usually what you say, sir, that is 1,12,108. We are receiving 1 lakh. So by P&L 12,108. Out of 100 students, 80 students used to write by P&L 12,108. But that is a blunder mistake on exchange barter. Who will have profit, sir? Nobody will have profit. So simply what we write, sir? In investment account, we will write by, hello, what we are receiving? Equity shares. So we will write by equity shares because entry is equity shares to debentures. We are receiving equity, we are giving debentures. Equity shares accounted are to debentures. So we will debit equity shares. Here we should write nominal value of the debentures only because to the extent debentures nominal value should be cancelled. Hello, to the extent debentures nominal value should be cancelled. Hence for 1,100, what is the nominal value? 1,10,000. So that we have to credit it. And what is the amount we write here? Cost only. Because now itself I have said no profit or loss. Entry will be written for what value, sir? Debentures accounted are 2 equity shares. Same amount, sir. 1,12,108. No profit or loss. previously what you used to write? You used to write 2 equity shares 1 lakh and maybe difference to the end. Sorry, reverse sir, reverse. Equity shares you are receiving. Equity shares to debentures. How much sir? 1,12,108. So this is the point. So in our solution, we'll write by equity shares 1,12,108. For this 1,100 debentures, you have to settle the interest also immediately, sir. How many months completed? Please observe. What is the last interest due date? What is the last interest due date? 30th September. Sorry, what is the date of conversion? 31st December. Okay, so 30th September is the last interest due date. So how many months are there? 3 months. For these 3 months, we should receive interest. So thereby 1,10,000 into 13.5% into 3 by 12. So that should be the interest. On that day only, we will show it as received by bank 3,730. Is that clear, everybody, sir? In that way, we will record. Now, once these transactions are completed, rest is only closing, sir. They have given market value. Hello, what is that? Market value. So, how many debentures are existing? 4,400. 4,400 into the market value they have given 106. We'll get the market value. If we find the balancing figure, usually what you get is cost, sir. What you get is cost. Now, cost you will compare with market value and you have to value at whichever is lower, because all the investments given in the question are current or long term. Long term means one sale also should not happen. Hello, because what is long term investment, sir? What is long term investment, sir? Which are not current investments. So current investments means which are purchased with an intention to hold for not more than 1 year and are readily realizable. Because you are selling within 1 year, so definitely these are current investments. Is that clear, sir? And any examination, take it as granted, never they will give long-term investments as a question, sir. Why, sir? If long-term investment is there, they should give you opening balance purchase, that's all, no more question. Hello? They will not be sale, no. So they cannot give such a simple question. So usually they give only current, default you can assume as current investments. Sir, with this we are closing debentures. Here one more point, in the same question they may ask you to prepare equity shares account also, sir. Very simple. In debentures account what you have written? Buy equity shares. In equity shares you will write 2 equity shares, 2 debentures. So then at the year end they have given one value 9 rupees. How many equity shares? 10,000. Cost for you is 1,12,000. Market value is 9 rupee. So thereby 10,000 into 9, closing balance should be 90, because whichever is lower. So the difference should be transferred to P and. In that way, you have to prepare equity shares account. Sir, have you all understood, sir? This is with respect to debentures. Take it as granted, sir. Now, if you are able to solve CRD 6, CRD 5, even more simple. A Lilliput question before CRD 6. Because similar concepts only will be there, sir, without conversion. Maybe with brokerage. Here brokerage will be there. In the question I have taken, brokerage is not there. But if you just know that computation, I can say, sir, whatever chart I have given covers all the points with respect to debentures. Shall I proceed? Now, equity shares. Let me take one chart for equity shares also, sir. Here also I have covered everything, sir. Just let me start. Now, all the students who are listening from YouTube, hope you are also understanding. Let us touch them also. Okay. Because they are also concentrating. Okay. Now, any doubts you can ask? Okay, right. Let me continue then. So shares, everybody please look carefully. With respect to shares, what are the transactions possible? What transactions are possible, sir? Either you will purchase, or you will sell, or you might receive bonus, or you might receive rights, or you might receive dividend. Anything else? Don't tell me opening or closing. Hello. That will anyway be recorded, sir. That is not a transaction. So transactions are either purchase or sale or bonus shares or right shares or dividend. So let us discuss all these things. Sir, once we know purchase and sale for debentures, now I am using the word repeatedly, but I can say really it's Lilliput only. Because their interest due dates will be there. You have to be careful. Cum interest, ex interest. So that concept will be there. Here, interest is an obligation, sir. Dividend is obligation, huh? No. So you will not be having cum dividend and ex dividend. So generally, so as a result, questions becomes very, very simple. Now, purchase, how do you record? Very simple. Number of shares into share price, add brokerage, over. Sale, how do you record? Number of shares into share price less brokerage, because you want only net sale value. Once again, same treatment, sir. Compare with the cost. Cost is computed based on usually weighted average. So in that basis, you find the difference and transfer to profit or loss. Clear? And now comes the important aspects. One is bonus share. How do you record bonus shares? For bonus shares, any entry? You are receiving bonus shares. Sir, our golden principles, if we receive anything, we have to debit it. So thereby debit bonus shares, then what you will credit? If you debit bonus shares, what you will credit? You cannot credit anything. Even if you want to credit something, let us say bonus shares to something account, at what value you will write, sir? What value? Are you giving anything? No, it becomes 0. So thereby usually entry is nothing. No entry you will record. But because number of shares are increasing and our total number of shares should increase, what we will do? Just in number of shares column, we record the bonus shares received. That's all. Is that clear, sir? I don't think big discussion is required. Simple only. Next, rights shares. Sir, please understand, actually we learn about rights, not rights shares. Hello, what is that? We talk about rights, not right shares. Sir, both are different, rights and right shares. Rights and right share different, Tell me, both are different or same? Sir, when you are an existing shareholder, every company gives a right to you to subscribe certain number of shares at a concessional price. This is a right. If you exercise that right, what you get is right share. So please understand, every company gives a right to subscribe certain number of shares at a concessional price. That is a right given to you. If you exercise that right, what you get is right shares. So now let me write down. Rights we can divide into two types, rights exercised and rights sold. Sir, whenever rights were there, either you can exercise it or you can sell it. So if you sell, what treatment will happen? Tell me, for getting this right, have you paid anything to the company? For just being the existing shareholder only, you have received that right. You have not paid anything for that. So usually, entire sale value on rights to be credited to P&L. It's an income because cost of right is 0. Hello. What is that? Cost of right is 0. Sometimes, rarely, in the question, they may clearly mention shares are purchased on cum right basis. What is that? Shares are purchased on cum right base. That means for right also you have paid something. If you have paid something for right, then from sale value you have to reduce that cost. Difference only has to be transferred to P&L. Usually they don't say that, sir. In such a case, right for you is 0. Cost of right for you is 0. Then entire sale value is income. So you will transfer to P&L. Sir, is that clear, sir? So thereby entire sale value has to be transferred to P&L. But because I'm talking about that cum right basis, let me clear you one point, sir. Usually there is a principle that if you have purchased shares on cum right basis and later on, immediately after the exercise of right, there is a decline in the share value, then that difference will be transferred to P&L. Like that, one miscellaneous point will be there, sir. Rarely tested in the exam, but there is one comprehensive question like that where you get shares are given on cum right basis. Let me tell you one thing. Just if the shares are given on cum right basis, you cannot do like that, sir. They should also clearly prove that immediately after exercise market price have reduced. In the question given in ICAI material, they will not talk anything about the market price immediately after exercise. As a result, you will not give that effect. You will account in the normal way. But if you assume that, take an assumption that, no, sir, market value after exercise also has reduced, then you can transfer it to P&L. Maybe you will have one comprehensive question, sir. I'll just show you this. I think the last question, This question only. Yes, here you will be having. They will be giving on come right basis, but nothing you will be doing extra in this question. The same answer will be there, what you have done in the other questions. Reason is, you don't have any information with respect to reduction in market price immediately after the exercise, because they will give rights were exercised on 25th August. What is the market price after that? Do anybody know? Have they given? They have given once again on 112 or some. Nobody knows the market price. Hence, we cannot apply that point, sir. Usually, please remember this way only. Entire amount from sale of rights to be credited to P&L. It's a income. Rarely, if it is come right and that too reduction is there immediately after exercise, then only it has to be transferred. Then only the difference only has to be transferred to P&L. Otherwise, entire amount has to be transferred to P&L. In such a case, it should be adjusted against cost, sir, if all the two conditions are satisfied. But anyway, leave it, sir. It's a miscellaneous point, because if anybody see comprehensive question, you may get that doubt. That is why I am clearing it. Reason for we not considering is market price related information will not be given in the question. Only when we know that point, we can answer. But leave it, sir. Not at all required for examination. Rarely they will test it. Leave it. Now, let me proceed, sir. So we are talking with respect to shares. Now, entire proceeds from sale of rights will be credited to what, sir? P&L. Entries will be bank to sale of rights to P&L. That means in investment account, will we write anything for sale of rights? In investment account, will we write anything for sale of rights? No. Simply the entries will be bank to sale of rights to P&L. Is that clear, everybody? Okay, right. Now, what about the rights exercised, sir? Suppose you have exercised some rights. Now, what about that? What you are telling? You are exercising, right? Exercising means what, sir? Simply you will write in the agreement, I am exercising. No, you have to pay some amount. So, whatever you pay is nothing but the concessional price you are paying. Entry will be common. Investment account at R2 bank. You are getting some shares, but paying at a concessional price. Simply the entry will be investment account at R2 bank. That's all, over. Sir, if rights is exercised, you will get rights shares. For that, what is the cost? Investment account at R2 bank. If rights are sold, simply you will write bank to sale of rights to P&L as a working note, not in the investment account, because nothing should be written in investment account. Simply we will write as a note that entire sale proceeds from rights to be transferred to P&L. Sir, clear? Let me move to the last one, dividend. Hello, what is that? The most important one, sir. Everybody, what is that, sir? Dividend. Dividend can be divided into two types. What are the two types? One is pre-acquisition. The other one is, so what is pre-acquisition and what is post-acquisition? Generally, you might heard like this, sir. You might have heard like this. Sir, earned and accrued in the pre-acquisition, but received in the post is called pre-acquisition dividend. Earned, received, accrued, everything in the post-acquisition is what, sir? Post-acquisition dividend. In other words, sir, you have invested, after that you have earned, then only you have received. Everything is post, that is post-acquisition. Sir, earning is before acquisition, sir, but receipt is after acquisition. Have you really earned it? No. So that's not your income, sir. So that's why that's a pre-acquisition. Usually seller might have collected for money from you for that. Now you will recover that. So thereby it's not an income for you. It's a recovery of cost. So entry for pre-acquisition dividend will be bank account at R2 investment, because it's a recovery of cost. Entry for post-acquisition dividend will be simply the normal entry for dividend, bank to dividend, dividend to P&L. Discussion clear? Pre-acquisition dividend means bank to investment, post-acquisition means bank to dividend, dividend to P&L. When it was earned, when it was received. That is what important, sir. Earned and received after acquisition means post. Earned before but received after means pre. Because it's not a real income for you. After you invest, if you earn, that is real income. Have you understood? Though this information is known, many students commit mistake only with respect to dividend. I am telling you, sir, in shares, is there any possibility of committing mistakes? Two mistakes are possible. One, ignoring the brokerage. Hello, what is that? Few times you will not consider that brokerage. That is one area of mistake possible. Another area is usually dividend. With respect to that pre-acquisition, you will confuse what is pre, what is post. You will write in P&L dividend somewhere in different columns. You will confuse like anything. So just that clarity only now I am going to give you, sir, by taking a note. Just remember this table, sir. With this, any question dividend you can crack like anything, sir. Whatever the question may be, you will be easily able to write. What is that? Let me show you. Sir, dividends are two types. I am giving another classification. Dividends are two types. One is final dividend, the other one is interim dividend. What is final dividend, sir? Once the books of accounts are finalized, board of directors will see how much profits are there. Now they will look after the obligations and they will propose the dividend. Later on, the same dividend will be approved and accepted by the shareholders, which we call as declaration. Which we call as what? Declaration. In other words, because the dividend is paid after finalization, this is called final dividend. Now interim dividend means, suppose suddenly in any year you have got huge profits. Suppose you have got a big export order. Suddenly 100 crores export order is received. Now you feel very happy. Bumper profits are there. Now you want to communicate everybody in the market that we are performing very well. Come and invest in our company. Like that you want to communicate. How do you communicate everybody in the market, sir? The best way to communicate to the market is interim dividend, because generally you expect dividend once the year is completed, maybe at the AGM. Suddenly if you receive any huge amount, you feel very happy. You cannot show with yourself. You will just start telling everybody, suddenly received huge amount, I am very happy. Now that dividend is usually interim, sir, because dividend declared between two AGMs is called as interim dividend. Now what I want to say is, final dividend for any year will be declared and paid in the next year. Something I have said. What I have said? Final dividend for any year will be declared and paid in the next year. Whereas interim dividend for any year, declared and paid in the same year. Because we want to declare in now only, sir. If we declare in next year, what we will communicate to the shareholders? Next year come and invest. Hello. We want them to invest now itself. So immediately we will give a dividend without waiting for any AGM. Sir, clear a final and interim? Now. Look here carefully. Sir, usually you may have these types of shares in the question. Either you may be having some opening balance of shares, or you may be having some shares purchased during the year, or you may be having some bonus, or you may be having some rights. Now let us see, if final dividend is given, which shares are eligible, which are not eligible. If interim dividend is given, which shares are eligible, which are not eligible. Sir, if final dividend is given, bonus and rights eligible. Because dividend is given during the year. If dividend is given during the year, this dividend is related to which year? Last year. Because I am telling final dividend. Dividend for the last year only will get declared and paid in the current year. So in the current year, if dividend is paid, this is relating to the last year. Bonus shares and rights shares created during the current year. If they are created in current year, how you can pay last year dividend? So they are not eligible. Whereas if you have purchased any shares during this year, they are eligible or not eligible? Eligible or not eligible? Eligible. Why? I have given tick mark. Hello. Sir, why it is eligible, sir? Now we have purchased during this year. No, I am paying last year dividend. Why it is eligible? Please understand, you have purchased shares in this year. From whom you have purchased? Company. From secondary market only. That means though you may not have it, somebody is having it in the last year. It is enough that shares is there in the last year. That shares need not be with you. If shares are existing in the last year, it is sufficient. That need not be with you. So thereby, if you have purchased shares during the year, definitely these shares might be there in the last year also. So these shares also eligible. Opening balance will anyway be eligible. Sir, clear? So out of these four types, these two only eligible. Now there comes a question, what is pre-acquisition dividend and what is post? Now I can say, sir, opening balance means these shares are existing previously, from previous period only. Now please understand, if it is existing from previous period, hello. If it is existing from previous period, that means after investing only you are earning, and receipt is also after investment, which makes it which type of dividend? Post-acquisition dividend. Because these shares are there prior only. After your investment only, last year dividend is earned, and after your investment only, receipt is also there, which makes it a post acquisition, that is a real income for you, to be transferred to P&L. That means if we maintain a dividend column, we'll write by bank in the dividend column. Suppose if it is shares purchased during this year, now dividend is related to which year? Last year. Have you held in the last year? No. Have you earned it in the last year? No. Earned in the last year but received after acquisition. Earned before acquisition, received after. So it is which dividend? Pre. So this has to be transferred to investment account. That means in by bank we'll write in the amount column. By bank we'll write in the amount column. Have you understood, sir? Now, if we come to interim dividend, that is for the dividend during this year. For this year only we are paying the dividend. All are eligible because bonus and rights created during current year, and we are talking about the dividend of current year. All shares will be eligible, and I can say because dividend is for current year, we assume that if after investment only these profits are earned. As a result, entire dividend will be post. Sir, is that clear? This is conceptual discussion, sir. In examination, always you cannot remember all these things. I'll just tell you one simple way of answering. Only for shares purchased during the year. Hello, something I have said. What I have said? Only for shares purchased during the year, pre-acquisition dividend will be there. For all other things, you will have only post. For shares purchased during the year, and that too if it is final dividend, pre-acquisition will be there. For all other shares, what will be there, sir? Post-acquisition dividend. Hope you have understood. Now, let me show a question, sir. You will have full clarity. Sundar question, let us proceed. Hello, company name is Sundar. Hello, let us move to the question, sir. Question number 8, repeatedly asked, sir. Similar model. I don't say same question. Similar model, repeatedly asked in the examination. So, have you all understood till now? I know I cannot discuss comprehensively, but this is a revision class. But I am covering almost all the aspects to the extent required. Okay, right. Let me deal with this question, sir. Once again, solutions also, our friend. Okay. Now, let me start. On 1st April 2011, Sundar had 25,000 equity shares of X Limited at a book value of 15 per share. No big discussion, sir. Straight away, 25,000 into 15, 3,75,000 over. Next, on 20th June, he purchased another 5,000 shares of the company at rupees 16 per share. Debentures means we have to fill cum interest, ex interest. No big discussion. 5,000 into 16, 80,000 over. 2 bank, 5,000 and 80,000. Next, what was happened, sir? The directors of X Limited announced a bonus and rights. No dividend was payable on these issues. Okay, they might be declaring some final dividend. Anyway, final dividend, those two are not eligible. They are only telling in the question. Now, bonus basis. What is the bonus basis? 1:6. Till now, how many shares are there? 25 and 5, 30,000. What is the ratio? 1:6. How many bonus shares you will receive? 5,000. Simply you will record in the number of shares column 5,000. Nothing in the amount column. Sir, clear? Next, rights basis. 3:7. That means you will receive this many rights, sir. You will not receive right shares. You will receive rights. Later on, you will exercise or not is secondary. So, total how many shares are there? 25. 5. Already bonus also completed. So, 35. Till now, how many? 35. What is the ratio? 3:7. 35,000 into 3/7. 15,000. How many? 15,000 is the rights you receive. In that, shareholders can transfer their rights in full or part. Accordingly, Sundar sold 1/3 of his entitlement. Sold 1/3, that means exercised 2/3. So that means out of 15,000, 10,000 rights will be exercised. 5,000 rights will be sold. Sale value of right is 2 per share. So thereby 5,000 into 2, 10,000 has to be transferred to P&L. That will not be recorded anywhere in the investment account. We'll simply write in notes. Now relating to 10,000 shares, we are going to exercise. What is the exercise price? 15. So thereby 2 bank 10,000, 10,000 into 15, 1,50,000. Simple way of recording. Next, dividends for the year ended 31st March 21 at the rate of 20% were declared by X Limited and received by Sundar on 31st October 2021. Now tell me one thing. This is dividend related to which year, sir? Current year or last year? You could observe current year is 1/4/21. This is last year 31st March 21. That means which dividend? Final dividend or interim dividend? Final dividend. So tell me, out of these four, 25, 5, 5,000, 10,000, which shares are eligible? Opening and shares purchased during the year. These two are not eligible. So out of these two, what is pre and what is post? We did not look more. Now 5,000 will be the pre, 25,000 will be the post. I have already said you, only for shares purchased during the year, you will be having pre, for others you will be having post. But logically also I have explained, sir. First logic, then only memory tip. Okay, right. Now, what is the dividend, sir? 20%. Face value is 10. That means dividend per share 2 rupees. So thereby, for this 25,000, what dividend we receive is post. So 25,000 into 2, 50,000 in which column? Dividend column. For this 5,000 shares, it is pre. So 5,000 into 2, how much? 10,000. Bank account at R2, investment account. So thereby, we will write in amount. That's all over. Sir, have you understood? Many students confuse a lot with respect to this 50 and 10. Many different questions, different mistakes. But just remember this chart. It will be so simple, sir. Only for one point, you will credit to amount column. In all other places, you will credit to dividend column. What is that one place? Shares purchased during the year. In all other places, simply transfer to dividend column. You need not think big, sir. For examination, remembering is simple. Understanding logic only takes some time. Okay, right. Anyway, completed. Next. On 15th November, Sundar sold 25,000 equity shares at a premium of 5. So 25,000 into 5, sorry, premium of 5, sir. That means 15. 25,000 into 15, 3,75,000. We'll compare with the cost. Now please remember, what is the cost for you for this 25,000? These two minus this 10,000. Don't forget to reduce this 10,000. This is one of the biggest mistake committed, sir. Out of 100, 30 people may commit mistake in writing 50,000 and 10,000. 90 students will commit mistake in reducing this 10,000 while they compute the cost. While they compute the cost of this 25,000, they'll add these two, but they forget to reduce 10,000 because you are reducing the investment value, no? So cost has to be reduced. Let me show you the cost, sir. So cost of those shares, okay. So cost of those shares, how many shares you are selling? 25,000. The cost of their shares will be 3,75,000 plus 80. Sorry, that 1,50,000 also right shares only, no? So that also to be considered. So this one also, but what I say is that 10,000 has to be reduced. So these three together minus that 10,000 divided by number of shares 45,000, because what is left is 45 into 25 will give you the cost. Compare with the sale value, you will get the profit or loss. In that way, you will write by P&L. If there is loss, by P&L. Profit means to P&L. Profit is that to P&L. Closing balance, how many shares are there? 20,000. Now, cost we can already find, sir, just in this way. You have found for 25,000, now find for 20,000. Cost you can find, then compare with the market value, which they have given in the question. Have they given any market value? Nothing. So if not given, directly you will write at that value only, sir. Cost only will be written. In that way you will close, sir. Sometimes they may ask you to prepare P&L extract. What is that? Simply whatever items you have received till now, which you transfer to P&L has to be recorded. Tell me, opening balance, anything related to P&L? No. Purchase during the year, anything related to P&L? No. Bonus, anything linked to P&L? No. Rights, anything linked to P&L? Yes. Sale of rights, 10,000. Bank account at R2, sale of rights in P&L, sale of rights to P&L. So in P&L we'll write by sale of rights. Then similarly, dividend, anything related to P&L? Yes. Pre-acquisition to investment, post-acquisition to P&L. Of course, we'll write in dividend column also that we transfer it to P&L. By dividend 50. Once again, in the last scenario at the time of sale, we have got some profit. That also will transfer to P&L by profit on sale of shares. That's all over, sir. Sir, have you all understood? Once again, I guarantee one thing. I am teaching you only 2 problems, but I am covering conceptually almost all the points, sir. When you solve the questions, you will get it. So these points are only there. So with this, we are closing investment accounts also. Let me move to the third topic, insurance claims, because these three together are given as a set in the exam, sir. From these three only 2 questions are usually asked for 20. Sometimes if you are lucky, another question also will be asked in another set, 30 marks. There is an exam, one last exam or before exam, where they have asked question from all the 3 chapters, then you are so lucky. Minimum 20 marks pakka. If you write this chapter well, sir, 20 into, generally if you write any question well in practical subject, 80% pakka, sir. So that means 16 marks here itself you will get. Almost some 40% of your or 50% of your pass marks. 40% of your pass marks you are getting just from these 3 chapters. Are you getting the point? Anyway, some Lilliput chapters are there for you, which will help you in getting good marks. Profit or loss, pre and post incorporation, bonus and rights shares, redemption of preference shares, redemption of debentures. Remember one thing, for ICAI, everybody is equal, sir. All are equal before ICAI. All chapters are equal. Every chapter question will be given. As a result, you can score something from those chapters also. Why you are talking about those 4 chapters? Maybe those chapters are very simple. Today we'll place it at the end. We may not be discussing it. Just to bring into that, I'm just telling. Profit or loss, preference shares, bonus and rights, redemption of debentures. We'll look after the other topics, then we'll go. Previously, it used to be difficult, sir, redemption of debentures. Now, because of the amendments, chapter is simple. Only the DRR 10% for unlisted, for listed company 0. Small aspects only. Anyway, based on the time, if possible, we'll discuss redemption of debentures also. Otherwise, no. But those 3 definitely will not be discussed. Profit or loss, bonus and rights, redemption of preference shares. Simple chapters. Okay, right. Now, without any wastage of time, let us proceed to insurance claims. Shall we proceed, sir? Online students, any doubts you can express with respect to the discussion done. Sir, in accounts you may have many doubts, but I cannot clear everything. With the discussion done only I am asking. Okay. Okay, right. So, let me proceed, sir, to the insurance claims. In insurance claims, mainly 2 concepts are there. What are the 2 concepts? One is, I think by this time you may become experts in these 2 concepts. One is loss of stock. The other one is loss of profit. Whenever we hear loss of stock, we feel very, very happy. Whenever we feel loss of profit, actually expression changes. So don't worry. And now first let us complete loss of stock before the break. I think we are having till 10:30. Now after the break, fresh we'll go with loss of profit. But I can tell you, loss of profit is simple only, sir. But logically you have to remember. Just like this pre-acquisition and post-acquisition. Some clarity, logics are required. That we will discuss. First, let me complete this loss of stock. Shall we start, sir? Okay, right. Loss of stock. Actually, for computation of claim, basically some format will be there, sir. Whether it is loss of stock or loss of profit. In loss of stock, what I can say is, first tell me what is the loss to me. Sir, fire occurred. It has destroyed. Whenever fire occurred, what will happen, sir? It will start destroying building, everything. Hello, it will destroy building, it will destroy your profits, it will destroy stock, everything. Examination, they may not give everything, sir, but at least they will destroy in real world, no? So, for examination, they may give separately, only stock destroyed or only profits gone. Like that will not happen in real world, sir. Okay, right, anyway. Now, let us see loss of stock, sir. Now, how do you determine this much stock is lost to you? How can you say this much is the loss to me? Based on the value of stock on that day. Hello, what is that? Based on the value of stock on that day. How do you compute it? That is what computation of value of stock as on the date of fire. Hello, what is that? Value of stock as on the date of fire. On the date of fire, whatever stock is there, that is generally lost. Now, fire occurred. On that day, 1 lakh stock is there. 1 lakh should destroy, or otherwise you will throw it in fire. No. So, you try to save something, no? Hello, which is called salvaged stock. Now, you will try to save it from fire. If it is saved from fire, insurance company will save you. No. If you save it, insurance company will not save. Hello, are you getting the point? So, to that extent, reduction is required for salvaged stock. Sir, are you getting the point? Okay, one more extra thing. This is actually the actual loss suffered, sir. What is that? One is value of stock as on the date of fire. For that you please adjust salvaged stock. You will get the actual loss suffered. Sir, do you think insurance company will give you for actual loss suffered? Full value? No. Sometimes, please observe carefully. Let us say 1 lakh stock is there. How much, sir? Now, usually, whenever fire occurs, though 1 lakh stock is there, you will be able to save 30,000 at least. 70,000 only may be lost in fire. Now, what you will do? Why to take unnecessarily for 1 lakh? Let me take only for 70. You will start applying your talents. Hello? Stock is usually 1 lakh, sir. But what you feel? Fire occurs means immediately everything will not be destroyed. I will be there. I will save at least 30%. So let me take insurance only for 70,000. Like that you may play some jadoo things. Hello? Jadoo activities you will do. Then, or if every company thinks in this jadoo manner only, then insurance companies will lose. Hello, are you getting the point? Then they have started behaving in a jadoo manner. What is that, sir? Suppose the loss is 70,000. Now what they say is, if estimated stock on the date of fire is 1 lakh and you have taken only for 70,000, you are cheating me. You are not taking for full value insurance. Then I will also not give you full loss. In other words, you are taking 70,000 for 1 lakh, then I will also give you 70% of 70,000. I'll give you only 49,000 as the claim, which we call as average clause. Which we call as what, sir? Average clause. So this is the format, sir, usually. So what is the format, sir? 3 steps I can say for computing the value of stock as on the date, for computing the claim amount. First step, computation of value of stock as on the date of fire. For this, we usually prepare memorandum trading account. Hello, what is that? Memorandum trading account. Because general trading means we will find GP as a balancing figure. In memorandum trading, we will find everything except closing stock, and closing stock will be obtained as a balancing figure. Now, second step is computation of loss suffered. What is this loss suffered? Now, value of stock less salvaged stock. Sir, generally, sometimes you may incur some extra expenses to save the stock from fire, which we call as firefighting expense. You are fighting with the fire to save your stock. So that's why it is called firefighting expenses. So because you are incurring some expenses to save the stock, if you save the stock, who will be benefited? Insurance company will be benefited, because anyway you will be get reimbursed. Who will get benefited? Insurance company. For that reason, now you cannot sit idle. What you will feel? Anyway, insurance company will give, okay, you destroy in fire. Like that, will we ask the stock to be kept in fire, sir? No. What we do usually, we'll save, sir. We'll not wait for let the fire consume it. We'll consume from the insurance company. Don't think like that. First, we'll try to save. If you save because insurance company is getting benefited, that amount also will be considered as a loss you have faced. So thereby, that amount also will be usually added, sir. If there is any firefighting expenses, that also is considered as the part of the claim. Is that clear, sir? Once we compute loss suffered like this, we will apply the average clause. What is that average clause? Loss suffered into what should be the policy value. What is the policy value? We will write divided by value of stock as on the date of fire, because we feel this is the insurable amount. Hello, we feel this is the insurable amount. So this is the format, sir. Loss suffered into policy amount divided by loss of stock as on the date of fire. 3-step format, sir, for loss of stock. First one, finding the value of stock as on the date of fire. From that, you reduce the stock which you have saved. Now, add firefighting expenses. So that is what loss suffered. Then you will not give full loss suffered also. Insurance company usually apply average policy. If you cheat them, they will also cheat you. If you take policy only proportionately, they will also give you loss proportionately, which is the average clause. So discussion clear? Let us solve one problem on loss of stock, which covers a good point. Nothing but there will be some damaged stock where you might have get some value written off in the last year. I'll show you that question, sir. Higher purchase, insurance claims. So we are dealing with, I think it's CRD 2, sir. So we'll have these concepts. Just wait. Let me open the solutions also. Once again, same, sir. I will not do calculations. I will simply show the solutions. It is 15 and 16. Okay. Right. Are you all ready, sir? Investment accounts over. Right. Insurance claims. Let me read the question for you, sir. We'll apply the points one by one. I think still 8 minutes are there. We can complete it comfortably. Right. Let me read it, sir. A fire occurred in the premises of Messrs. B and Co. on 30th September. So that means you will prepare memorandum trading account till 30th September 2019. The firm had taken an insurance policy for 1,20,000, which was subjected to average class. That means don't forget average class, because sometimes you may forget. They are cautioning at the beginning only. Don't forget me. Okay. Following particulars were ascertained from the available records for the period 1st April 2018 to 30th September 2019. They are giving information relating to the last year and also current year from the beginning till the date of fire, because this is not for 1 year, sir. 1st April 2018 to 31st March 2019 means 1 year. After that also they are giving. So it is information relating to last year plus current year. Now why do you require information of last year, sir? Sir, tell me one thing. In memorandum trading account, what you write? 2 opening stock, you can get it. 2 purchases, you can write it. Buy sales, you will write it. Buy closing stock, you have to find it. 2 GP, you have to apply on sales. What GP percentage? Usually we assume that GP percentage is same from the last year. That's why we require last year information to find the GP percentage. Once we know it, we apply on the current year sales to find the GP of the current year. Then we find closing stock as a balancing figure. So GP is required for that. This last year data is required for that purpose. In some question, they will not give last year data and straight away they give GP percentage, sir. In such case, not required. Now anyway, let me read, sir. Stock at cost on 1/4/18, 2,11,000. Stock at cost on 31st March 2019, 2,52,000. Sir, let me talk about this 2,52,000, sir. And in 2,52,000, something has happened, sir. First, let me deal with this para, sir, because once we discuss this, rest of the question is simple, sir. Let me discuss this point. While valuing the stock at 31st March 2019, that means 2,52,000. When I am valuing 2,52,000, what happened, sir? Please observe. 8,000 were written off in respect of a slow moving item, cost of which was 12,000. That means how much was included in 2,52,000? In the 2,52,000, it was already valued, sir. While valuing, you have done like this. 8,000 were written off, the cost of which was 12,000. That means still how much cost was there in the closing value? 4,000. Out of 12,000, if 8,000 was written off, how much will be there, sir? All mathematicians, 12,000 minus 8,000, 4,000 will be left. Am I right or not? That means in that 2,52,000, 4,000 is there. Okay. A portion of these goods were sold at a loss of 4,000 on the original cost of 9. The original cost is 12,000. 9,000 worth items they are selling at a loss of 4,000. The remaining stock is estimated to be worth the original cost. Sir, what we are going to do is, first let us have treatment for these abnormal items separately. This is called as abnormal item. Why, sir? Usually we sell it at normal price. Here we are not selling at normal price. We are selling at abnormal price. That's why we call it as abnormal items. Let us deal with this separately. Then confusion will not be there, sir. If we deal with both of them simultaneously, always confusion only will happen, sir. What I want to do is, first let me segregate. I don't want to talk about this 2,52,000 combinedly. Let me segregate into what, sir? Normal and abnormal. In 2,52,000, how much value is there relating to abnormal? 4,000. Now itself I have said. Remove that 4,000. So that means normal items will be 2,48,000. Accepted? Normal items will be 2,48,000. Abnormal items will be 4,000. Out of 2,52,000, abnormal will be 4,000. Normal is 2,48,000. But why you are writing 12,000, sir? Let me tell you one thing. Sir, if I am preparing a trading account, you can question me Why you have written 2,48,000 and 12,000, total 2,60,000? I am not preparing trading account, I am preparing memorandum trading. First of all, any memorandum account is a dummy account. Sir, memorandum is not a real account. Memorandum is a dummy account created for a specific purpose. Here, what is the purpose? To find the value of stock as on the date of fire. So you cannot question me what I am writing. My purpose is to be solved. Sir, tell me one thing. In memorandum trading account, you are writing 2 purchases. You are writing memorandum trading account. Will you stop recording regular trading account? Suppose if you record 2 times, you are cancelling purchase. Please understand, this all information we write here is a dummy. In dummy, don't ask me what is genuine, what is not correct. So we will write in such a way which is favorable. So to ensure that I have a proper understanding for both of those items separately, I have written clearly 2,48,000 is related to normal. Out of the balance, how much is the original cost? 12,000. I am writing original cost 12,000. I have sold out of this 12,000, original cost worth 9,000. How much, sir? Original cost worth 9,000. Sale value is 5,000. Loss is 4,000. Balance original cost 3,000. What they have said ultimately, closing stock, the remainder of that abnormal items should be valued at original cost. So ultimately, what should be the closing value? 3,000. That is only there. Am I right or not? Are we finding any big profit or loss through this big statement? No. So thereby don't question that, sir. We are doing it for our convenience. It is not a real trading where you can question why they have written 12,000. They should write only 4,000. Then only opening will tally 2,52,000. This is not a real account, sir. We are writing for our convenience to find the real profit or loss and the normal closing stock. This is what we require, sir. Now, in normal items, what is the closing stock? We don't have any big problem with respect to abnormal. Sir, discussion clear? Abnormal items clear? First we write at full value, then we write items sold, then we'll get the closing items. This is to be valued at the original cost. Once we have this clarity, we can quickly complete the balance few. I'll just take 4 more minutes, sir, and I will complete this now. First, purchases during the year, 6,55,000. So, of course, same question. Okay, right. So purchase this last year, sir, sorry, 18-19, we require first memorandum trading account. That means after 1st April 2019. Here they have given that, sir. Purchases from 1st April 2019 to 30th September. How much, sir? 4,48,000. In that purchase of machinery was also there. Machinery should not be expensed. So from 4,48,000, we should reduce that 48,000. Sir, is that clear, everybody? 58,000. And not only that, they are giving some more information. Wages was given, we will write that, but that wages include something for installation of machinery. That wages we will write after reducing the machinery. So 85,000 minus 7,000, 78,000. Next, sales we will record as usual, sir, sales. Of course, when we are writing sales also be careful. This sales is total sales, sir, including abnormal items. Abnormal items were sold for already 5,000. Do you remember, sir? Sale value is 5,000 because sold at a loss of 4,000. So segregate that 6,02,000 also. In that 5,97,000 is normal. Abnormal is 5. Okay. Next, what is given, sir? Sale value of the goods drawn by partners. Nothing but it is like drawings, sir. Hello, it is like drawings. Drawings means what we should do? We will reduce from the purchases or we will show it on the credit side of the trading, but at what value? Cost value. But they have recorded at sale. First reduce the profit percentage. Now for that, first you require profit amount, sir. Only when you know GP percentage of the last year, you can find it, sir. Are you getting the point? For GP last year, they have already given opening stock of last year, purchase of last year, wages of last year, sales of last year, closing stock of last year. Of course, 2,52,000, but we will not write at 2,52,000 because we want normal GP, not abnormal GP. So what we will do, we'll add back the amount written off to make it normal value. Are you getting the point? 2,52,000 is after reducing 8,000. Now to get the normal GP, we have to add that item written off, so that only we'll get the normal sales done during the year. So thereby closing stock of last year will be 2 lakh 60. Then I'll get the normal GP. If I find as a percentage 20 percentage. Now from the sale value reduce that 20 percentage, you'll get the cost value that also to be reduced. So hope you have understood. Sir, is that clear? Last year GP we should take, but that should be normal, sir. Abnormal item should not be considered. When we can remove that effect, whatever we have reduced, if we add back, we can remove it. Okay, so that is the point, sir. Next, what is given in the question? Goods sent to consignee, cost of goods sent to consignee lying unsold with him. If it is there with consignee, we will record as, because it is not there in our godown, so it should not be shown as closing stock. We'll be showing separately by cost of goods with consignee at the cost value, by cost of goods sent to consignee. So hope it is clear. Next, free samples, just like drawings only, the treatment. So we'll reduce from the purchases. So that also we'll reduce, we'll get the proper purchases. These purchases only we will record here. As a result, I think we have got everything, sir. In this opening stock we got, purchase we got, wages we got, sales, goods sent to consignee. Now GP, we apply the 20% on this normal sale value, then we get the GP also. We'll find closing stock as a balancing figure. That's all, sir. So in this way we find value of stock. Now once we find value of stock, we'll reduce salvaged stock, we'll get loss of stock. Then that loss of stock we'll apply the average clause, because policy value is 1,20,000, whereas value of stock as on the rate of fire is 1,46,500. In that way we'll apply average clause and find the net claim to be made for loss of stock. Sir, have you all understood? Most of the points, important points are covered, sir. 1 or 2 points will be there relating to goods sold on approval, etc. There usually we show only cost value. If there is any, if goods are already sold, that means if approval is received, we will show in sales. If approval is not received, but still the goods are with them only, no. So that's why we will not show in closing stock. We will show separately by goods sold on approval at a cost. But already if sale is done at sale value. If it is there with the other person, but approval is not received, we will show it at cost. So that clarity if you have sufficient, sir. Remaining points are simple. So with that we are closing loss of stock. Immediately after the break, we will resume with loss of profit. As a result, we will complete insurance claims. Sir, discussion clear? Hope you are enjoying the session and getting some value addition. Okay, right. Thank you. Just relax, sir. Okay. Are you all ready, sir? Okay. After a chota break. Okay. Let us continue with loss of profit. Ensure that class is proper. Okay. Let me continue, sir. Sir, the only difficulty in loss of profit is you will be having multiple steps, and among multiple steps also consistency will not be there. Small adjustments will be there in different questions. But when you look in an overall way, format is same, sir. First, if you are clear with respect to format, then adjustments can be easily fitted into your mind. First, format should be clear, but many look it as number of steps. If you look as number of steps, always that will be difficult only, sir. But never we should learn in terms of number of steps. Let me show you how we have learnt loss of stock. I can compare exactly in the same way loss of profit also. In the same way I'll compute it. Just with a minute change in wordings. Similar will be there. Now how you are finding here loss suffered? Value of stock less salvaged stock add firefighting expense. I'm just writing, sir, whatever you are telling as loss suffered. In the case of loss of stock, I'm just writing. You are telling value of stock as on the date of fire. That is not the only loss. From that anyway you will reduce what, sir? Salvaged stock. You will add firefighting expenses, if any, because you are fighting with the fire to ensure that the loss reduction is there for the insurance company. So that is what firefighting expenses. Now this is what, sir, loss suffered for stock. Now let me tell you exactly in the same way I can tell you the loss in case of profit also. The same, sir. I'll write only 3 steps. Whatever 3 we have written there, the same 3 I will write here. What are the 3? Now what you are losing there, sir? Stock. What you are losing here, sir? Profit. Now tell me, which profit are you losing? Would you want to claim for the from the insurance company only the profit, net profit lost, or entire gross profit lost? Tell me, what you want to take insurance for? Is it for net profit or gross profit? Do you want to take for net profit or gross profit? Gross profit, sir. Because our entire operations will be affected. So we'll lose more. In other words, we will take insurance not only for all P&L. Sir, I'll tell you one thing. We want to take for GP. Hello, we want to take for GP. Now here it is NP, sir. We not only want to take for all the expenses here, we also want to take everything here also. Net profit plus these expenses gives you what, sir? GP. Am I right or not? Net profit plus these expenses give you GP. That means you are expecting to recover entire net profit plus these expenses also. All that you are losing, you are going to claim anyway. So this is what you want to claim, sir. Because of business, what might be lost is gross profit only usually. What is lost, sir? Gross profit. Now gross profit on what, sir? Now please understand, if fire has not occurred, let us assume usually your sales is 10 lakhs. Hello, what is that? 10 lakhs. When fire occurred, maybe you could not do your operations properly, godown might be damaged. Now full production level cannot be continued. You are previously what we have said, what is the number? 10 lakhs. Now let us assume the sales was only 2 lakhs. Why, sir? Machinery is damaged or some other building damaged. So we are unable to do production. So how much sales is lost? 8 lakhs. How much you have lost? How much sales is lost? 8 lakhs. How much you have lost? Don't tell me 8 lakhs because you are not losing entire sale value. You lose only profit on that sale because you are not incurring any expense. Please understand, what you are losing is gross profit on that sales. Are you getting the point, sir? Just like value of stock on the date of fire, I can say what you are losing actually here is GP on short sales. Accepted? Something I have said. What I have said? GP on short sales. Actually sales might have been 10 lakhs, But because of fire, sales is only 2 lakhs. That means you have lost 8 lakhs. But don't tell anybody that you have lost 8 lakhs. Because profit on that only will be lost, sir. Because you are aiming for profits only. Entire sale value, don't say it is a loss. If you incur anything, then sales is lost, sir. Because you have not done operations itself. What is lost is profits to you. So thereby, due to fire, what is lost? Gross profit. Not on entire sales. Not on entire sales. Short sales. I can compare value of stock as on the rate of fire to GP on short sales. Accepted. Their stock is destroyed. Here profit is destroyed. How much profit? GP. On what? Short sales. That is the first step. Next. What is their firefighting expenses? Hello. You are you are fighting with fire to save the stock. How do you fight with fire? Now you will bring various equipments, right? Hello. You have to bring various equipments, water sprinklers or many other things to stop the fire. Am I right or not? Exactly. To reduce your lost profits. Hello. You will lose some profits. To reduce that, actually business will do something, sir. Let me tell you one thing. Actually sales is 10 lakhs, sir. But if you operate in the existing environment after fire, you will get only 2 lakh sales. But will not be like that. Because 2 godowns were damaged. Now we are not able to do production. We will not continue like that, sir. What we usually do is, we may take another go down on rental basis. What we'll do? We may take another go down on rental basis. Then we can continue more production and keep more stock. Are you getting the point, sir? Now, if we do more production, more sales will happen. More profit also will be there. Then you will not lose more profits. Sir, are you getting the point, sir? Please understand, insurance company is taking this activity as a activity which helps them. Whom, sir? Insurance company. Firefighting expenses helps the insurance company or not? Exactly. If you incur any additional expenses, hello, what is that? If you incur any additional expenses, just like you taking another go down on rental basis, or you doing some advertisement, or clearly mentioning posters that we were shifted from this place to another place, like that, all these expenses will help you to increase your lost sales. Am I right or not? Will help you to increase your profits. Now, if insurance company sees these activities, they feel very, very happy, because now you do, because of your activities, now their profits claim will reduce. Their amount payment also will reduce. Just like firefighting, additional expenses also will help the insurance company. That's why this is also allowed by the insurance company. Sir, understood? So thereby, first GP on short sales. For that, what we will add? Additional expenses. Just like salvaged stock. Hello, what is that? Just like salvaged stock. Some expenses also might be saved. Hello, just like stock is saved, some loss also might be saved. You might have saved some loss. Now, what is saving from loss, sir? Let me take an example. Let us say, sir, when everything was running properly, we used to hire 20 employees. For each employees, we paid 10,000. How much, sir? 10,000. That means what is the expense we have? 2 lakhs. Now, when we have in our P&L 2 lakh expense, now what we feel, because of this fire, I may not be able to recover sales. This expense is fully lost to me. So thereby I claim this expense also from the insurance company. I am having some loss. Usually I used to recover from my sales, but because I don't have sales, I am having loss. So I will claim this amount also. That's why what I have said, sir. What we will claim? Not only net profit, but also P&L expenses. Do you remember that, sir? Not only net profit, but also expenses which you are having in P&L. Now, we will make an insurance claim. We will take an insurance claim. Let us say for this 2 lakhs we have taken. In other words, net profit plus that expenses. For that only we will take the policy. Let us say we have taken policy for this amount also. 2 lakhs. Now, please understand. Just because you have taken policy for 2 lakhs, will you try to ensure that entire 2 lakh expense is incurred? No. Sir, production level has destroyed a lot. Building was destroyed a lot. Now, when production was stopped for few months, our customers also will shift to another company. You cannot expect them to come back in the short period. Once again, they'll continue in that company only, sir. So, as a result, I think your sales will be lost for a longer period. Are you getting the point? That's why what you thought, let us remove 5 employees. Hello, what is that? Let us remove 5 employees. In such a case, your expense also will reduce by Your expense also will reduce by 50,000, but you are paying on 2 lakhs. Your estimation is 2 lakhs. So thereby you might have taken policy on entire amount including that 2 lakhs. But today actual expense is not 2 lakhs, 1 lakh 50. Now insurance company will pay for 1 lakh 50 or 2 lakhs. 1 lakh 50, because you are paying to employees 1 lakh 50, that loss only they will reimburse. Sir, please understand, if you have taken a policy, whatever loss you face, that only they will recover. Am I right or not? In this, what is included is not 1 lakh 50. GP means net profit plus insured expenses. Now, when we have insured, we might have insured for 2 lakhs. But shall we take claim for 2 lakhs, or will the insurance company give claim for 2 lakhs? No. That's why we have to reduce something called as savings in insured standing charges. What is that? Standing charges means fixed charges, sir. Generally, whatever expense there in P&L, we'll call as standing charges. Now, in insured expenses, if any expense is saved, that means if that expense is not incurred, now insurance company also need not pay you that. To that extent, reduction is required. When we take policy, we'll take on full value, sir. Here when I say GP, here how much amount might be there is 2 lakhs. We may claim for 2 lakhs, but they will not give for 2 lakhs because actual expense incurred is 1 lakh 50. That 50,000 relating to 5 employees, 5 into 10, that need not be paid. There was a savings in the expenses which you have insured. To this extent, company need not give you the claim, which we call as savings in insured standing charges. This is the net claim, sir. Sorry, gross claim. Sir, I think at the end you will write this statement only. Am I right or not? Before net claim, you usually write this statement. One is GP on short sales. For that you will add additional expenditure. For that you will reduce savings in insured standing. Don't try to by heart it, sir. Compared with loss of stock, you'll remember for long. Because just like value of stock on fire, what will be there, sir? GP on short sales. Just like firefighting expenses, what will be there? Additional expense. There also, why that expense are incurred? To save the profits lost only. Similarly, like salvage stock, we are saving some stock from fire. There some expenses we are not incurring. Once again, there also profits are saved. So in this way, the statement will be there. Have you understood the main statement, sir? Sir, everybody, the statement clear? Now, actually, you may be having some 7 or 8 steps. Am I right or not? Now, for this first one, you will have 3 steps. What is that? GP on short sales. For this additional expenses, you may have one note, one working note. Then for gross claim, then ultimately for net claim. Like that, you will be having 6 or 7 steps, sir. Now, let me tell you each of them. First one, GP on short sales. Hello, what is that? GP on short sales. How do you determine the short sales? Now, for that, let me give you a chart, sir. If you just remember like this, it will be always simple, sir. Now, please observe. Let us say fire occurred somewhere on, please observe carefully, 30th October or otherwise 1st October, and the indemnity period, in other words, the profits was lost, let us assume October, November, December, let us assume till 1st Jan. In other words, till 31st December, the profits was lost. How many months, sir? 3 months. How many months? 3 months. During these 3 months, we have not performed normally. From 1st January, we are able to get back our normal level of productions. Are you getting the point? Now, this turnover is called as actual turnover. What is that? Actual turnover. In the last year, this is current year, sir. Let us say 2021. This is 1920. Sorry. In the last year, exactly same period. That is 1st October to 31st December. This sales is called as standard turnover. This is called as what, sir? Standard turnover. Now, sir, from standard turnover, if you reduce actual turnover, because this is what expected and this is what actually there, you will get the short sales. Something I have said. What is short sales, sir? Standard minus actual gives you the short sales. Okay, sir, understood. Standard minus actual gives you short sales. Now, entire short sales is lost for you. No. You have to apply GP percentage on it. Now, how much GP, sir? What is the gross profit lost? Now, sir, can we take this year as a base to find the gross profit for us? This year abnormalities are there. Hello, what is that? Abnormalities are there because suddenly fire occurred. Only when we take a full year, proper GP percentage can be taken. Sir, GP percentage means we cannot take for 3 months or 6 months. That is not a proper GP percentage. GP percentage has to be taken for full year. Now, I cannot take current year because this year contains abnormal issues. So, what I will do for taking proper GP percentage, I will take the last year. Hello, I will take what, sir? Last year. I don't bother and which period to take, sir. I simply require 1 year, that's all. Because I cannot take current year, I will take last year to find the GP. So this full year is called as last year turnover. Now, based on this only, we will find GP, sir. How do we find GPs? Let me tell you. Now, sir, how much profits they will give you as claim, sir? Can you please tell me? Do you think entire amount they'll give as claim? No. Usually, what you claim for, sir, net profit plus some expenses. Nothing but the GP. Am I right or not? Sometimes what may happen is, sir, you may not insure some expenses. What is that? You may not insure some expenses. Exactly in the same way, let us say, few laborers are there or few employees are there. You know very clearly. When work is not, we'll hire them on temporary basis. Whenever work is there, we'll hire them. Otherwise, we'll not hire them. When sales was lost, will we hire them? No. I think it is unnecessary to take policy on such expenses. Because anyway, we will not incur that expenses. Why to unnecessarily pay more premium on our policy? So usually we may not take policy on such expenses, though they may be there in P&L. Are you getting the point? So that's why all expenses may not be insured. There may be some uninsured also. But what you get is not all expenses. You get only for what you insured. What you insured. That means you will not get entire GP. You will get net profit. You will get insured expenses only, not uninsured. That's why formula for finding GP percentage is net profit plus insured standing charges divided by last year turnover into 100. Sir, have you understood, sir? First clarity, you should take last year turnover. It is not actual or standard or annual. It is last year. Why, sir? GP means one proper year has to be taken, sir. When you are taking proper year, now current year having abnormal issues. That's why we are going for last year. That's all. So thereby divided by last year. What profits we should take in the above, sir? What we get? What we get, sir, usually net profit plus insured expenses. That's why we write net profit plus insured standing charges by last year turnover into 100. That is what GP. Sir, have you understood, sir? Let me repeat, sir. First thing, in our format, what we should find GP on? Short sales. Short sales is standard minus actual. Now, once we find short sales, we have to apply GP. How do we find GP? Net profit plus insured standing charges divided by last year sales, last year turnover into 100 gives you GP percentage. That GP only you have to apply. Once you apply, then you will get GP on short sale. This is what normal scenario. This is what normal scenario. In some questions, they may give adjustments, sir. What adjustments? First thing, sir, last year you are taking standard turnover, you are reducing actual. There is a possibility that last year 10 lakhs might be the sales during that period, sir. Usually, our demand itself increased by 20%. Our products demand increased by 20. That means, if conditions were normal, our sales could have been 12 lakhs. Last year was 10 lakhs, but our demand for products increased by 20%. Our sales could have been 12 lakhs. So that is what normal. Then you cannot take only 10 lakhs as standard. You have to adjust your standard. This is called adjusted standard turnover. What is that? Adjusted. In other words, if you observe any trend, hello, what is that? Trend. If there is any increased trend or a decrease in trend, that you should consider. If you feel that 20% increase is there every year, then last year if it is 10 lakhs, current year for standard, you will make a adjustment 10 lakhs plus 2 lakhs, or let us say 10% increase 1 lakh minus that 2 lakhs, then only you will get the real sales you have lost. Sir, have you understood the logic? So whenever trend is there, then we feel 10 lakhs is not lost, it is 11 lakhs. So hope it is clear. So once we find short sales, then GP also another issue, sir. Last year, our selling price of the product is 25. Now current year, just like oil prices, we have changed the price also to 30. Hello, we have changed from 25 to 30. Our GP percentage will increase or not? Yes. So if at all you have changed the GP percentage, then here also make a adjustment. Usually we feel that last year GP percentage only will continue in the current year, but if at all there is a change, make an adjustment. If you feel that 2% increase was there, apply the 2% increase. If you feel that 3% increase was there, apply the 3% increase. These things they will tell in the question, sir. Usually trend we will find, but GP trend they will give in the question. Something I have said, what I have said. Trend for standard turnover we will find usually, whereas trend for GP, if nothing is mentioned, no trend is there. If they have mentioned, that also we'll adjust for GP percentage. Then we'll get the actual GP percentage to be applied. Once we know proper GP percentage, once we know proper short sales, GP percentage into short sales gives you what, sir? GP on short sales. Sir, discussion clear? This is the first one, sir. Here you write 3 sub-steps, sir, in your working notes actually. First step as short sales computation, second step as GP percentage computation, third step as this one, GP on short sales. In that way you will get 3 steps, but logically you are finding only 1 point there. Discussion clear? Next one, additional expenses. Sir, I have incurred some extra expenses to reduce my profits which are lost. In other words, to increase my sales, I am incurring some expenses. Will I get that fully claim? As please understand, you will get claim, but some checkings will be there. What is that checking? Let me tell you. Let us say you have incurred 20,000 expense, sir. How much, sir? 20,000. Without this expense, normal sales could have been, that means because of fire, sales could have been 2 lakhs. How much, sir? 2 lakhs. But because of you incurring this expense, now you are able to increase your sales to 3 lakhs. How much, sir? You are able to increase your sales to 3 lakhs. That means because of this 20,000, how much sales increased, sir? 1 lakh. Now the point is, do you think insurance company will give the 20,000? Will give the 20,000 or not? They will look after cost benefit analysis for them. Due to you incurring this expense, what benefit is there for the insurance company? How much benefit is there? You cannot say 1 lakh they will not pay you. On this profit only savings for them. Are you getting the point, sir? Let us assume profit percentage is 30%. That means 30,000 lost profits are getting saved. Actually 30,000 profits might have been lost. Now because of you getting extra sales, to that extent savings is there for the insurance company. Am I right or not? Sir, are you getting the point? But they have incurred only 20. Now tell me how much insurance company will give? Will they give it? Sir, will they give 20 or 30? 30 savings was there for the company. 20 you have incurred. Will you give? Will the insurance company give you amount or not? Yes. Because of you only there was savings for them. But you have incurred only 20. 20 they will give you. That's all. Sir, are you getting the point? Suppose it was increased from 2 lakhs to 2,20,000 only. Sorry, or otherwise 2,40,000. Because of you incurring 20,000 expense, how much extra sales generated? 40,000. So how much increase was there? 40,000. What is GP percentage? 30%. That means how much real savings was there for the company? 12,000. 40,000 into 30%. For getting a saving of 12,000, you have incurred 20,000. Hello? Then what insurance company will do? I have got savings of 12,000 only, you have incurred 20. I don't bother. You unnecessarily spent the amount. I will give you 12,000 only. Hello, I will give you 12,000 because what is savings for me? 12,000. Sir, are you getting the point? That's why there is some comparison, sir. In the case of additional expenses, computation will happen. How the computation will happen, sir? Let me show you. It is actual expenses incurred. What is that, sir? Actual expenses incurred or GP on reduced sales or GP on additional sales. Whatever additional sales you are able to get due to this additional expenses, whichever is lower. Now, in addition to these two, one more point will be there, sir. explanation of this point takes time, but I'll tell you simple logic, final logic for that. If you are not insuring everything, I will not also pay you everything. It is just for uninsured one. Hello, it is what, sir? Uninsured. If you have not insured anything, for that we will punish you. Just like a average clause, what we will do is actual expenses into, sir, just like in our case, sir, what is the amount to be, what is the value for which policy is to be taken, sir, in the case of loss of stock? Value of stock as on the date of fire. Am I right or not? Here, what do you think? What is the amount for which do you think policy should be taken, sir? Sir, what do you think is the amount for which policy should be taken? Sir, what is the amount for which do you think policy should be taken? Sir, here insurable amount is GP on adjusted annual turnover. What is that? Their insurable amount is loss of stock as, value of stock as on the date of fire. This is for loss of stock. Whereas for here it is GP on adjusted annual turnover. This is what GP on annual turnover, but we say adjusted annual turnover. That is what the insurable amount. We multiply with GP on adjusted annual turnover, divide by GP on adjusted annual turnover plus any uninsured standing charges. What is that? Any uninsured. We'll add in the denominator uninsured, sir, because if you have not insured anything, for that we are going to punish you. Just like in the case of average clause, we'll add it in the denominator so that we'll give you only proportionately. This is what you have applied GP on adjusted annual, but required is something else more. GP plus what's, sir? Uninsured standing charges. Like that we compute additional expenses. Savings in insured standing charges, they will only give in the question. Have you understood, sir? Once we find this is the gross claim, here also we'll compare, we'll have that average clause, sir. What is that? Policy value we'll compare with, policy value we'll compare with what, sir? Policy value we compare with GP on adjusted annual turnover, because that is the insurable amount. So if it is lower, then once again we'll apply average clause. Loss gross claim into policy value by GP on adjusted annual turnover. You might feel, sir, why we are applying two times? Now itself you have said divide by uninsured standing charges. That average clause application is for the expenses. Now this is for you taking wrong profits. Now you have assumed that 10 lakh profit might be lost. You might have taken policy on 10 lakhs, but they say not 10 lakhs, GP on adjusted annual turnover. Suppose 15 lakhs is GP on adjusted annual turnover. You should have taken profit for 15 lakhs, but you have taken only on 10 lakhs. For that, they will apply the average clause. One is for expenses, other one is for profits, entire profits you are taking. That is the net profit is there, standing charges is there. One for standing charges, one for that net profit portion, all other sales, etc. Is that clear, sir? This is the format. What is the format, sir? 3 steps you please remember. GP on short sales, add additional expenses, less savings in insured standing charges. That is what the point. Let me complete this chart also, sir. I am discussing here. Now I think you got this is actual turnover, this is standard turnover, whereas this is annual turnover. That means till the date of fire. Hello, what is that? Sorry, till the date of fire, exactly 1 year preceding, it is called annual turnover. Exactly turnover 1 year before the date of fire. This is called as, this together is called as annual turnover, because we want the latest profits. This is the latest 1 year profits. This is the normal latest 1 year profits. That's why we take annual turnover for computing the policy amount which you should take, which we call as GP on adjusted annual turnover. Usually one small point will be there. Sir, you are telling adjusted annual turnover, that means trend adjustment will be done for annual turnover also. For shall we apply for entire annual turnover or only for current year portion of annual turnover? Or sorry, only last year portion of annual turnover. Logically speaking, you have to apply only on last year, because current year is already trend adjusted. Sir, is that clear? If nothing is given in the question, that means If you are unable to find what is last year portion and what is current year portion, sir, in some questions they'll give details quarter wise. If you know quarter wise details, you can find what is relating to current year, what is relating to last year. Otherwise, you cannot segregate in annual turnover what is current year portion, what is last year. In such a case, you have to apply trend for entire annual turnover, where you can segregate, apply only for the last year portion, because current year is already trend adjusted. Sir, have you understood? Everybody, is that clear, sir? Sir, covering loss of profit within half an hour or 40 minutes is not possible, but just I am trying to make it simple for you conceptually. Just I'll take one last time, one question, sir. Within 5 to 8 minutes, we'll close that. Then we'll proceed to a new topic. Are you getting the point, sir? Have you understood the format? Just remember those 3 steps, sir. It is sufficient. GP on short sales, add additional expenses, reduce savings in insured standing. GP on short sales means standard minus actual. For standard, any turnover will adjust. GP means net profit plus insured standing charges divided by last year turnover into 100. For that also, if there is any adjustment, adjust it. Additional expense means out of the 3, whichever is lower. Less savings in insured standing charges, they will only give in the question. Then sometimes in the question, they will not say how much is the additional sales due to these additional expenses. Due to I incurring these additional expenses, how much extra sales I have got, they will not mention. Then what we assume is, whatever sales was there during the period of fire, entirely is due to additional expenses. Like that we take a assumption. Are you getting the point, sir? Because of your additional expense only, we are able to generate. Otherwise, sales might have been 0. This is what our great assumption. But we cannot do the other way, sir. That's the only way possible. Now, anyway, let me take one question, sir. I will not deal with full steps, sir. I'll simply show you the turnover calculations, which is very, very important. That too, I'll take that quarter wise only. There only little bit confusion will come. So, I'll just quickly tell that. Let me take one assignment, sir. Just wait. Insurance claims. Okay. Now, please look here, sir. Let us quickly find the important turnovers. Then anyway, we have discussed the format. With that, we will close this chapter. Now look here carefully. Everybody, are you all ready, sir? Okay, right. Please look into the question carefully. Mona Lisa and Co. runs plastic goods shop. Okay. The following details are available from quarterly sales tax return filed. They have given 4 years data. Why they have given 4 years data? We require only last year, max current year. Why 4 years? For trend. Because when we can say trend is required is when we compare 2 or more years only, proper trend can be computed. So what we will do, 7,13,000 minus 6,20,000 divided by 6,20,000 into 100 gives you that year increase. 8,19,000 minus 7,13,000 divided by 7,13,000 into 100 gives next year. If there is a common percentage like that, that only we will take it as a trend. Is that clear, sir? Increase. Okay, right. Anyway, so first, what is the date of fire, sir? Fire occurred on 15th September 2014. Indemnity period was 3 months. That means 15th October, 15th November, 15th December, till 15th December. Net profit was 1,20,000. Standing charges amounted to 43,990. This was given for computing GP percentage. Net profit plus insured standing charges divided by last year turnover 8,19,950 into 100 gives you the GP percent. Sir, is that clear, sir? Now let me show you. Sir, if you write in this way, that will become very simple, sir. Otherwise, computation confusions will start, particularly in quarter wise. Now, what is given, sir? What is the date of fire? 15th September. I'll just write here. It is 15th September 2014. Till what, sir? Which date? 15th December. Okay, right. This because year ending is 31st December. So thereby, sir, 15th December. So just take this more, sir. That's all. Assume that this period is more. Now, this is what, sir? Actual turnover. Now for the corresponding different year, this is 2014, sir. Now this is 2013. For the same period, 15th September 2013 to 15th December 2013, what you get is what, sir? Standard turnover. Is that clear, sir? What is annual turnover, sir? From this date till this date, whatever sales you have, that is called as annual turnover. Is that clear, sir? Now let me show you the computation, sir. Which dates, how it is to be taken. Now what is standard turnover from 15th September 2014 to 15th December? You are having quarter wise details. First we require from 15th September. Now look at September month. Do you have any division, sir? We are there in 2014. Are you having any division? Now here you are having, sir, in 2014 after 15th, for the first 15 days sales was not there. So no need to consider. In the next 3 months, shall I take entire 3 months? No, only till 15th December. Please observe, from 15th September till 15th December. This 15 days nothing was there, sir. Now from here we cannot take entire 3 months. Now from that we have to reduce this period. So thereby look at the information. 16th December to 31st December they have given specifically. So what we should do, from the last quarter 1,48,000 we have to reduce this 20, then only we will get the actual sales. Have you understood, sir? It is 1,48,000 minus 20,000. 1,28,000 will be the actual sales. Sir, hope it is clear. Let me move to standard. Standard means what, sir? Last year 15th September 13 to 15th December. First check from 15th September any information given. Yes. For that 15 days they have given, sir, 34,000. This should be part of our computation or not? Yes. For this, can I take next 3 months fully? No. From that I have to reduce last 15 days. So take this 1,90,000, from that reduce this last 15 days of last year 60. So it should be 34,000 plus 1,90,000 minus 60,000. You will get it, sir. How much? 1,64,000. For that trend application will happen, sir. Here in this question trend is there. Net profit plus insured standing charges divided by last year turnover. Net profit is given in the question. Insured also given. Divided by last year turnover, which is 8,19,950. You will get the GP. That only we are applying to the standard. Adjusted standard turnover minus actual sales gives you the short sales. On this we'll apply the GP percentage we have found. We'll get the GP on short sales. Sir, have you understood? Clear? Sir, I could have moved slowly. This is revision. Please understand that. So thereby quickly I am discussing. Right. So once this is completed, for this what we will add? Additional expenses. Look into the question. Any additional expenses? Any additional expenses? Have they given? No. Any savings in insured standing charges? No. That means those two are not there. Question became very, very simple. But you have to compare with, you have to apply average clause if applicable. For that, first what you should find? GP on adjusted annual turnover. For that you should find what, sir? Annual turnover. How do you find annual turnover, sir? Last year you will take from 15th September and current year till 15th September. That means what you will do, sir, in our question, last year 15th September means this 15 days you will take. Hello, are you getting the point, sir? Next full quarter, that is October to December, Jan to March, April to June, July to September. But in that we have to reduce current month 15 days, but it is nil, sir. So thereby it is 34,000 plus 1,90,000 plus 1,62,000 plus 2,21,000 plus 1,75,000. That becomes the annual, but trend adjustment is required. What is required? Trend adjustment. What we say is, when we know clearly trend is to be applied only for the last year portion, on this 1,90,000 only we apply the trend. Current year 3 quarters trend need not be applied. So in that way you will compute the annual turnover, sir. You could observe, of course 34,000 is also there in the last year. For that also we'll apply the trend. For those two we have applied the trend. This trend is based on years, sir. I have shown you it at the beginning, 15% trend. So that if we apply, you will get the adjusted annual turnover, which is 8,15,000. On that you will apply GB percentage, you will get GP on adjusted annual turnover. So this you will compare with the policy value and you will make the, you will compute with gross claim to get the net claim. In this way, we apply the question. Have you understood, sir? So hope it is clear. Sir, because it is revision class, I am restricting many logics. Otherwise, for each and every point, logic could have been explained. But this is not a class of logic. This is only briefing. We are briefing whatever point is there. So with this, we are concluding insurance claims. Hope everybody have understood to some extent at least. May not be fully, but still. All the online students, hope you have also understood. Okay, right. So with this, we are closing insurance claims, sir. Let me move to one new topic. Let me go to another one such section, sir, where 3 chapters are there. From those 3 chapters, once again, any 2 will be given. And let me take another such section like that, which is accounts from incomplete records. What is that? Accounts from incomplete records, branch accounts, departmental. These 3 also given in the ICAI module as a section, sir. These 2 usually given as a combination. These 3 only usually given as a combination. Most of the times, these 2. Sometimes branch accounts extra may be given as a 5 marks question in the last or somewhere. But usually this is the combination. Anyway, so let me start with accounts from incomplete records. Are you all ready, sir? Everybody, are you all ready? Okay. Let me give you one point first. Accounts from incomplete records, logically speaking, not even single point will be new to you, sir. Each and every point when you are applying, you feel that accounting treatment, you know it only. Am I right or not? But when you are answering, ultimately balance sheet will not tell you. Hello? When you are trying each and every point looks simple and you apply every point well, but somewhere suddenly you don't write here, you don't write there, overall balance sheet will go. This is what usually happens. Am I right or not? In other words, I can say one thing. In accounts from incomplete records, actually you will not learn any new concepts, sir. What you have to learn is the procedure. Procedure in solving a problem. If suddenly client gives you some random details, how you make it up full and prepare a balance sheet is the issue. Now also, in fact, I also just don't want to discuss 2 problems only for the sake of telling you some entries. Because in that question, entries will be very, very simple to you. Now, what I want to tell you is once again the process. I can tell you, sir, if you apply the process which I am going to say, one mistake also you will not commit, sir. I'll just tell some rules, sir. If you just follow that rules, you will never commit a mistake. And following that rules only, I'll solve 2 problems now. Sir, are you getting the point? So that this chapter will become very, very simple. This chapter only process, sir. If you are good at process, this chapter is a very simple. Whoever is doing some random mistakes in the process only will feel it as difficult. Usually mistakes are committed in the process when you don't apply it properly. So let me give you the process. Are you all ready, sir? Okay. Now actually 5 golden principles are there. How many principles? Panchatantra I would like to call. So if you follow that Panchatantra, this chapter is very, very simple. What are that 5 principles? Take it as granted, follow these 5 principles. Any question of incomplete records is very, very simple. Now what is that? What is that 5 principles? Let me give you, sir. First one, open all the accounts simultaneously. Don't ever dare to do first working notes, then trading and P&L. Open every account simultaneously, including trading, P&L, balance sheet. Then only you will get the answers. Next thing, you need to post information, no? Which information you will post, sir? First, post balance sheet info. In other words, openings and closing balances of assets. Closing balances. First post opening and closing balances. Why I am telling you first to post opening and closing? If you post that, confusion will not be there, sir. Entries means you may do mistake. Debtors opening balance, where you record? No question. In debtors account, 2 balance brought now. You will not do any mistake. Usually in question, opening balances and closing balance alone will fill 20 or 30% of the solution, sir. But still you don't recognize it. But if you start feeling that, without you knowing, you will get the confidence, sir. Because some of the aspects you are already feeling. But first this is required. You first fill opening and closing. Then record all other transactions. Next, balancing is very, very important, sir. Hello, what is that? Balancing. Start balancing those ledgers which are eligible for balancing. First, start balancing those ledgers which are eligible for balancing. What is this eligibility, sir? Very simple, sir. In a ledger account, usually 4 aspects will be there. Out of 4, if you know 3, you can find the 4th one. If you know only 2, how you could find, sir? You should go and search somewhere. Start balancing those ledger accounts where you have at least 3 information. That is what eligibility. I'll show you while solving questions, sir. And that last one, the most important principle, sir. If this is followed, even if you do a mistake in the question, still balance sheet will tally. Even if you do a mistake in this question, still balance sheet will tally if you follow this principle, sir. Always follow double entry principle while recording. Because even if you do mistake also, mistake will happen on a double entry basis, sir. Automatically balance sheet will tally. Suppose wages incurred, sir. You have written machinery account at R to bank. Balance sheet will tally, yeah? Tally. Because both are getting affected. If you just follow this, because many people don't follow 5th point only, balance sheet will not tally, sir. I'll just tell you how to follow 5th one. Following 5th one is not so easy. You should have conceptually good understanding where an item will be there within the balance sheet and P&L. But if you follow 5th one, definitely any question will become simple. Sir, clear? Panchatantra clear? Let us go and apply this Panchatantra, sir. Anyway, sir, taking values and filling everything in the class is not proper. That too, writing each and every value takes some time. What I have done is, I have already filled it, but in stages. Whatever stages I have said you, I will show you the answer stage by stage only, so that you will have the clarity. Let me show you. Okay. So the same answer will repeat, sir. I will repeat with adding extra points. Are you getting the point? Okay. I will show you, sir. You will get good clarity. Don't worry. First, let me take the question, sir. It is just like solving a full-fledged question, but we will not be writing anything. I will just be showing, so that time could be saved. Now, straight away we will take our favorite question, which is important from examination. Question number 4. Similar question asked number of times in RTPs and MTPs, sir. So very, very important. Okay, right. Let me start. Sir, applying these 5 principles is very, very important. Now, actually for solving a question, if it is given for 16 marks, sir, it usually takes 30 minutes time. So I'll just show you how it will happen, but I can complete, I think, within 20 minutes. So let me start. 2 problems we are going to solve, sir. Each will take some 20 minutes or 15 minutes. Shall we start, sir? Okay, right. Just follow, just observe what I am showing, sir. I'll just show you everything. Exactly the same steps which I have given you. You apply later on whenever you are having time into few questions, you will definitely get the clarity. First, whenever question is given, after looking into the question, you should be starting searching for one aspect. First, you should know, before searching, sir, you should know which ledger accounts to be opened. Tell me what they're asking in the question, sir. What they're asking in the question? Trading and P&L. So usually you open trading and P&L as well as balance sheet. That is very much common, sir. In addition, working notes is to be opened. How much? What, sir? How many working notes is required, sir? Usually, we hit a 4, we hit a boundary or a sixer, sir. That is 4 or a sixer. Hello? Either we hit a 4 or a sixer. Now, what is this 4 or a sixer, sir? These two are usually common. One is opening statement of affairs for finding opening capital. The other one is cash book to ensure that each and every transaction is recorded. Hello? To ensure that each and every transaction is recorded. Suppose cash balance, debit and credit balance not tallied. What does that shows? Some transaction was not recorded. So it is to ensure that all transactions are recorded. Then similarly, debtors and creditors. These two are common, sir. Usually, any question, these working notes will be there, usually. Unless they give opening capital. If they give opening capital, we don't write opening statement of affairs. If they only give directly cash book, cash dips and payments, we won't write. But otherwise, usually these 4 we will write. What is sixer, sir? Sometimes they may give bill receivable. Sometimes they may give bill payable. If that information was also given, we'll hit a sixer. Otherwise, we usually hit a 4. Sir, is that clear? These are the working notes which will be there usually. Now, looking into the question, we open it, sir. In our question, what items are there? First, cash book have they given separately? No. So, we need to open it. Opening capital have they given in the question? Please look, sir. They have given assets and liabilities, but not opening capital. So, thereby definitely opening statement of affairs also required. Next, debtors and creditors anyway required. Bill receivable, bill payable, anything given in the question? Please observe. Bills of exchange, something they have said. That means bill receivable was there, sir. Bills accepted by customers. So thereby bill receivable was there. But I think nowhere bills payable. So thereby totally how many working notes, sir? 5. What are the 5? Opening statement of affairs, cash book, debtors, creditors, bill receivable. So these are the 5. Now I have opened the same, sir. Let me zoom it for you, sir. One is trading and P&L. Next, balance sheet. These as usual. Working notes. Opening statement of affairs. Then cash book. Cash book I have written here. Then debtors. Usually better write bill receivable below debtors, sir, because linking will be there between debtors and bill receivable. And at last, creditors. Sir, clear? I have opened all the accounts simultaneously. How to open? Give sufficient space. How much space should be given? Give as much as you want. Don't fit it like anything, sir. Make properly. You are paying exam fees for the ICAI. They will give you as many sheets as they want. Here in my notebook, you are having a problem. In exam, you will not have a problem. Okay, right. Now, let us continue, sir. Right. Now, first, we have opened all the accounts simultaneously. First point clear, First tantra applied, Now, let us move to second tantra. Okay, right. Now, what is that, sir? Recording, opening and closing balance. Once again, whatever you record, better try to apply your double entry. How to apply? Let me show you. Furniture. Sir, where we will record, sir? One, furniture opening balance, where we will record? Opening statement of affairs. One I will record here. Other place, if I maintain furniture account, I will write there. Or else, at least within the balance sheet as a opening balance. Sir, clear? Usually for opening balance only, we add purchases less depreciation. So thereby I have recorded opening balance. 2 places I have written or not? Yes. If required for opening and closing, it's not mandatory, sir. But wherever in the solution that balance is required, you need to fill it. That is what the point. Now, because balances, double entry will not be there. For transactions only, double entry will be there. But anyway, let me read, sir. Next, what is given, sir? Inventory. Now tell me, what are all the places where opening inventory will be there? One is opening statement of affairs. Please observe, sir. I will immediately go and write in trading account also to opening stock. Clear? Wherever required, you please go and write. Next, sundry debtors. One in debtors account, 2 balance brought down. Other one where we'll record, sir? Opening statement of affairs. Sir, are you getting 2 places, everything required, sir? Next, what is given? Sundry creditors. One in opening statement of affairs, the other one in creditors account by balance brought down. So that 2 places getting recorded, sir. Next, you are having prepaid expenses and unpaid expenses. Nothing but opening prepaid and opening outstanding expenses. Outstanding expenses means you will write as a liability. Prepaid means you will write as a asset. But you should know one thing, sir. This is one place. The other place is, Now when you find the current year expenses incurred, how do you find, sir? For the expenses paid, you will add closing outstanding, reduce opening outstanding, add opening prepaid, reduce closing prepaid. Now what I have done, because this is opening outstanding, I have reduced. Similarly, this is opening prepaid, I have added. Sir, is that clear? Later on I will fill salaries paid or expenses paid, then I will get the net expense. What I am doing is now itself simultaneously filling. If you feel filling here looks odd, then write a separate working note. Usually we follow a separate working note, or else we can write here itself just to ensure that our answer doesn't go wrong. Sir, shall I proceed? We are writing wherever our point is there, in all the places we are filling. Next, cash and bank, where we'll record one in opening statement of facts, the other one in cash book. Sir, have you understood? With this, all opening balances are filled. Now go to closing balances. Closing balances, furniture account, one place only we can fill, sir. So I am going and filling in balance sheet 12,700. Sir, is that clear? Sir, visible? I cannot zoom it even more because within the same page, number of values are filled. But at least understand the place I am pronouncing. Next, inventory at cost, closing stock, where we'll record, sir? One in trading account, the other one in balance sheet. I'll record at both the places simultaneously. Wherever possible, follow double entry. Debtors, not given anything, so leave it. Creditors, 30,000. One we will write in creditors account, other one we will write in balance sheet, because in balance sheet we can fill the creditors. Next, prepaid expenses and outstanding they have given closing, sir. In balance sheet I will write this closing prepaid as well as closing outstanding. Once again, within P&L, closing outstanding to be added, closing prepaid to be reduced. I have shown as a reduction and addition. All these adjustments I will do to expenses paid to find the expenses incurred. It's clear? Next. So with this, now cash in hand at bank, sir, closing balance, I'll record in the balance sheet. I'll also record in the cash book. So with that, I think all values we have posted. Sir, is that clear? Now just look at your answer sheet, sir. Opening statement of affairs almost filled. Now balance sheet almost filled. Now in all other place, almost half of the values you have filled. It just seems 20 to 30% of your work is completed, and in fact it gives you a very good confidence without you applying one logic also till now. Hello, have you applied anything great, sir? Just posting in the corresponding places. Sir, shall I proceed? Everybody, shall I proceed? Next, what is the third tantra, sir? Second tantra also over. Third tantra, record all other transactions, sir. In other words, whatever cash transactions given or whatever transactions given, we'll simply follow the journal entry. Following journal entry is important. Following double entry principle is important while recording every transaction. Let me follow, sir. First one, receipts and payments they have given. Collection from debtors after allowing discount of 3,000 amounted to how much, sir? 1,17,000. How much, sir? 1,17,000. Can you tell me entry for this? Bank account debtor 1,17,000. Discount account debtor 3,000. Two debtors 1,20,000. So what we will do? Go to the debtors account. Now let me move to the second page, sir. Here colors I have changed. Go to the debtors account. I will record by discount. I will record by cash 3,000 and 1,17,000. Sir, is that clear, sir? Double entry. Double entry is required. Go and post in the corresponding place. By discount means where you will record P&L. In P&L you will record to discount. Am I right or not? 3,000. By cash, where you will record cash account. In cash you write to debtors 1,17,000. If you miss double entry, take it as granted. Your balance sheet will not tally. Your balance sheet will not tally. If you follow double entry only, it will tally. If you follow double entry, why it will not tally, sir? Everywhere double effect you are giving, it should automatically tally. That only thing you do, sir. Next one, collections on discounting of bills of exchange after deduction of discount of 250 by the bank amounted to 12,250. Can you tell me the entry, sir? So we have discounted the bill with the bank, sir. So bank account debtor 12,250, discount account debtor 250 to bill receivable. Maybe we might have given the bill. So in bill receivable account, which account? bill receivable, I'll write by bank, by discount. By bank where I should write cash and bank. So 2 bill receivable 12,550. By discount where I will write P&L. Discount here also total 3,250. Sir, clear? Double entry is important. Next, what is given, sir? Creditors of 80,000 paid 78,400. So what is the entry? Creditors 80,000 to bank 78,400 to discount 1,600. So in creditors, I will write 2 cash, 2 discount. Once again in cash book, by creditors, discount means income for us now, discount received. In P&L, by discount 1,600. Double entry for everything, double entry. Next, payment of freight inwards, one in trading account, other one in cash book. So thereby 6,000 in trading account, once again in cash book 6,000. Next, amount withdrawn for personal use, drawings, one in cash book, other one has drawings in capital computation. So cash book I will write, how much, sir? How much it is? Withdrawn 14,000. Last, where I have written? Okay, here, sorry. By drawings I have written 14,000. Why you have kept some balancing figure there? Because in the question they have said, difference in cash book is to be treated as further drawing. If at all cash book difference is there. That's why I have written in brackets that 14,000. Another one in balance sheet, opening plus net profit minus drawings. Here I have shown that 14,000. Everywhere double entry principle is to be followed. Next, what is given, sir? Payment for office furniture account data to cash. So in cash book by furniture. Similarly in balance sheet, for the opening balance we'll add that as a purchase. Sir, clear? I'll zoom it, sir. So for the opening balance, we are adding it as a purchase. Okay, right. So hope it is clear. Next, investments carrying annual interest of 4% were purchased at 192, face value 200. Sir, please understand, it is investment itself is 192. So some people usually they thought 192 shares or something, 192 that much amount, least amount you might be thinking. Before you thinking like that, look at cash balance, how much they can invest. Hello? With 1,250, they can go and invest 20,000, 30,000. So thereby, that is 192 only. Okay, right. Anyway, sir, investment is 192. What is the entry, sir? Investment account data to cash or bank. So in cash or bank by investment. Similarly, in balance sheet, we will show that investment. Clear? Next, one more thing. Interest due dates also they have given, sir. When they have purchased October 2001, annual interest of 4%, sir. So what is 4%, sir? Hello, what is 4%? Please compute, sir. When you have purchased 1st October, that means for how many months you will receive interest? 6 months. You can earn an income of 6 months. How much? 200 into 4% into 6 by 12. 4. So that you will show as receivable because they have not said for that payment is received, sir. Investment were purchased only, relating to interest they have not said anything. So we will show it as a receivable. Interest accrued, one in balance sheet, other one in P&L as a income. Interest, income. Sir, clear? So you could observe, I think, one thing for every entry, every aspect we are recording double entry. If you follow like this, never wrong, sir. Next, expenses including salaries paid 29. One we'll write in our P&L. I think we have kept a space here for writing expenses paid. Another one in our cash book by expenses. Like that we will record. So discussion clear? Next, miscellaneous receipts 1,000 by once in P&L, the other one in cash book. We'll write 2 miscellaneous receipts. Next, bills of exchange drawn on and accepted by the customers during the year amounted to 20,000. Of this, bills of exchange of rupees 4,000 were endorsed in favor of creditors. First bills accepted by customers, how much, sir? 20,000. Entry for bills accepted by customers. Bill receivable to debtors. So thereby in bill receivable account to debtors 20. In debtors account by bill receivable 20. Double entry. Next, out of this 20, 4,000 were endorsed in favor of creditors. We have given that to creditor. So creditor to bill receivable 4,000. So what is the entry? In creditor to bill receivable, in bill receivable by creditor. Like that we'll write the double entry. Next, an endorsed exchange of 800 was dishonored. So endorsed bill was dishonored. What is the entry, sir? Hello, in bills of exchange chapter you might have learnt it, sir. Initially, when when customer has accepted, we are writing debtor to bill receivable to debtor. Later on, when we have given to creditor, we are writing creditor to bill receivable. Am I right or not? Bill receivable is getting cancelled. In fact, debtor also cancelled because we felt that it will be received in the form of bill. Whereas creditor also cancelled because we felt that he will receive from the debtor. But what happened? Cancelled. Endorsed bill was dishonored. That means neither creditor was paid nor debtor has given us. So thereby, once again we'll bring back the debtor and the creditor. Simply will be debtor to creditor. Over, sir. Hello. Entry will be what, sir? Debtor to creditor. Endorsed bill dishonored means entry will be debtor to creditor. Okay, right. So thereby 800 is the amount, sir. I will write in debtor's account to creditor 800, in creditor's account by debtors 800. Double entry once again. Next, goods costing 1800 was used as advertising materials. Are you getting the point, sir? Goods costing 1800 was used as what, sir? Advertising. Now advertising means expense. Is it a P&L expense or trading expense? Advertising is a P&L expense or trading expense? P&L expense, sir. To advertisement where you will record P&L. But sometimes in the question they may say like this, where they say goods were used for purchase. Sorry, goods were used for advertising. When we have purchased goods, what is the entry? We might have recorded 2 purchases. Am I right or not? But today the same goods were used for advertisement. When it was purchased, it was a trading expense, sir, because we feel it is for sale. When the goods were purchased, it is for sale. It's a trading expense. Once you decide to use it as for advertisement, it is no more a trading expense. It will become a P&L expense. That's why what we will do, we will reduce from the trading because already included in purchases, and once again we'll record in P&L. Sir, have you understood? Many of you are feeling that because we are reducing from trading, it's a trading expense. No, sir, not, sir. We are eliminating from trading and recording in P&L. Because when we have purchased that goods, already we might have recorded as purchases, a trading expense. Now it is not a trading, it's a P&L expense. That's why we reduce from purchases and we show the same in P&L. That's all. Double entry, double impact also done. So hope it is clear. Next, this goods are invariably sold to show a profit of GP of 33/1/3. That is 1/3 on sales. That we will see, sir. Difference in cash book, if any, is to be treated as what, sir? Further drawing or introduction of capital by proprietor Rashmi. Okay, right. Next, provided 2.5% for doubtful debtors on closing debtors. On whatever closing debtors was there, we should provide provision 2.5%. For that, first what we should know? Closing debtors. Do you know closing debtors? Till now, with our information, do we know closing debtors? No. So we cannot create it now. So we have to create once we know the closing debtors. But don't wait till that time, sir. If you wait till that time, you will forget that you need to provide provision. So just mention in balance sheet at least. Debtors less provision. Amount you can fill later. Just to ensure that you remember the point called provision. Clear? One you will fill here, other one you will fill in P&L. I have given space also for that. 2 provision for doubtful debts. Sir, I think with this we have recorded all the transactions. With this third tantra also completed. Sir, clear? Now you could observe what was the beauty in third principle is every point we are applying double entry. You may feel this as simple, silly. What is there, sir? Anyway, we'll apply double entry. But you might observe when you have applied in exams or somewhere, the same point you may not have applied, sir, because of which only you will face the trouble. If you really apply double entry, even though you have done a mistake, suppose wrong entry it written, suppose for endorsed bill dishonored, instead of debtor to creditor, you have written something else, sir, bank to creditor, still balance sheet will tally because you are giving double effect, no? With mistake, at least balance sheet will tally so that in examination you will not worry about it. Once again, in examination, problem of incomplete records is it will not kill the time for that question. It will kill time for other question also. Because you will check for mistake, where it has gone mistake. Because enter balance sheet not tallied means your mind will not tally. Hello, your mind will not accept. So you have to make it tally. So for that purpose, you usually look where has the mistake happened. To ensure that that doesn't happen, first follow double entry principle. You will not commit a mistake, sir, if you follow this. Okay, right. Now let us continue, sir. With this third tantra completed, let me move to fourth tantra. What is the fourth tantra, sir? Balancing. Start balancing with those ledgers which are eligible for balancing. Now first tell me, opening statement of affairs, eligible for balancing. We know everything except opening capital. Now we can find opening capital as a balancing figure that is eligible. If we don't know only one item, that is eligible, sir. If we don't know more than one item, that is not eligible. So thereby this is eligible. So we'll find capital. I would like to write this as a balancing figure 1. Accepted. Whatever you find also follow on a double entry principle. Capital, where you will go and record opening capital, you will just record in the balance sheet as opening capital. This is the first, sir. Next, come to the other ledger accounts, sir. Debtors ledger account, is it eligible for balancing? Generally, to say it is eligible or not, sir, we have to look at the basic 4 aspects. Basic 4 aspects is opening balance, sales, collection from debtors, closing balance. Other things are not main, sir. If it is given only, we will write. But these 4 are main. Opening balance, sales, collection from debtors, closing balance. Because these 4 are usually minimum. So thereby opening balance there are, yes. Sales is there are, no. Collection from debtors, yes. Closing balance, no. So we don't know 2 items. So this is not eligible for balancing. Now let me move to third one, bill receivable. Here opening balance is not there, closing balance is not there, so go away. Later on we will see. Next, creditors, opening balance is there, closing balance is there, payment to creditors also there, purchases alone not there. I think eligible for balancing. So this one also will balance, sir. By purchases, balancing figure 2 will go and record in the trading account also. From that we'll reduce that advertisement, I have already said to you. Then we'll get the proper purchases. Hope everybody have understood. Next, which account is eligible? All these 3 are over. Cash book you can find, no. Usually you find cash book at the end, sir. Because any small other ledger account information also will impact cash book. So please wait till the end, cash book. Don't complete it before only. Now with this, trading and P&L also you have to complete at the end, sir. But just look trading. Sometimes trading you can find, sir. Only one item may be missing. Look here, opening stock is there. Closing stock, that's all. No sales, no purchases. Okay, purchase also filled, I think, right. Opening stock is there, purchase is there, closing stock is there. Previously, we don't have information, that's all. Okay, sir. I think these are the preliminary ledger accounts we can fill. Creditors we are able to fill, opening statement of affairs. Not filled is debtors and bill receivable. In debtors, at least if you know sales, you can find closing balance, or else if you know closing balance, you can find debtors. Now I think one of these things should be there, sir. Sales, where it will be recorded, sir? 2 places. One in debtor, other one in, if it is not available here, there it should be available. If it is not available here, there it should be available. Because closing balance, you cannot get it, sir. It should be as a balancing figure only. There is no link usually for closing. So you have to go for trading account to search for that sales. Opening stock is available, purchases is available, freight is available, closing stock available. Any information we have not considered? Yes, GP was not considered. 33 1/3. Now using this, we should find the sales. This is one of the important concept of finding, sir. What we will do? Can I say this is equal to COGS? Opening stock plus purchases plus direct expenses minus closing stock gives you COGS. GP percentage 1/3 on sales on cost 1/2. If it is 1/3 on sales, 1/2 on cost. We know the cost of goods sold or not? Yes. So in that way, we are going to compute, sir. Let me show you. So it is cost of goods sold will be opening plus purchase plus direct expense minus closing stock 97,400. 1/3 on sales, 1/2 on cost. So GP will be half of the COGS, 48,700. Once we know GP, COGS plus GP gives you sales. We'll go and update sales here, sir. Once we know sales, we can go and fill in debtors account. Once we know sales, we can find the closing balance. Go and fill in the balance sheet. Now apply the provision of 2.5%. Go and record in the P&L also. Sir, I am showing everything on a double entry basis. Now once these things are done, debtors account also over, sir. Now bill receivable, I think in the question opening balance was not given, sir. Closing balance is also not there, but when both are not there, now we have to take one assumption, sir, because every other aspect is over. Two debtors is there, by collection is also there. Only opening and closing are left. If they have given any other information, we can fill it, sir. Openings or closing can never be obtained from others, sir. So we have to assume one of them as 0. Better to assume opening as 0. So balance will be the closing. Go and fill in the balance sheet also. That bill receivable 3,500. I have not filled. Okay, somewhere it is missing, sir. But that balance 3,500 also to be filled, sir. Sir, is that clear? Closing balance. Next, what is required, sir? I think bill receivable account also completed. Creditors account also completed. Go to the cash book. Now you can find the balancing figure, sir. So here 1808. These the extra drawings. This also you will consider under drawings. You will fill here. You will get the capital. I think in trading account everything is completed. In P&L also everything is filled. You can find the net profit. In balance sheet also already filled. Now with this balance sheet will tally. Have we applied all 5 principles I have said? We have applied, sir. Opened all the accounts. Posted first opening and closing. Next we have recorded all other transactions. Next we have started balancing those which are eligible. Because first if we feel eligible, from that we get some information. Using that information we can find something else. Then at last, this is we followed throughout our process, sir. Always follow double entry. Just follow this, sir. Any question in this chapter will become very, very simple. Most of the times you know the accounting treatment, but you lack in process only. That's all. Sir, clear? So with this I am closing this question. Let me move to one more question while applying this concept, but of course important from examination. With that we will close incomplete. All the online students, have you understood this explanation? How to proceed with accounts from incomplete records? Just give some message in between so that any doubts I could understand. Okay, right. Let me proceed, sir. Let me move to the second question. One more question. So which question, sir? Last question, Srinivas. Question name, sir. Srinivas question. Question number 7. Very, very important, sir. Usually this. Now already we have completed whenever fire occurred, what will happen in insurance claims? Am I right or not? Hello? Sir, whenever fire occurs, what will happen, sir? Buildings will destroy, stock will destroy. Now will we sit idle, sir? No. During this time, now we will try to save everything. Am I right or not? Employees, everybody will participate in saving the stock, in saving the assets. Now what will happen is, during this course, some employees will behave in even more good way, sir. They will be overprotective. In other words, they will protect the cash by taking away. Hello? Some employees will be overprotective. They will protect it by taking away to their home, sir. Of course, they will not return it. That's all. Sir, are you getting the point? So that is the important point in this question. Loss of cash by theft. Sometimes some of your employees itself may take away. In that case, what is the accounting treatment, sir? First you should know the treatment. Then only balance points are simple in this question, sir. The treatment alone is important. Whenever cash was lost, what is the treatment, sir? 1. Cash balance will reduce. Hello, what is there, sir? If cash is lost, cash balance will reduce. Other one it's a loss, you will charge to P&L. So P&L balance will also reduce. In P&L, you will write as an expense to loss of cash by theft. As a result, P&L balance also will reduce because your net profit reduces. In this way, double impact will be there due to loss of cash by theft. Now, what they will ask is, in this question, they'll ask you to prepare some ledger accounts and you are required to prepare a statement showing the amount of cash defalcated by the cashier and also a P&L for the period year ended and a balance sheet. How do you find cash defalcated? How can we find it? Prepare a cash book, find the closing balance, Wrongly I am telling closing balance. If balance is existing, we'll call as closing balance. If balance is taken away, that will become the loss of cash by theft. In other words, in our cash ledger, we'll write everything, sir. Closing balance will not be there. That we will assume as loss of cash by theft. Because this much should be there as closing, but that is not there. So that means everything taken away as theft. So in that way, the loss of cash has to be found. Sir, is that clear, sir? Once again, let us apply our Panchatantra and solve this question, sir. Actually, for big questions like what we have solved previously, Panchatantra seems very good. When you apply Panchatantra to this question becomes Lilliput only, sir. Easy to solve. When more aspects are there, Panchatantra becomes very useful. When very less aspects are there, using Panchatantra, you don't feel that this is a question also. It just look like it's a capital comparison method. In capital comparison method, you will do it very quickly. Am I right or not? Here also it will be done very quickly. Let me show you how this question looks so simple when we apply that Panchatantra. Shall we start, sir? Yes, sir. Oh, great. Once again, a similar pattern, sir. First, I'll open the ledger accounts required. The same pattern. Okay, right. First, tell me what ledger accounts to be opened, sir. Opening statement, trading and P&L balance sheet anyway required, sir. Opening statement of affairs required, No, because they have given opening capital. No need to prepare. Next, cash book required, Yes, cash we should find. Next, debtors, yes. Creditors, yes. Bill receivable, no. Bill payable, no. Simple, sir. Of course, but be careful. They are giving cash at bank and cash in hand separately, which makes it mandatory for you to prepare with the cash column and bank column. If you prepare like this only, you will have better clarity. Sir, clear? Right. Now let me start. What is the first thing, sir? First, opening all the accounts simultaneously is over. I have opened. Next, to post as opening and closing balance of assets. So what are the opening balance? Simply write down, sir. Furniture, stock, debtors, cash in hand. Okay, anyway, we are following double entry now. So let me write down. Furniture, 10,000. So once I will write in, of course, opening statement of affairs is not there, sir. If it is there, we might have written there. Now, other one in balance sheet as an opening balance we'll write. Next, stock, one in opening statement of affairs, but we are not preparing that. Other place in trading account, 2 opening stock. Debtors, one in opening, but we are not writing that. Other place in debtors account. Cash at bank and cash in hand, one in opening, but we are not recording that. Why I am telling we are not recording regularly is if it is there, double entry principle you can observe. Here we are not recording, that's why you are not able to observe, that's all. Now next, liabilities for goods means creditors only, sir. Rent means opening outstanding. Creditors once we will write in creditor account, the other one in opening, we are not recording. Rent also, opening outstanding rent, one in opening statement of affairs, other one in P&L we have to reduce opening outstanding, sir, because only one item I have not considered. Next page I will show it, sir. Okay, right. Now, this is opening balances, sir. Now, any closing balances, you please go and search. Sir, don't follow the order of information given in the question. You go and search and find closing balance and opening, post it, then only go to other transactions. Otherwise, question becomes difficult. Now, anywhere closing balances? Yes. The following are the balances. Just write down these balances. Closing stock, debtors and creditors. I'll write here closing stock. Of course, one in balance sheet, the other one in trading. Debtors also one in balance sheet, the other one in debtors account. Similarly, creditors, one in balance sheet, the other one in creditors account. Sir, clear? With this, all the opening and closing balances were posted. With this second tantra also over, sir. Sir, shall we move to the third one? What is the third one? Recording other information. So we'll start recording other information, sir. First, Sri Srinivas sells his goods at a profit of 20% on sales. GP percentage. If we know current year sales, we can apply. At present, I don't know. Once I know sales, I will apply. Next, goods are sold for cash and credit. If they give it specifically, remember, cash sales are also there. If they don't give specifically, that means only credit sales. So here they have given, that means we should find the cash sales. Credit customers pay by checks only. That means you need not wait for cash collection from the creditors. So cash payments to the creditors. Payments for purchase are always made by checks. Receipts and payments both from debtors and creditors are made by check. That means you have to route in bank column, not in cash column. Next, it is the practice of Sri Srinivas to send to the bank every weekend the collections of the week, after paying every week salary of 300 to the clerk, sundry expense of 50 and personal expenses 100. Sir, are you getting the point, sir? What we should do? Total how many weeks are there, sir? For this question, total how many weeks will be there? Don't be don't think that, sir, in an year how many weeks will be there? What foolish question are you asking? Year means 52 weeks, 12 months. We know it. Don't write like that. In this question, 13 weeks are only there. They are clearly giving that 13 weeks are there. So 13 into 300, 13 into 50, 13 into 100. Like that only you have to record. Sir, don't show your intelligence. Look at the question. Sir, is that clear, everybody? So thereby, I am writing all those three, sir. One salaries, one sundry expenses. Once I will record in cash book. Other time I will record in P&L. Then personal expenses 100 into 13. Once again I will record in capital as drawings. Sir, discussion clear? Next, what is given, sir? Analysis of bank passbooks for the 13 weeks period ending 31st March 2012 disclosed the following. So what is the information given, sir? Payment to creditors 75,000. So let us record, sir. One in cash book. Of course, we are doing it through check. So thereby by creditors in bank column 75. In creditors to bank 75. Next, payment of rent up to 31st March. That means current year rent paid. This is paid, sir. 4,000. We know opening prepaid also. Opening prepaid, opening outstanding. So opening outstanding to be reduced. So thereby 4,000 minus 1,000. So this 4,000 to be recorded in cash book also. Sir, what about 1,000? What is the other place? If it is opening statement of affairs, there you will record, because you are not recording only one place. Usually for opening balance, you will not get it, sir. But just to have that pattern, I usually ask my students just to have both opening statement of affairs as well as here. Then you will apply that double entry throughout the question. Next, what is the next point, sir? Amounts deposited into bank 1,25,000. Now in that 30,000 was received from debtors. Sir, if we have received 30,000 from debtors, entry will be bank to debtors. Hello, what is that? Bank to debtors. The balance 95, we'll assume it is cash deposited into bank. You may feel, sir, debtors also cash only received. No, sir. Once again deposit. No, can we write contra entry? If you want, write it, sir. What will happen is, maybe you might have learnt in your lower class also, same day deposited will be in one way, different day deposited another way. Ultimately, what balances will affect, sir? Bank balance and debtor balance. Even if you write individually, first you have to feel cash you have received, then you are depositing. Once again, cash will be credited. Instead of doing like that, you can pass a combined entry bank to debtors. For this 30,000, we'll directly write bank to debtors. For balance 95, we'll write it is cash deposited. Sir, clear? Okay. So please observe, for 30,000 bank to debtors. In debtors, I will write by bank. Now similarly, for that 95, bank account debtor to cash in cash book by bank. Sir, is that clear, everybody? Out of total 1,25,000, 30,000 is from debtors. So bank to debtors. Balance is just a regular cash deposit. So bank account debtor to cash. Bank balance should increase. Cash balance should reduce. That's why bank to cash. That's all. I think all the entries are done. So with this third tantra also completed, let us quickly move to that fourth and fifth tantra. What is the fourth tantra? Balancing. We should start balancing those ledgers which are eligible for balancing. Now debtors eligible. Look there and tell me, debtors eligible. Out of 4, 3 are there. Out of 4, 3 are there. Opening balance is there, closing is there, collection is also there. So we can find what's our sales. Of course, which sales? Not entire sales, credit sales, because in the question clearly given that cash sales is there. So I will find sales, but that is only credit sales. In P&L I will write sales, cash and credit. Only credit sales I will write 35. Sir, is that clear, everybody? Next, what we can feel, sir? Creditors account eligible? Yes, we can find purchases. So I will write by purchase. Sir, one more thing, write down balancing figure numbers, sir. First, whatever you are finding, I am writing numbers. If you observe, if you write balancing figure numbers, you will never have confusion while preparing. What is first, what is second? Otherwise, you will think, because everywhere balancing figures, first that one found, first this one. It will confuse you like anything. Particularly during last time revision, you will not have big time, sir. Unless you know the balancing figure numbers, you will have a confusion. Okay, anyway. So just if already balancing figures were there, when you are solving, at least keep some balancing figure numbers. Examination also, please do that. It will give you better presentation. Next. So by purchase, once again we'll record in trading account 2 purchases. Next. Any other can be filled, sir? Debtors completed, creditors. Cash book, can we find, sir? But let us wait till the end, sir. When everything is completed, we'll close the cash book. So that's all. So with this completed, sir, now let us proceed. What else is to be filled? Trading and P&L is to be filled, sir. Now in trading and P&L, what you know? Opening stock. Purchases you know. Closing stock. But you don't know sales. Credit sales is known. Cash sales is not known. Okay. Tell me what we should do. When these three are known, the regular concept, COGS, once again same, sir. Last question, whatever is there, same. It is, question is given 20% on sales, so 1 by 5 on sales, so 1 by 4 on cost. So you will find cost of goods sold exactly in the same way, 1,21,000. So it is 25%, 1/4, sir. If you apply, GP will be 30,250. Sir, are you getting the point? So total sales will be COGS plus GP, 1,51,250, out of which we already know credit sales. Reduce credit sales, you will get cash sales, 1,16,250. So that we will apply in our solution, sir. We will record cash sales here and also in the cash book. Now you could observe, only after recording this cash sales, you can now, it is eligible for balancing because all the things are recorded. Sir, is that clear? Now what you will do, in cash column, whatever balancing figure was there, you will write as loss of cash by theft, once here and other time in P&L. Similarly, bank balance, that is nothing but closing balance only, sir. Once you will write here, the other one in the balance sheet, closing balance sheet, you will record. Everything is recorded in P&L, sir. You will find net profit and you will write here. That's our balance sheet will tally. Sir, have you all understood? Sir, one thing I can say, it's not possible to discuss each and every question. That to incomplete records, every question takes lot of time. What I have given you is only procedure. Please understand the procedure only, not the points. Points anyway you can understand, sir, not big points. Simple points only. Procedure is important. Simply, if you follow this procedure, questions will become very, very simple. So with this, we are closing incomplete records. Sir, shall I proceed, sir? Till now, how many chapters completed? 4. Hire purchase, investment accounts, insurance claims, accounts from incomplete records. Okay, right. Now, from the same section, I think I've said you, along with accounts from incomplete records, we'll have branch and departmental. Time is not sufficient, so we'll go for departmental. In the next class, we'll start with branch. Sir, is that clear, everybody? Okay. Now, sir, in incomplete records, I have not discussed few aspects like capital comparison, but they are simple. I am touching those issues which are very, very important and which you should know. Okay. Let me start with departmental accounts. I know, first of all, when I take the departmental accounts chapter only, many of you might be feeling, sir, this chapter is simple only. Why to discuss now? We can go for another big chapter. No. Let me give you one point. I think everything in the chapter is simple except that last concept, memorandum markup and memorandum stock. Am I right or not? That alone will always hurt us. And if suppose the same question is given, even if we prepare entire departmental accounts also, no use. So because we are perfect in every other aspect of the chapter, if we just ignore that aspect, examination, they are testing it, sir, intentionally, because you are not preparing it. Hello, they are testing it intentionally. So let us be ready with that aspect also. As a result, departmental accounts marks will be there definitely. Is that clear, sir? For that reason, now I'm going to discuss, I'm not going to discuss all other issues in departmental accounts. I'm going to discuss only memorandum stock and memorandum markup accounts. Is that clear, sir? One more, if time is permissible, based on that, we'll discuss one or two other issues also in departmental accounts. Shall I start, sir? Okay, right. Departmental accounts. Under that, memorandum stock and memorandum markup. Let me tell you one thing. If you try to remember journal entries for this memorandum stock and memorandum markup, maybe I think journal entries are given. In ICAI also it is given. That's why we have given in our material also. If you learn through journal entries, you will never understand this concept, sir. This is not a concept where you should learn through journal entries. Take it as granted. Really, memorandum stock and markup is not a concept which you can understand through journal entries. It should be analyzed through ledgers only. First, you should know the purpose why we are preparing memorandum stock and memorandum markup. If you know the purpose, it will be very, very simple. In fact, today, it gives me double benefit if I discuss now. What is double benefit is, one, now I can complete one concept in departmental accounts. Another benefit for me is, when I discuss in the next class branch accounts, that too stock and debtors method, that too at invoice price, branch stock account and branch adjustment account will behave in the same way. What I have said in branch accounts, in dependent branches, not independent, sir, in dependent branches, stock and debtors method, invoice price, two accounts, branch stock account, branch adjustment account will behave exactly in the same way as memorandum stock account, memorandum markup account. The logics for here and there are exactly same. So thereby, first let me discuss this so that I could reduce some time in branch also. Okay, right. First let me start. Before proceeding to this memorandum stock and memorandum markup, let me make one thing clear to you. All memorandum accounts are dummy accounts. Hello, all memorandum are dummy. I think I've already said you today only. They are not real accounts, sir. When you write in memorandum account two purchases, now will you stop preparing your regular trading account? No. That means are you cancelling same purchase two times? No. These are dummy entries, sir. Whatever you write in memorandum accounts are dummy entries for a specific purpose. Hello, for a specific purpose. Memorandum trading account is for the purpose of finding value of stock as on the date of fire. Similarly, memorandum markup and memorandum stock are also having some purpose. Let me quickly discuss the purpose. As a result, the concept can be understood very quickly. First, let me discuss about this memorandum stock. Hello, what is that? Memorandum stock account. Now, what is this memorandum stock account? Very simple. Let us say, sir, I am a big organization having many departments. Suddenly, from the head office, somebody came here and started asking, oh, is there any theft or anything happening in any departments, or every department working well? I'm asking like that. Hello, every department working well, or any jadus within the department taking away the stock? Hello, possibility is there. Now, like that, who is asking? Head office, main person is asking. Now, as a departmental manager, every department will have a manager. Departmental manager will be there. Now, he has to answer. Now, tell me, can they answer immediately? If he asks a question like this, can you answer? Now, no, sir, our department very good. Everything is there. Can you say like that? Or what you will say? Sir, we should compare in books what stock is there. We should compare with physically. Wait for 2 days, sir. After 2 days, I'll tell you. Just sit there. I'll just value and tell you. Will we say like that? No. So, please understand. Not always checking books of accounts and physically alone will help you to control the stock, sir. Now, preparing a separate account like this, what? Memorandum stock, will help you to understand that there are no abnormal losses. Something I have said. It is going to behave like a stock control account. Which account? It will help you to understand that stock is there within your control. In other words, every stock is there with you only, organization only. Nothing has gone anywhere. Oh, you could understand. Okay, anyway, first of all, usually stock related items where we see, sir, I think we see in trading account. Am I right or no? Now, in trading account, what are the items we write, sir, usually? In trading account, what are the items we write? 2 opening stock, 2 purchases, buy sales, buy closing stock. Like that we write. Am I right or not? 2 GP. Now, the point is, sir, using trading account, can I do that stock reconciliation? So, please understand, opening stock, plus purchases minus sales should give you closing stock. Should give you or not? Should give you in terms of units. Hello? Should give you what, sir? In terms of units. Am I right or not? Sir, opening stock 2000 units, sir. Purchased 5000 units, sir. Suppose sales is 4000 units. Suppose closing stocks is 3000 units. Now can you say every stock is there within the organization or not? Total 7000, 2000 plus 5000. Out of 7000, 4000 sold, 3000 is there. That means can you say everything is there within the organization or not? Yes. We can do like this, sir. But the problem is we are not writing all the units at the same price. Sir, please understand. We can do the reconciliation. But the problem here is if we write everything at the same price, then this reconciliation can be done. But are we writing at the same price, sir? Please understand, if I write everything at the same price, this ensures that loss is there. Suppose closing stock is 2500. What you will say? Total 7000, sales is 4000, closing stock only 2500. 500, somebody has taken away. Hello? 500, somebody has taken away. We cannot understand it. So now by looking at this, you can understand or not? Yes. But the problem here is, we don't prepare trading account in terms of units, sir. We always prepare in value. And that too, if all these four are multiplied with same price, I can do reconciliation. But am I multiplying with the sale price? No. Suppose cost is 20, selling price is 25. You will multiply all of this with 20, but this one with 25. Difference will be there. That difference only we are writing as GP. Hello? That extra price only we are writing as GP. But one thing I can say, this account cannot help us to reconcile our stock. Am I right or not? If all the items are recorded at same prices, will this account help us? If all the items are recorded at same price, will this account help us? Answer is yes, and that is what we will do in memorandum stock. And that is what we will do in memorandum stock. Let me show you what will happen in memorandum stock account. We will write two purchases. First we will write two opening stock. We will write two purchases. We will write buy sales. We will write buy closing stock. But what is the big difference between a trading account and a memorandum stock account is, in trading account, sales alone will be recorded selling price, remaining all at cost price. That's why only it does not help in stock reconciliation. Now what we do, every item we will record at selling price only. Every item we record at selling. If every item is recorded at the same price, now stock reconciliation can be done or not? Now some of you may ask a question. How you can record purchase at selling price? How you can record opening stock at selling price? Don't ask me. You cannot ask me why this dummy account. Hello, you cannot ask me like that. This is what, sir? Dummy account prepared for a specific purpose. That purpose here is stock reconciliation. Now I am going to record everything at selling price. If everything recorded at selling price, it should tally. Now tell me, opening stock plus purchases should be equal to sales plus closing stock or not? It should be equal because everything is recorded at the same price. If at all it is not equal, what it tells me? If it is not equal, the difference might be, the difference might be something taken away. Because here what we have said, if 2500 only there, 500 is taken away. But now when we are taking everything recorded at the same price, then definitely the difference might be what, sir? The difference might be somebody have taken away. That is the abnormal loss. In this way, can we find that, can we have a control over stock account or not? Yes. Sir, have you understood? I think now you might have learned these aspects only as entries, sir. For recording opening stock, you might have learned memorandum stock account debtor, two opening stock, of course, along with markup for purchases. Memorandum stock, two purchases along with markup. But if you learn like journal entries, you will get a very big doubt. Purchases, why we are crediting? Hello, if it is purchases, purchase should be debited. Why we are crediting? Purchases. There only first bullet will be there. Every time bullets only will come. Hello, no answers will be there. That's why if you learn in this way, sir, you'll have a full clarity why you are having entries like that. Don't learn through entries. Learn through only the ledger and the purpose. You'll remember for long. Sir, is that clear? Now we will not record it cost, we'll record at selling price, which includes that loading, or we'll also call as markup. Sir, is that clear, sir? But let me give you some small adjustments which you may get in the course, sir. When you are preparing this memorandum stock and markup, some adjustments you may get, sir. What are those adjustments? Sir, tell me one thing. If I want to write opening stock at selling price, do you know actual selling price? If I want to write opening stock at selling price, do you know how this stock will be exactly sold in the market? At what price this opening stock will be sold? Do you know it? Nobody knows. So it is done only at an estimated basis. It is done what, sir? Only at a estimated basis. Sometimes it may happen like this, sir. Actual normal selling price is 25. Usually you sell your items at 25. That means you will record 20 plus 5. Of course, per unit I am telling. You will record at 25. But the problem is, you have understood. This year competitor came. A good competitor came. I should reduce my prices. Hello, are you getting the point? I know clearly that I am not going to sell at 25. I am going to sell at only 23. What is my selling price? I am going to sell at only 23. Now when you are selling at 23, if you have written here 25, reconciliation will happen, No. So that's why what we will do, whatever extra profit you have recorded, suppose you thought to sell at 23, 2 rupees is considered as marked down, and this you will record as by marked down. As a result, that means in opening stock, profit also will be recorded at 5 minus 2, 3 rupees only. Now sales also will happen at, we assume 23. As a result, now reconciliation will happen. Sir, have you understood what I am telling? So if at all there is we are expecting a markdown on the stock, opening stock, because we feel that sales may be at a lower value. If you feel that sales is at a lower value, now bring down that opening stock also at a lower value. How to bring? Write down on the credit side by markdown. Now to that extent, this price also will become 23. Now reconciliation will done. Our only aim, record everything at a single price. Hello, our only aim, record everything at a single price, then only reconciliation will happen. If we have recorded 25, and if you feel that some profit reduction may happen, you are unable to sell at 25, then record that markdown to bring it to 23. Sir, is that clear? Sometimes it may not be opening stock. For the goods purchased during the year also, what may happen is, you may sell the goods, you may sell at lower value. Suppose, to increase the demand for your products, you only thought voluntarily to sell at a lower price. Reasons doesn't matter. Price should match for us. Hello? So you thought to sell it for 22, let us assume. So already you are recording at 20 plus 5. Now immediately you will write a markdown of 3. By markdown 3. Whatever is the reason, sir, if you are trying to sell at a lower value, try to make this profit also at that reduced price. So reduce that markdown so that in the opening stock or purchases also, corresponding profit only is getting recorded. In other words, both sides price is being same, then eligible for reconciliation. Sir, have you understood? Suppose sometimes abnormal loss will be there, but you know it. Hello? Fire occurred, sir. Stock destroyed. You will know it or not? Yes. Employee entered, sir. Stock taken away, sir. Will you know it, sir? No. Please understand, both are abnormal loss only. Employee taking away stock, fire taking away stock, both are losses only. But if fire takes away, you know it, sir. Employee takes away, he will never make you know. Sir, are you getting the point? So thereby you have to be ready, sir. You have to check everything. Now what I say is, if you know an abnormal loss which has already occurred, something I have said. If you know an abnormal loss already occurred, first record it. Suppose out of this here 500 is loss, no? 2000 plus 5000, 4000 is sales, 2500 is closing stock. Suppose I have said, and there is an abnormal loss of 200 units. That means already known, sir, that 200. Now what you require, you want to know about balance 300. You want to know about balance 300. But now tell me, that means abnormal loss should be recorded or not now? Yes. If we don't record abnormal loss, once again it will not tally. Sir, out of 7,000, this is 4,000, this is 2,500. If we write this 200 only, we can understand about balance 300. So we have to write abnormal loss at what price? We have to write abnormal loss at what price? Selling price only. Don't question, sir. Once again, why you are recording abnormal loss at selling price? This dummy account. Why we are recording at selling price? Then only reconciliation can happen. Every item has to be recorded at selling price. That's why we'll write abnormal loss also at selling price. But we will write like this. by abnormal loss at cost, by mark up the profit portion, so that ultimately it will be also recorded at selling price. In that way we will record, sir. If it tallies, it's okay. Otherwise we'll assume it's a abnormal loss. But usually in the exam, they will not talk about that abnormal loss. They will not give closing balance, and you will find the closing balance. If closing balance is not given, closing balance only will be the balancing figure. Usually in real world, closing balance should be there. Then only you can find that as a abnormal loss. Sir, discussion clear? Memorandum stock, have you understood the reasoning, sir? Pakka markup, memorandum markup. Now what is this account, sir? Memorandum markup account. Sir, I am not trying to solve every question. I am just trying to give you some difficult aspects which you may face during preparation. Right. So what is this? Memorandum markup account. Right. Very simple, sir. Let us say once again same. Head office came, some manager came from head office. He looking at all the departments, this many departments. Let us assume it's a DMart. Many departments are there. Now he want to know, out of all these departments, which department is working well? So 100 departments are working. How many out of these 100 departments, which is working very well? How could I know? One department, tell me one department which is working very well. I want to give some bonus to them, that department manager. Now how do you decide? For that you should know profit earned till that day. For that you should, the only way of deciding is based on financial performance. That too you should not take past year. So last year I have done very well, give me bonus. Hello, that year only bonus should have been given. So every year your performance only matters. So this year till now how much profit you have earned is important. Hello, what is that? This year till now how much profit you have earned is important. Now how we could find? Suppose manager asks me, what you will say? Sir, wait, I'll close the books of accounts, wait for 2 days, I'll close the books of accounts and tell the profits of all departments. 2 days may not be sufficient. Come after 1 month, sir. After 1 month, I'll solve your query. Is that correct, sir? No. Because we will not prepare trading and P&L regularly. But understand, memorandum markup is an account which helps you know profit on any particular day. If you maintain memorandum markup account, on any day if you ask me, what is the profit of this department? Open memorandum markup, there it will be visible. Hello? If you open memorandum markup, it will be visible the profit until day. So trading also will do the same purpose, no? But we will not prepare trading every day. Hello? This stock account, if we update it, markup account, if we update it, it is sufficient. It will give you the profit earned till date. How it will give you? Very simple. I will show you, sir. Sir, on opening stock, you might have earned some profit. Am I right or not? So I will write the profit on opening stock. I will just write the profit, sir. Similarly, I will write the profit portion on purchases. I will write the profit portion on sales. Sorry, I will write the profit portion on closing stock. Now please observe, I will take the profits of opening. I will take the profits of purchases. I will take the profits of closing. Balance should be what? Profits of items sold. Hello. If I write the profits of opening, if I write the profits of purchases, if I write the profits of closing, balance should be profits of items sold. That is what, no, profit earned till date. Are you getting the point? Sir, where to get this one, sir? Copy from the above memorandum trading. Stock. In memorandum stock, what we are doing? We are adding loading, no. This loading only you go and paste there. That will give you. So double effect, sir. It will help you to do stock reconciliation. At the same time, it will help you to find profit on any particular day. Now we will write profit on opening stock. We will write profit on purchases. We will write profit on closing stock. Then whatever balancing figure was there, that is nothing but GP only, profit on items sold. Suppose there are some items which are destroyed. Now on that also profit we have recorded or not? Please understand here, sir, in our memorandum markup, there are some items which are destroyed. Now what we have to do? We have to write that markup also. To markup on items destroyed. Because we want to know only the markup relating to the item sold. So thereby markup relating to every other should be excluded. from opening and purchases markup. I have to reduce profit relating to closing stock. I have to reduce profit relating to any abnormal items. Everything if I reduce, then only I'll get the profit relating to the I'll get the profit relating to the units sold. Sir, have you understood, sir? In this way, we find GP as a balancing figure. Of course, GP you can find also, sir, by preparing trading account. By preparing what, sir? Trading account. Or else there are some computations also, sir, in our memorandum markup, etc. Through the question only we can understand, sir. Now I think big time we are not having. At least just let me show you the format. Maybe that profit computation, once you look after it, you will understand, sir. Logic is simple in profit computation. If there are any abnormal items where we are selling at lower prices, first make it normal, find the normal GP, from that reduce that abnormal, then only you will get the actual profits. That is one small aspect, sir, you should know to find the profits in closing stock or the current year gross profit. Just let me show you the format for this departmental trading and markup, sir. Just wait, with which we'll close this session. Yes. Okay, sir. No. Okay. So you can maintain both the accounts simultaneously. If you are having two departments, for two you can maintain simultaneously or separate accounts. Let me show you, sir. One more thing, in the latest study material, there was one small adjustment, sir, which we are doing. Usually, we used to maintain this closing stock only at that effective price, sir. In other words, suppose we assume a reduction in the price. Suppose there are some units, 5,000 units left. We are feeling that this will be sold at only, there is a markdown required of 1,000. So then what we will do, usually we will reduce that 1,000 and it will have only net selling price. In the latest, the two, when they are having two departments, in one department question, they have continued the same, sir. But whatever logic is there, the same logic you have learned is correct. In the latest, they have done small change where they are not considering that reduction. They feel that only when it is sold, such a loss to be recorded. Like that, they have done small adjustments, sir. But only one place they have done. When we are having, there is another question where you will be having only one department, similar question. They have not done that adjustment. So logically speaking, you have to show net of that markdown only, sir. So that's only correct. I just want to show you the format, sir. Let me show you the format. Two balance brought down. For that you will add markup. Two purchases, markup. By sales you will record. Any markdowns, etc. you will record, sir. Here it is not there. Any markdowns you will record. Similarly in markup account, this is markup on opening stock. Markup on any purchases. This is markup relating to transfer, sir. Suppose one department transferred goods to another department. Now, who will sell that goods, sir? Transferee department. Suppose A transferred to B. Who will sell that goods? B. Now, B only should have profit. In whose stock profit should be there? B. Under our markup account, in our memorandum stock. So, in A, because we are transferring, eliminate the stock as well as the profit also, which you might have recorded at the time of purchases. Is that clear, sir? Now, anyway, in Khadi stock also, same opening balance, including that markup. So here also sales will record, any markup will write, any abnormal loss will write by loss of stock cost and markup value. So like that, the same concept, sir. At the end, you require that profit or loss computation, sir, gross profit, etc. Just solve one question, you will have clarity. What I have done is, just you need not by heart the journal entries. Now through this concept, you can easily remember the format. Once format is known, you need to just concentrate on that ending computation of profits. If you look at it, you will understand. Sir, clear? Okay. With this, with one last point maybe, because usually it is also asked. Let me close this, sir. One last point, one small question, usually it will be asked. Two minutes only, sir, we'll complete it. So that at least one more concept we can complete. from the chapter. Just wait. Because this is also one point which is committed as a mistake if not observed carefully. Looks simple, but some students suddenly in the examination they'll commit mistakes. This question, CRD2. Where, sir, in this question, what will happen, I will tell you, sir. Look here carefully. You will be given sales, sir. Hello, what you will be given? Sales for different departments A, B, C. Sales will be given. Value. Value itself is known. Now you don't know opening stock, you don't know purchases, and you don't know closing stock. Because only if you know these three you can find GP. But for these three you will know number of units, sir. Or what you will know is number of units, but you don't know the purchase price. But tell me one thing, purchase price will be same for opening stock, purchases and closing stock. What I say is, in this question, if you just find the purchase price, you can find balance 3. Because in the question, number of units will be given. What you should find is purchase price. Automatically you can find the GP. So main aspect is what, sir? Purchase price. Now how to find the purchase price is the question. Sales will be given. Now GP percentage will be given. Can we find purchase price? How to find? Now tell me, selling price per unit minus GP per unit will give you cost price per unit or not? This is correct. This is correct. Sales minus GP gives you cost per unit. Sales minus gross profit give you purchases in value. Sales minus GP gives you purchases in value. No. Why? Because opening stock will be there, closing stock will be there. So thereby, here for the same you are telling purchase price per unit, it is correct only. Because here it is only 1 unit. For 1 unit, you can say selling price minus cost price gives you purchase price per unit. Here why you are telling different? Sales units will be different. Purchase units will be different. When I say cost of goods sold, that means for goods sold only we are finding the cost. That's why sales minus GP gives you cost of goods sold. What I say is, sir, if the number of units are same, sales minus GP gives you the purchase. If number of units are same, sir, for 1 unit, selling price minus GP gives you cost price or not? Yes. If number of units are same, selling price minus GP gives you purchases. If number of units are same. If number of units are same. The problem is, in the question, you know the selling price for the units sold, sir. Now, can you find for the same units purchase value? Do you know the purchase price? Sir, for the same units, if we know sales and purchases, we can find GP, sir. Of course, sales minus GP gives you purchase. Do you know for the same number of units, what is the purchase value? No. But understand one thing, reverse I can do. What is the reverse? For these purchase units, can I find as a GP? Can I find the sales value? For these purchase units, can I find the sales value? Yes. This into 40, this into 45, this into 50 will give you what, sir? Sales value of purchased units. Now you can compare with the sales to find the GP. Now you can apply this GP percentage to find the cost price. In other words, don't reduce this sales minus this purchases. Many students used to do this, sir. Sales minus this purchase. That will not give you GP because number of units are different. So only when number of units are same, you can reduce sales from GP to get the purchase. Here, that's why in our solution you could observe, sir. Where is the solution? Departmental Accounts. Okay. Let me show you, sir. Over, sir. I'm closing. You could observe, I have found this is sales value, sir. For what? Purchased units. Hello. For what, sir? Purchased units. 30,000 into whatever given in the question. So it is 30,000. Where it is it? Okay. Okay, CRD2, right. That's right. 30,000, sorry, not 30,000. 6,000 into 40 plus 12,000 into 45 plus 14,400 into 50 will give you that 15 lakhs. Similarly, purchase we know. For the same number of units, now we know purchases, sales. Now we can find this as GP. We can find GP ratio, apply for selling price because they have said GP percentage is uniform for each department. Then you can find the purchase price. Once you know purchase price, you can fill everything. the common mistake is you will not consider the sales value of purchased units concept and you used to reduce sales minus purchase. So if you do this, that's all. Sir, is that clear? Hope you have got some good value addition from this 4 hours. The balance session also will continue with the balance chapters. Okay, right? Thank you. Bye-bye. Come down. Okay. Shall we make a start? Shall we make a start, everybody? Okay. Now, look here carefully. Let us enter into another chapter, sir, which was the part of our set accounts from incomplete records, departmental and branch. These three together will be asked as a question usually. Sometimes one extra question also. Now anyway, let us start with branch accounts. Maybe when you are hearing the regular chapter, in other words, branch accounts in your regular classes, now you might have observed how many hours discussion might have been done. So it was so huge, number of topics will be there. Actually, we divide into two chapters, dependent and independent. For ICAI, only one chapter called branch accounts. Now the chapter is so big and many topics are there. So it looks huge and many students feel it difficult and leave it for exam also. Now let me tell you one thing. Sir, when you feel any chapter is so big, at least look at the areas in which they are asking examination. They are asking in examination. Usually in branch accounts, though there are many concepts, from 5 or 6 limited concepts only they are regularly asking the questions. 80% of the times they are asking just from 5 or 6 concepts. The balance 20% they are moving to any deep area. So when we are not having time, it is wise to prepare at least those important areas. Now what I am going to do is, I am also going to cover those important areas. Now what are those important areas, sir? Let me tell you, usually in examination, either they will ask you to follow debtors method. Which method, sir? In the case of dependent branches, the debtors method, or stock and debtors method. Trading and P&L, for learning sake we will learn it, but none of the examinations they will ask it, sir, usually. Most of the times they concentrate on debtors and stock and debtors method. This is what from dependent branches. When I come to independent branches, usually they focus on, one is, there will be one question, sir, on inter-branch transaction. In other words, received from that branch, sent to that branch, acceptances sent, acceptances received. Like that one in tabular format, we will write a single journal entry. So that question, and reconciliation entries will be there. Reconciliation or rectification entries also we can say. There will be a question which covers rectification entries. And at last, foreign branches, both integral as well as non-integral. Sir, these are the topics which are frequently asked in exam. I don't say that just by preparing these concepts you can answer in the exam always, but 80% of the times you will be able to answer. 20%, unless you prepare full chapters, no, you will not be able to answer. But let us leave that, sir. When the chapter is huge in size, at least we should be accurate in important aspects. So these 5 are the very, very important areas in which most of the examinations they ask the questions. So let me focus on these 5 aspects only. Are you getting the point, sir? So let me start with first one. Now these 2 aspects are from dependent branches, sir. Whereas these aspects are from independent and foreign branches. So first, Let me start with dependent branches and that too debtors method. Okay. Under debtors method, what we will do, sir? We will simply prepare a branch account. Hello, what we'll do? We'll simply prepare a branch account. Only one account we'll prepare, that too the branch account. Now, why we prepare this branch account, sir? Sir, whatever method we follow, may it be debtors method, may it be stock and debtors method, may it be final accounts method or trading and P&L method, ultimately our aim is to know the performance of our branches. Ultimately our aim what, sir? To know the performance, how well they have performed. So through debtors method also, what we are going to learn is performance, nothing but the profits of the branch, how much profits they have got. But in the case of dependent branches, who will maintain the records? Not the branch, but head office itself will maintain the records by maintaining in the form of a single account called what, sir? Branch account. What is that? Branch account. Now, how we will record transactions in this method? Now, let me tell you one thing, sir. There is one simple logic involved in debtors method. What is happening in debtors method? Now, if you understand that logic, whatever twists they give in the examination also, you will be able to understand. Now, what is that logic, sir? Let me tell you, in debtors method, to find the profit or loss, we will apply capital comparison method. Something I have said. What I have said? In debtors method, to find the profit or loss, we will apply the capital comparison method which you have learnt in accounts from incomplete records. Morning I have not discussed it. Now this will be the part of the discussion, sir. Anyway, we are discussing now that capital comparison method. Do you remember that capital comparison method, sir? Now how do you find profit or loss in capital comparison method? Generally, we know one thing, sir. Opening capital, hello, plus profit, hello, everybody. Opening capital plus net profit minus drawings should give you what, sir? Closing capital. Am I right or not? Of course, any additional capital we will add. Opening capital plus profit plus additional capital minus drawings should give you what, sir? Closing capital. This is not capital comparison method also. Simply what you have learnt in your childhood, foundation level itself, you might have learnt capital computation like this in partnership also number of times. Opening capital plus profit plus additional capital minus drawings gives you what, sir? Closing capital. I'll just change the equation because I want to find profit. What I want to find? Profit. Can I write like this? Closing capital. We will add drawings. We will reduce additional capital. We will reduce opening capital. We will get profits. Am I right or not? Simply I have changed the equation where I want to find net profit. Except this, I have just brought all these things to that side. I have got the net profit. In fact, this method is popularly called as capital comparison because we are mainly doing the capital comparison only. Opening capital, closing capital. Like that, some comparison is being done. So popularly, this method is called capital comparison method. Sir, this method clear? Now let me show you how the same method is there in our debtors method. In debtors method, we are applying the same, sir, to find the profit or loss. How, sir? I'll just tell you. Look here carefully. What we are writing here, sir? Opening capital. Hello, what is that? Opening capital. Please understand, here opening capital means capital employed in the business. Now please understand. Now here we are feeling that branch is our business. We are investing our amount in the branch. Hello, we are investing our amount in the branch. How do you invest amount in the branch? In the form of assets, or you will give some cash. Either you will place cash or you will place any assets. Am I right or not? So that is what, please observe carefully, I will write as opening balances of various assets, sir. Two various opening balances, which is stock, maybe cash, maybe any other fixed assets. This gives my opening capital. Accepted? What I am writing there? Opening capital. Now similarly, I think in this method we will also write closing balances, sir. By closing balances of my stock, my cash, my fixed assets. This indicates what, sir? Closing capital. Sir, in debtors method, you will write opening balances of various assets. Of course, liabilities, sir, because net assets only we consider. Here also, closing balances, of course, liabilities also. So, opening balance and closing balances, this I want to call as opening capital. This I want to call as closing capital. Sir, accepted? Next. Sir, during the year, you may introduce some additional capital, no? During the year, you may introduce some additional capital. How do you introduce any additional capital? That means once again, afresh you have given some cash to the branch or goods to the branch. Sir, are you getting the point, sir? Usually, we bear the expenses of branch directly. Now look here carefully. If you have given any goods, is it not some investment in the branch? Is it not like additional capital during the year? Yes. So if there are any goods sent to branch, hello, are you getting the point, sir? If there are any goods sent to branch, of course we are writing branch account, so maybe you can write goods received from head office also. Are you getting the point, sir? If there are any goods sent or sent to branch, or you can also call received from head office, that you will record. Similarly, whenever that goods are returned, hello, that means you are giving back the goods, or after doing some sales, sir, you have given some assets, you have given some cash. Using that, what the branch will do? They will do the business and they will generate the sales. Out of the sales, what they will do, sir? The amount they will return back to the branch, sorry, head office. Are you getting the point, sir? Now, if they have remitted any cash, hello, what is that? If they have remitted any cash, that means given back, or any goods were returned, hello, what is that? Any goods were returned. Now I can say this is like drawings. Hello, what, sir? This is like drawings. Now this is like additional capital. Of course, not only goods, sir. Suppose you bear any expenses for branch. Suppose you have incurred some expenses like salaries, rent, any rent, etc. Now, if you are incurring for branch, that means once again you are spending some amount on the branch. If you are incurring some expenses, once again you are spending some amount. Or if you have made directly purchases, now for branch, once again you are spending some amount on branch. Now all these things are called as additional capital. Sir, are you getting the point? Now we will write the balancing figure as the profit, sir. This is what we prepare under debtors method. I will show you the format. Maybe you might have seen the format like this, sir, where we write opening balances, closing balances, goods sent or received, similarly goods returned, cash remittances, cash sent, similarly any expenses incurred by head office. Then you will write balancing figure as the profit or loss. Now you will find this as profit or loss, but what I am telling is how you are getting that as profit or loss. Logic behind that I am telling, sir. It is which method which is being applied here? Capital comparison. You look here, what is happening? Closing capital, we are adding drawings, we are reducing opening capital, we are reducing additional capital. Ultimately, we are finding the net profit. So in debtors method, what we are applying is capital comparison method. In this way, we prepare in debtors method. This is the basic theme of the debtors method. Sir, have you all understood? Sir, everybody, is that clear? Already you might have learnt in one or the other way, sir. I'm just giving you the logic for that. If you have learnt it, very good. If you have not learnt it already, now learn. Hello? Is that clear, sir? Now, let me proceed. Let us proceed, sir. Look here carefully. Sir, in this way we apply debtors method, but just knowing the format itself is not sufficient, sir. We should know some adjustments which may be there in the questions. Because in one question, one adjustment they will consider, in another question they will not consider. Like that, some issues will be there, sir. Let me clarify you few points for debtors method. Look here carefully. Sir, in debtors method, when we write in branch account, what transactions we write is only those transactions which occurs between head office and branch. Something I have said. What we'll write, sir? Only those transactions between head office and branch. Any other transactions we don't record, sir. That means, suppose branch had done some sales, branch had done some purchases, branch done sales, purchases, branch incurred any expenses. Now, will we record, sir? No. Now, all these things will not be written. Only the transactions between holding. If you send goods, if you send cash, if you receive cash, if you receive goods, now all those things will be written, but not any what, sir? Transactions done by branch. Sir, is that clear, everybody? Now you may get one more point. Sir, in some questions, they may say salaries incurred, rent incurred, but still they write in debtors method. Now why, sir? Let me give one clarity, sir. Sir, in branch, we generally incur various expenses, sir. If branch expenses incurred by branch only, it will not be there in debtors method. Hello, are you getting the point, sir? If branch expenses incurred by head office, that means indirectly here the transaction between head office and branch only, sir. If you are incurring the branch expenses, it is like you investing in them only. In such a case, it will be recorded. Maybe at the beginning of the question, they will mention all the expenses at the branch will be met by head office. Like that, they will mention, sir. If they have mentioned like that, whatever expenses are there, you will record in debtors method. Otherwise, you will not record in debtors method. This is one point you should remember, sir. Only those transactions between head office and branch we will record, sir. So if it is done directly by branch, we will not record. Similarly, branch expenses whatever are there, if incurred by branch, we will not record. If incurred by head office, we will record. Sir, is this point clear, sir? This is also one of the issues, sir. Next step. Sir, everything is well and good when we are moving in cost method, which at cost price. What is that? Cost price. The same can be maintained at invoice price also. Hello, what is that? The same can be maintained at invoice price. Now, if you are recording this at invoice price, only one change will be there, sir. Entire procedure will be same. Only one change will be there. What is that change, sir? Wherever goods related entries are there, for that we will apply loading. Something I have said. Please observe carefully. What I am telling, sir, if recorded invoice price, what you will record at invoice price, sir? Goods only. Hello, will you record expense at invoice price? Will you record any other things at invoice, opening balance at invoice price? Of course, please understand. Now, opening stock, etc. may be recorded. Opening cash will be recorded at invoice price. No. What will be recorded at invoice price only is stock related items. What are the stock related items you will record? To opening stock. That is stock related item. By closing stock. Similarly, to goods, whatever goods received. Similarly, by goods returned. So usually these are the items in which are recorded at invoice price. Tell me, when we will get proper net profit, sir? If they are recorded invoice price or cost price? Cost price. If they are recorded invoice price, we will not get proper profit. That's why what we'll do to ensure that we get the proper profit, whatever extra amount was there other than the cost portion, that means whatever loading was there, we will reverse. Suppose opening stock is recorded at 1 lakh plus 20,000 is loading, 1 lakh 20. Then we will immediately write by loading on opening stock, by opening stock reserve. Like that we will write by opening stock reserve 20,000 so that this loading will be removed. Similarly, closing also. We will write to closing stock reserve. Whatever loading was there, that loading we will remove so that even for goods sent also, even for goods returned also, for everything, we will remove the loading by writing on the opposite side. Hello? By writing on the opposite side, we'll remove the loading. Once we remove the loading, what will happen, sir? Then everything will be at cost. You can complete your procedure of finding the profit or loss. Sir, have you all understood, sir? That's all. These are the main points in debtors method. Let us quickly solve a question. Let me show you a question, sir. Okay. This is question number 1, sir. I'll just open the solution and show you simultaneously. Now look here, sir. Here the invoicing is done at what, sir? Cost. The goods are sent at cost. Head office paid all the branch expenses from its bank account except petty cash expenses which were met by bank. Okay. The following is the summary of the transactions entered into at a branch. Now look here carefully. First, opening stock is given, opening debtors is given, opening petty cash is given, where we'll write 2 opening balances. We'll write all these 3. Similarly, goods sent from head office, that means received for us, goods returned. Sent we will write on the debit side, returns we will write on the credit side. We are maintaining at cost only, sir, so no loading. Cash sales and credit sales, will we record, sir? No. Hello? These are done by branch, sir. We will not do anything. Next, allowances to customers, discounts to customers, everything not between holding and subsidiary will not be recorded. Bad debts also not recorded. Goods returned by customers also not recorded. It should be between holding and subsidiary. Think one point, is it an additional capital or drawings? Because already opening capital, closing capital over. It should be either an additional capital or it should be a drawings. Then only we will consider, then only we can get net profit. Now these will never contribute as additional capital or drawings. Next, salaries, wages, rent, rates and taxes, sundry expenses. If they are incurred by branch, we don't record, sir. But because clearly given head office have paid all the branch expense, now we'll record all those expenses to bank, salaries and wages, rent and rates, sundry expenses. So discussion clear? The next, whatever closing balances, of course, cash received from debtors. This is also not between holding and this is also not between branch and head office, so not required. Then all those 3 closing balances has to be recorded. So we'll record all the 3 closing. So that's all, everything is recorded, sir. Now collection, whatever cash remittance, it has to be recorded. Hello, what is that? Cash remittance. Now here, if you observe, you have to always find cash remittance. Have they given any cash given to, cash remitted to head office, have they given, sir? No. But please understand, when you have got something, drawings should definitely be there. You have got something, sir. If it is not there in the closing, drawings should be there. Please understand. Now you have got cash sales, but is it lying in the closing balance? No. In fact, they have said clearly, only petty cash will be there with the branch. All the cash collected by the branch was banked on the same day to the credit of head office. That means whatever received by branch will be sent to head office. So cash sent to head office has to be recorded. What will be sent, sir? Cash received. What is the cash received? Either your cash sales or collection from debtors. So together, cash sales plus collection from debtors, 17,500 plus 28,500 will be nothing but the cash remittance, that we will write cash sales as well as cash from debtors. This we will write as cash remittance. Once we record all those things, we will get the balancing figure as the net profit. Sir, have you understood this debtors method, sir? So these are the main points, sir. Just look at this cash remittance. Sometimes they may not say in the question clearly, but please understand, if you have collected cash, if it is not there in the closing, definitely that cash might have been remitted. Some questions you need to take that assumption that cash was being remitted to the head office, because then only proper drawings you can indicate, otherwise proper net profit cannot be computed. So hope everybody have understood. Shall I proceed to stock and debtors method, sir? Sir, if it is invoice price method, I have said you, only for this loading will be reversed. Similarly, for closing stock, loading will be reversed. Similarly, for goods sent, loading will be reversed by writing on the opposite side. Similarly, for this 1000, loading will be reversed by writing on the debit side. Just the loadings will be reversed, sir. Nothing new if it is at invoice price. So let me move to the next method. What is that, sir? Stock and debtors method. Okay. So what we will do in stock and debtors method, sir? See, whether it is debtors method or stock and debtors method, ultimately everybody wants to know profit or loss. But they want some detailed records. If anybody wants some detailed records, because in debtors method, what we are maintaining? Only opening balances, closing balances, records between head office and branch. No other records we are maintaining. If we need some detailed records, just like all the transactions happened at branch, like branch sales, maybe branch expenses, then it is better to go for another method called as stock and debtors method. In this method, we maintain in a detailed manner by maintaining more and more accounts. What accounts we will maintain, sir? Very simple. For remembering, I will tell you, sir. Generally, in a balance sheet, what are the items, sir? Stock, debtors, cash, fixed assets. Am I right or not? Now, similarly, capital, P&L, liabilities, etc. will be there. Now, I can tell you what are the items we maintain here. So, it will be branch cash, because we record these details of branch. That's why we maintained all these branch items, sir. One is branch cash, the other one is branch debtors, the other one is branch stock, the other one is branch fixed assets if required. Similarly, branch P&L. Hello, what is that? Branch P&L. Now, in addition to this, if there are any branch expenses, hello, what is that? If there are any branch expenses, we will maintain branch expenses. And one more last point is, because we are recording in head office, please understand, whatever goods we are sending to branch, it is goods from where, sir? Where you have got that goods? If you are sending some goods to branch as a head office, from where you have got that goods, sir? Is it manufactured? No. Generally, you might have purchased. So, generally, such goods sent to branch one or the other time to be adjusted against purchases. Because head office might have done some purchases, sir. Out of that purchase only they are sending some goods, no? So, that goods sent has to be adjusted one or the other day against what, sir? Purchases or trading account. We'll write either buy goods sent to branch, or here less goods sent to branch. That's why we maintain another account also called goods sent to branch. Sir, is that clear, sir? Like this, totally 7 accounts are usually maintained. What are the 7 accounts, sir? Branch stock, branch debtors, branch cash, branch fixed assets, branch P&L, branch expenses, goods sent to branch. But of course, depending on the question, if they have not given some information, suppose fixed assets information not given, then we will not maintain branch fixed assets. So, goods sent to branch, sometimes they may not ask in the question, then you may not write goods sent to branch. So, if they have asked to prepare specific ledger accounts, you will prepare only that. If they don't ask, we will try to prepare all the 7 accounts, because sometimes they will ask in the question to prepare necessary ledgers under stock and debtors method. They'll simply use this sentence. What is that? Prepare necessary ledgers under stock and debtors. Then you should know what ledgers will be prepared. So these are the ledger accounts that will be prepared. Sir, have you all understood, sir? Okay. Let me deal with each of these ledger accounts, sir. Most of the ledger accounts will be very simple, just like you maintain your normal accounts, sir. So let me show you one by one. First, what are the accounts we are having, sir? Branch stock, then we'll be having branch debtors, then branch cash, branch expenses, branch P&L. So these are usually very important accounts, sir, out of the 7. Here also, it is always better to open all the accounts simultaneously. Something I have said. Just like in our accounts from incomplete records, here also always better to open all the accounts simultaneously and follow the double entry principle so that you will never go wrong. So now let me tell you, sir, how the branch debtors account will behave. How a normal debtor will be there? 2 balance brought down, 2 sales, by collection from debtors. Similarly, hello, we'll write by discount, by maybe any other bad debts, everything will write or not. Same way, branch debtors also will be there. Are you getting the point, sir? How we will record 2 balance brought down, 2, what we'll write? Sales. Actually, we'll write what, sir? Sales. Here, generally, we'll not use the word sales, we'll use the word stock. Which account, sir? Branch stock account. Instead of sales, we use the word branch stock account. Because we want some stock reconciliation, etc. I'll tell you, sir. So thereby generally we write which account, sir? Branch stock, because ultimately whether sale or stock, good is going out, asset is going out. So thereby we have to credit it. Are you getting the point, sir? To branch stock. This is for sales. Then once again, you will receive the cash, sir. If you receive the cash, by cash or branch cash, like that you will write. Similarly, what you will write, sir? Any bad debts, any discounts, any other expense, any other things you write in debtors, you will write by balance carried down. Now these expenses, these are the expenses which are considered as branch expenses, sir. So usually you write once again, you will transfer this to branch expenses, to bad debts, to discounts, and any other expenses you are having, to salaries, to rent, like that, whatever expenses branch is incurring. Sir, now I am not telling that transactions between head office and branch. Everything will be considered. So this we will transfer to branch P&L. Are you getting the point, sir? This we will simply close them by transferring to branch P&L. Now please understand, in some questions what they do is, instead of writing here bad debts, once again transferring here to branch P&L, directly they will write by branch P&L itself there. Sir, are you getting the point? Instead of writing here bad debts, discounts, once again transferring later on to branch P&L, if you want comfortably, you can write directly there only branch P&L. Nothing wrong. It's just a combined entry approach. Okay, everything is okay. Now, sir, what we should learn? Sir, branch cash account also common. To balance brought down, any cash received due to cash sales or collection from debtors, any cash paid, remittance to head office we'll record, we'll get the closing balance. Branch P&L, for that first we should know branch stock account. In fact, branch stock account is the main thing that should be discussed here, sir. What is that? Branch stock account. Now let me discuss the branch stock account, sir. Look here carefully, everybody. Sir, in the case of branch stock account, what we record here, sir? Very simple. As usual, we'll write the opening balance, to balance brought down. Similarly, any goods sent, from head office, that we will record goods sent from head office. If there are any goods returned, so by goods returned. If there are any sales, usually we have purchase and sales, sir. Here we have goods received from head office and sales. Are you getting the point, sir? So sales, what we'll write, sir? By branch stock. Sir, if it is cash sale, what is that? By branch cash. If it is cash sales. Because entry for cash sales is what, sir? Cash account debtor to sales. If it is credit sales, we'll write by branch debtors. Sir, are you getting the point? Because cash sales means cash to sales. So we will write by branch cash. If it is credit sales, by branch debtors. The same thing will be reflected in branch debtors account and branch cash account also. There we will record cash sales as well as credit sales. Are you getting the point, sir? Now, then we will write by balance carried down. Now, sir, the big point here in branch stock account is, we are writing opening balance. This is recorded at cost. Goods cost. Goods return cost. Branch cash and branch debtors at selling price, sales. Balance carried at cost. Everything is recorded at cost except the unit sold to outsiders. So thereby some profit will be there. Which profit, sir? Profits on goods sold, nothing but your gross profit. What is that, sir? Gross profit. So through branch stock account, what we get under this method is gross profit. What is that, sir? Gross profit. We transfer that to branch P&L, sir. You can write as gross profit here. This gross profit where you will transfer branch P&L, or you can directly write to branch P&L. So here we'll write gross profit. All these expenses we'll record here, to branch expenses, various branch expenses. Then we'll get the net profit. In this way, we will have branch P&L account. So any goods sent to branch account means already we might have written what, sir? Branch stock to goods sent to branch. In goods sent to branch, what we'll write? By branch stock. So this will be now transferred to trading account or purchase account. If there is any returns, that also we will write. Net amount only will be transferred to purchases. In this way, we maintain goods sent to branch account. Sir, here each of the ledger accounts are simple only. It's just like regular debtors account, regular cash account, regular expenses account. Only thing you should remember is branch stock account. It just behaves like a trading account. Which account, sir? In the case of cost price method, which method? Cost price. I am not discussing invoice price. I am not discussing invoice price. If it is at cost price method, branch stock behaves like a trading account where we record opening stock, purchases. Instead of purchase, we'll have goods received from head office, sir. Then goods returned, sales. Similarly, closing stock. Everything is there just like a trading account. Balancing figure also gross profit. It simply behaves like a what, sir? Trading account. This is maintenance of all the accounts in which method, sir? Cost price method. Now, if the same stock and debtors method at invoice price. Let us see what, sir? Stock and debtors method at which price, sir? Invoice price. Now, my discussion becomes very, very simple now after I discussing in the morning session departmental accounts, markup as well as memorandum stock account. Because here, let me tell you, once again, we will have branch stock account. Instead of memorandum stock account, we'll have what? Branch stock account. Instead of memorandum markup account, we'll have another new account called branch adjustment account. Hello? Instead of those two, here we'll have these two, sir. Reflection will be same. I'll just show you how these two accounts will behave exactly similar to what our discussion was there in the morning, sir. It will be just branch stock will be similar to memorandum stock account, whereas branch adjustment account will be similar to memorandum markup account. Now, how we will record, sir? Very simple. First, we will record what, sir? Branch stock. In branch stock, so what we'll record, sir? Opening stock, but this will be recorded at invoice price. Similarly, goods sent to branch, this also will be recorded invoice price. By goods returned, this also will be recorded invoice price. By sales, of course, branch cash and branch debtors, this also will be recorded invoice price, because anyway sales will be done at sales price only, invoice price only. Then we will record by balance carried down. This also will be recorded invoice price. If everything is recorded invoice price, will there be any difference? No. This account now doesn't behave like a trading account. Hello. Now this account doesn't behave like a trading account. Now this account behaves like a stock control account. Hello, because every item is maintained at the same price. Because every item is maintained at the same price. This is no more a trading account. This behaves like a stock control account where we try to reconcile. If at all, no. First of all, it should be tallied. If it is not tallied, then we'll start analyzing the reasons. Sir, are you getting the point? It should be what, sir? Tallied. If not tallied, we'll analyze the reasons. Okay. Suppose not tallied. What might be the reason? Two possibilities are there. Hello. If it is not tallying, two possibilities are there. One is credit side greater than debit side. Second one, of course, popularly debit side will be greater than credit side. Both are possible. So let me discuss both the angles. Debit side greater than credit side greater than debit side. Third one we need not discuss. Third one is both are equal. In that case, no discussion, sir. It is a stock control account. Sir, are you getting the point? Now, first situation. Let us assume debit balance. Here it is 1,20,000. Credit balance is only 1 lakh. Sir, are you getting the point? Debit side is how much, sir? 1,20,000. Credit side is how much? 1 lakh. Now, can you please tell me what might be the reason? That means some item is missing on which side, sir? Credit side. Some item is missing on the credit side. Can you tell me which item it is? If some item is missing, can you tell me which item it is, sir? Just guess, sir. What might be that? Because stock is not getting reconciled. Everything we have recorded selling price only. Opening stock, goods received, sales, then goods returned, closing stock, everything related to goods only, and everything recorded selling price. It should tally, but it is not tallying. Credit side, some item is missing. What might be that? Loss. Hello, it is what, sir? Abnormal loss. Hello, everybody. It is what, sir? Abnormal loss. So how we will record abnormal loss? What we'll write here, sir? For abnormal loss, what we'll write? By? Hello, what we'll write, sir? By branch P&L. Shall I write by branch P&L? Shall I write by branch P&L or by branch adjustment account? Shall I write by branch P&L or adjustment account? Sir, branch P&L or branch adjustment? Branch P&L or branch adjustment? Now, look here carefully. First, before proceeding to this discussion, let me tell you the purpose of branch adjustment. Then you will get a better clarity. In branch adjustment, what we will do? We'll record the profit of opening stock. Hello, what we'll do? We'll record the profit on opening stock, loading on opening stock. We'll record the loading on goods sent to branch. Hello, we'll record the loading on goods returned. We'll record, of course, sales not required. We'll record the loading on closing balance. If we record all the loadings, all the profits relating to opening stock, relating to goods sent, relating to goods returned, relating to closing balance, now what is left, sir? Profit relating to units sold. In other words, that gives you GP. That gives you what, sir? GP. In other words, if they are maintained at invoice price, which accounts give you gross profit? Branch adjustment. Which accounts, sir? Branch adjustment. Under stock and debtors method, if we are following cost price method, which accounts gives you GP? Branch stock account. If you are maintaining under invoice price, which method gives you GP? Branch adjustment account. Sir, have you understood? Now please observe carefully. Now if you write in branch stock account by branch adjustment, that means what will be affected? Can you tell me? Your gross profit will be affected. Am I right or not? If I write by branch adjustment, which profit will be affected? Gross profit. If I write by branch P&L, net profit will be affected. Now tell me, gross profit should be affected, net profit should be affected due to abnormal loss. What is the treatment of abnormal loss? Where you will record? Trading a P&L. Where you will record, sir? Trading a P&L. Sir, usually out of the goods purchased or out of the opening stock only any abnormal loss happens. Am I right or not? Some of these goods only might be taken away by somebody. Tell me one thing, abnormal loss, trading item, trading loss, non-trading loss. Trading, non-trading. That means in the course of business, somebody coming and taking away, is it regular? Hello, if you say trading loss, somebody coming and taking away or fire coming and destroying, is it regular? No, sir, it's a non-trading expense. That's why what we do, we eliminate that expense, because when we have recorded purchases only, already we are recording the expense. Now we eliminate it by writing by abnormal loss, because it's a non-trading loss, because ultimately it is a loss only. Now once again in P&L, we'll book it as a loss as 2 abnormal loss. I think you might have seen 2 things, sir. One in trading account by abnormal loss, another one in P&L 2 abnormal loss. Reason is very simple. When you have recorded 2 opening stock or purchases, at that time only you are booking the loss. Now it is eliminating the loss in trading and booking it in P&L, because it is not a trading loss. Suppose it is normal loss, we will not eliminate as by normal loss. Why, sir? Normal loss happens in the regular course of business. It's a trading loss. When you have recorded 2 purchases or 2 opening stock, at that time only expense record will not disturb at all. We will not disturb. That's why normal loss will not be recorded separately, whereas abnormal loss will be recorded by eliminating in trading account and incorporating in P&L. Normal loss will not be recorded separately, because when you have purchased or when it is there in opening stock, already it was booked as a expense or loss. Have you understood anything, sir? I'm just moving quickly. Have you understood, sir? Okay, right. Let me continue. Now what I want to say is, sir, abnormal loss should be eliminated from trading account and should be booked in P&L. Okay, right. Now look here carefully. That means ultimately abnormal loss gets booked where, sir? P&L. Hello, where it is getting booked, sir? P&L. Now what I will do is, to the extent of loading, hello, to the extent of, because this might be there either in opening stock or goods, that goods only are getting destroyed. So to the extent of loading, because I want proper profits relating to trading account, so to the extent of loading, I will write by branch adjustment. To the extent of cost portion, I will write by abnormal loss and later on transfer to P&L. Have you understood, sir? 2 portions are there. One is loading portion, the other one is, sir, 2 points are there. One is loading by branch adjustment. This is for loading, sir. The other one is for by branch P&L, or of course you can write by abnormal loss. Later on in P&L you can write branch P&L, you can write to abnormal loss. It is okay. Now I'll tell you the reason, sir. Because in branch adjustment what we are doing, we are writing profit for everything, for opening stock, for purchases. Then for the items left as closing stock we are removing the profits. If some items are destroyed, related profit also to be removed, then only you will get profit relating to the units sold. Are you getting the point? That's why the profit relating to units destroyed also should be recorded in branch adjustment. That's why we record there for the loading portion by branch adjustment. Cost portion is the real loss, sir. It should be recorded where, sir? P&L. Because we eliminate in trading and ultimately record in P&L only. So that's why we record in P&L. For recording in P&L we write by abnormal loss. Hope everybody have understood. So this is the way of recording normal loss and abnormal loss. Suppose it is normal loss. How do you record in branch stock account? Normal loss means where it should be recorded? Trading only. We will not record in P&L. But whether it is normal units lost or abnormal units lost, any units lost profits should be reduced. Then only I'll get profits relating to the units sold. So thereby entire amount should be transferred to branch adjustment only, because relating to normal loss nothing we will record in P&L. Everything will be recorded in trading only. That's why trading means where it will be recorded? Branch adjustment. So please remember, sir, if it is normal loss in branch stock account, we write by branch. If it is normal loss, we'll simply write by branch adjustment, because entirely is a trading loss. Normal loss is what, sir? Entirely trading loss. Even that profit also to be eliminated from trading only. Secondly, if it is abnormal loss, what we will do, sir? Two portions will be there, loading portion and cost portion. If it is loading portion, we will write branch adjustment, because unless we remove profit relating to the units destroyed, we cannot get the profit relating to the units sold. That's why we transfer to branch adjustment. And this, because we have to book in P&L, we will write branch P&L or abnormal loss. First you can write abnormal loss, later on you can transfer to branch P&L. So this is the discussion relating to normal loss and abnormal loss. And now we are analyzing the reason here, sir. If at all debit side is greater than credit side, that reason might be normal loss or abnormal loss. But normal loss usually given in the question. So if nothing is given, we assume it as abnormal loss. If they give any normal loss, first we will record that. Still if balance is there, that we once again assume as abnormal loss. In that way, we will record the balancing figures. Sir, discussion clear? Everybody discussion clear? One last point was possible. What is that, sir? If credit side is greater than debit side. Hello, what is that? If credit side is greater than debit side. That means, suppose credit side is not 1 lakh, credit side is 1 lakh 50. Debit side is 1 lakh 20. Now, what might be the reason for this, sir? Is that possible? Yes, sir. Sometimes credit side might be greater than debit side. In such a case, what might be the reason? Tell me, opening stock will be recorded, invoice price, goods sent to branch, invoice price, branch debtors, goods returned, invoice price, closing balance, branch cash and branch debtors, selling price. Which price? Usually invoice price will be the selling price, because invoice price is nothing but we fix, sir, at this price you please sell. That is what invoice price. You please make an invoice at this price. That's why we say invoice price. Sometimes because of higher demand or lower demand, actual sale value might differ. We thought that this opening stock cost is 100. We have asked to sell at 25. That's why we have booked a loading of 25. Now later on, because the demand is very high, maybe festival or some other reason, we have sold that unit at 150. Now tell me, here 125, here 150, excess profit was there or not? So difference is possible or not? Yes. Sometimes credit side is more, sir. What might be the reason? The reason might be very simple. Selling price might be more than the invoice price. If selling price is more, that is extra sales for us. That is extra profit for us. Trading profit or not? Yes. So simply we write to branch adjustment. That is also our trading profit. In that way, we'll close the branch stock account. Branch adjustment, exactly said, no sir. That profits loadings alone we have to record. The difference only we'll call as gross profit. This we will transfer to branch P&L. There we write branch expense and record in the normal way. Sir, have you all understood, sir? Sir, is that clear, sir? In this way, stock and debtors method will be maintained at which price, sir? Invoice price. Now just I'll open a question. I'll not show you all the ledger accounts, sir. I have taken a lot of time. I have said somewhat slowly because some good intricate points are there. I'll just show you directly that branch stock as well as branch adjustment. Balance accounts will leave. So let me show you one question, sir, where we can look after those two. So maybe let us move to an assignment. Just wait. Assignment 5. Okay, for this question we should maintain under invoice price, sir. Every record was there. We have to maintain under invoice price. Now the page number 35. Okay, so let me show you, sir. Just I will show you only that part which is related to the branch stock as well as branch adjustment. Please look here, sir. In this question, goods were received from head office at invoice price. Returns also at invoice price. I will just record, sir. Now received at invoice price. Returns also at invoice price. Similarly, opening stock at Bangalore. So that is 4,50,000. We'll assume that is also given at invoice price. Then closing stock also at invoice price. I'll record the closing stock at invoice price. Now similarly, returns were there, sir. Sales returns. This also will be there at invoice price because usually sales also will be there at selling price. Then there is some cash sales and credit sales. Cash sales will record. Credit sales will record. Credit sales will write as what, sir? By branch debtors. So usually this will be there. Now once we have recorded all these things, we'll observe the difference. In this question, credit side is 51,90,000, debit side is short, sir. Hello? Credit side is 51,90,000, debit side is short. What might be the reason? Now itself I have said, selling price might be more than the invoice price. We'll simply transfer to branch adjustment account. Similarly, the corresponding loadings, sir, you could observe opening loading on opening stock, we'll write here. Similarly, loading on goods sent, we'll write here. Similarly, the loading on goods sent to branch, we'll write here. Similarly, the loading on branch closing stock, we'll write. I think that was missing somewhere. Okay. So here only recorded, but loadings on branch stock. Here they have recorded on a net basis, sir. 45 lakhs minus 90. Together they have recorded loading on a net basis. Now the difference will be the branch 2 will transfer to branch P&L. It is nothing but the gross profit. In this way, we will maintain stock and debtors method at invoice price. Sir, shall I proceed? Sir, everybody, shall I proceed? With this, I am closing dependent branches. The two, both methods we have discussed comprehensively, sir. So, debtors method as well as stock and debtors method. Now, let me proceed to the other aspects, sir. What are the other aspects? I have said you, one is inter-branch transactions. The other one is reconciliation or rectification entries. The last one is foreign branches. Let me tell you, unless we know this entries to be recorded in both the branch as well as head office, we cannot pass any rectification or reconciliation entries. First, I will discuss for various transactions what are the entries that will be there in head office and branch. Then only we will have the clarity. Shall I start, sir? Now first remember, we are maintaining records both in head office as well as branch. Hello, we are maintaining records both in head office as well as branch. Okay, let me start, sir. First, two things will be available. One is head office books, the other one is branch books. Now, I'll tell you one simple way to remember these entries, sir. Many entries will be there. I'll tell you one simple way. Usually, what transactions will record, sir? Transactions between head office and branch. If it is with outsider, why we have a link, sir? We'll write normally only, not a big issue. Usually, all these transactions, most of the times, might be related to head office and branch. Usually, in any journal entry, 100% we may not know, sir. At least we know 50%. What is to be debited or credited, we know sometimes. We don't know the other aspect. Am I right or not? Now, in branch accounts, if you know one aspect, if you don't know other aspect, hello, if you know one aspect, if you don't know other aspect, suppose you are recording in branch books, suppose you are writing something to bank, debit should be head office. Hello, sir, are you getting the point? Difference is head office, because you are writing the transactions between head office and branch. Head office should be debited or credited. If you are clarity on one aspect, other aspect should be definitely head office. Suppose you are recording in head office books, you have written something debited bank, credit should be branch. Hello, no big thinking, sir, required. Logically speaking, a simple way to answer any journal entry, sir, because one aspect you usually answer, sir. You can easily answer to cash or to bank or expenses or depreciation, everything you can answer. The aspect you don't know, simply transfer to head office or branch, depending on the books you are writing. Now let me read these entries. You will feel this very, very simple. Once you know this simple logic, entries will become very, very simple, sir. Just let me show you. Sir, dispatch of goods. First, let us see in head office books, sir. Then we will see in branch books. First, dispatch of goods to branch by head office. Now, simply look at one aspect, sir. One aspect should be clear. Now, we are sending goods. We are whom, sir? Head office. Goods were sent by head office. Goods will be credited. Other aspect, branch. Over. Hello. Goods will be credited. Other aspect is branch. Next, goods were returned by branch to the head office. We will receive goods. Other aspect, branch. Over. Hello. One aspect will be very, very clear. You record that. Other aspect should be branch account, because we are recording in head office book. Branch expense are paid by branch. You are not involved, no entry. You are not at all involved, no entry. Branch expense is paid by head office. We have paid. That means bank balance will go. You have paid. So bank balance will go to bank. Debit, branch. Over. Sir, don't look at the other aspect. Look at only one aspect. Automatically other aspect you can fill. Suppose outside purchases made by branch. Branch purchased means we will not have any entry. Sales affected by branch. Branch have done means no entry. We'll record only between. Collection from debtors of branch received by head office. Please understand. Branch debtors have paid some money. Who have received it? Head office. Forget about everything. You have received cash. Debit cash. Credit branch. Over. Only look at one aspect which is very, very simple. Automatically other aspect will go to branch. No big logic required, sir. Because definitely other party has to be branch only. Sir, is that clear? In that way you will never write wrong, sir. Everything will be correct only. Payment made by head office for purchase made by branch. We have done what, sir? Payment. To bank, debit will be branch. Over. Sir, is that clear, sir? Similarly, purchase of asset by branch. We are not involved. Leave it. Asset purchased by branch, but asset retained in head office. Asset retained in head office. So asset account debit, credit is branch. Over. Hello. Sir, are you getting the point? Because they are telling branch asset is retained in head office. So record the asset balance in branch only. Similarly, depreciation on above. Please understand, depreciation usually is an expenditure, sir. For control purpose, asset account will be maintained in head office sometimes. That doesn't mean expenditure also should be booked by head office. Expenditure will be booked by branch only. This is one specific point you should remember. So thereby depreciation has to be recorded in branch only, whether you have directly purchased it or branch has purchased it. Depreciation should always be recorded in branch only. But because of depreciation, what should happen? Asset balance should reduce. Am I right or not? So asset we will reduce, balance to branch. Over. Hello? Because we are maintaining asset account, because of depreciation, asset balance should reduce, balance to branch. Remittance of funds by head office to branch. We are remitting funds. So cash should go out, balance to branch. Remittance of funds by branch to head office. We are receiving funds, balance to branch. Sir, have you understood, sir? Any confusion? becomes very, very simple, sir, when you look at one of the basic aspect. Let me quickly tell you in branch books what will be the entries. Just look at one aspect, sir. Other aspect you simply transfer to head office from now onwards. Dispatch of goods to branch by head office. We have received the goods. So goods we will debit, credit, head office, over. Goods are returned by branch to head office. We are returning goods. So goods should be credited. Other aspect should be head office. Branch expense are paid by branch. So we are only doing everything, sir. So double entry required. So thereby branch expense to cash or bank. Next, branch expense paid by head office. Who have paid? Head office. But we have to record expense. Hello. Expense you debited, balance head office, over. We have not done payment, but we should record expense. You record expense, balance to branch. Sorry, head office. Outside purchase made by branch, regular purchase to creditors. Sales, regular debtor to sales. Collection from debtors of branch received by head office. Now cash received by head office, but understand for us what is the impact? Debtor balance should reduce. Debtor balance should reduce. So debtors will credit balance to head office. Sir, are you getting the point? Payment by head office for purchase made by branch. So what we have done for us, what, sir? Purchase. Hello, for us what, sir? Purchase. So we'll record purchase. So simply we'll transfer to head office. Sir, are you getting the point? Purchase of asset by branch, asset account debtor to bank. Asset purchased by branch, but asset account retained in head office. If asset account is retained in head office, what is related to us? Only purchase, payment. So we'll record to bank, balance to head office. Because asset account is retained in head office, we'll simply record payment only. Now, depreciation, we have to record depreciation, but asset is not there with us, so other aspect to head office. Whatever we know, you write it, sir. Other one simply transfer to branch account, over. Then, so head office account. Remittance of funds by head office to branch. Branch was receiving, so receive cash, other one to head office. Remittance of funds by branch to head office. You are paying, other one to head office. Like that, any entry is very, very simple. Look at only one aspect. Balance aspect should be the other party. If you are branch, head office. If you are head office, branch, the other part. Sir, have you all understood all the transactions? I think no big thinking, logics is required, sir. Simple way you can remember. But logic is required for the last one, which we call as inter-branch transactions. Logic is required for last one, which we call as what, sir? Inter-branch transactions. Now, what is this, sir? Usually, because of inter-branch transactions, many frauds will happen. Hello? Because of inter-branch transactions, many frauds will happen. Frauds may happen. How, sir? Very simple. Your head office, you are having 3 branches, branch 1, branch 2, branch 3. Let us say in branch 2 and branch 3, what happened is some stock was taken away by the branch manager. Hello, some stock was taken away by branch manager. Now look here carefully. Head office have gone to branch 1 and started checking whether all the stock was there or not. Proper verification they was doing. Stock was well and good. Branch 1 is very good. So now they are moving to branch 2. Branch 2 fools, they already know that branch 1 completed. Next they will come to branch 2 only. So by the time they come to head office, branch 2, what branch 2 people will do? They'll bring some stock from branch. Hello, they'll bring some stock from branch. Now by the time they verify, now head office also, when they look at branch 2, everything proper. So branch 2 also very, very good. Now branch 3 fools, no. So by the time they come to branch 3, they will bring the stock from the same stock to branch 3. Now when they come to branch 3, everything looks proper. Like that, though some thefts or frauds are committed, now head office cannot identify. If inter-branch transactions are done without any control. If inter-branch transactions are done without any control, so never we can control them. So thereby, what principles we follow is, if any branch transaction happened, sometimes possibility is there, sir. Head office may be at a distant place. One branch require goods immediately for selling to a particular person. Then you cannot wait for head office. Branch transactions may happen. Sometimes a particular branch require cash. You cannot wait for head office to send the cash. Branch transaction may happen. But what is the problem of head office is, branches are cheating head office. That's why what head office require is, for every inter-branch transaction, head office should be involved. Hello? For every inter-branch transaction, who should be involved? Head office should be involved. So that's why suppose there is a branch transfer from B1 to B2. Now we should not record like B1 has transferred to B2. This is not correct. We should involve head office. We'll assume that B1 has transferred to head office has transferred to books, B2. That means in head office, we have to record these entries. Sir, are you getting the point? In this way, now every transfer will be known by head office. If it is legitimate, head office will not do anything. If it is illegitimate, they'll understand intention behind them. In this way, we will be controlling. Suppose there is a transaction from one branch to another branch. Now, two branches will be there. One is supplying branch. The other one is receiving branch. Sir, are you getting the point? Recipient branch. Now, what the supplying branch will do? They feel that it is a transfer to head office. Entry will be what, sir? Head office account debtor to goods sent to branch. Is that clear, sir? Then we feel that these goods are received. B2 will feel that goods are received, sent by head office. So what they will do? Goods sent to branch to head office, because they feel that goods are received from head office. Now what head office will do, sir? Now they feel that goods are received from B1. That is B1 they will debit, sir, branch 1. Now they will receive, they will receive goods, sir. Goods sent to branch to B1. Now they are sending the goods to recipient branch. So thereby B2 to goods sent to branch. But instead of writing two entries, we write a combined entry. What is that? BT to B1. In other words, recipient branch we will debit, sir. Supplying branch we will credit. That is the net entry we pass. Sir, have you understood, sir? I could have communicated directly, but this is the logic, sir. Once you learn logic, never you will forget, sir. This is the reasoning. Now let me show you. Recipient branch to supplying branch. In supplying branch, head office to goods center. Then recipient branch, goods received to head office. Sir, have you all understood, sir? So these are the inter-branch transactions journal entries, sir. First question will be same, sir, which is purely based on goods sent, goods received. Cash sent, cash received. Same thing we have to do. Debit the receiving branch, whether it is goods or cash. They may send cash, they may send goods also. Because if the cash is sent also, same way, sir. We feel cash is sent to head office sent the cash to branch. In that way we record, sir. So thereby, always receiving branch we have to debit, supplying branch we have to credit. So here we, after recording all those things, now some branch may have debit balance, some branch may have credit balance. Everything will write a single journal entry in the case of question number 1. Sir, shall I proceed, sir? Next step. The main point is rectification entries. Let me quickly deal with this rectification entry of question number 2, sir. Sir, here for this rectification entry, I can tell you one thing. If you know the journal entries properly, rectification will be clear, sir. But these are not just rectification entries. These are reconciliation entries also. Sir, please understand one thing. To reconcile, that means to record for the organization as a whole. Just like in the case of consolidation, any mutual owings will eliminate or not? Between holding and subsidiary, any mutual owings we will eliminate. Here also, sir, whatever head office balance was there, whatever branch balance was there, both should be same. In head office books, branch balance. In branch books, head office balance, both should be same. Otherwise, how transactions will happen, sir? Both should be same. If both are same, reconciliation will happen. Sometimes both may not be same, because one party may have recorded the transaction, other party may not have yet recorded the transaction. At that time, what we will do? If one party has recorded, balance party has to record. Then only reconciliation can be done. Are you getting the point, sir? Sometimes head office may send the goods to branch, sir. It may be still in transit. Head office might have recorded, but branch might not have recorded. In which case, both the balances will tally, yeah? No. So then we will record in branch so that both will tally. Like that, reconciliation entry is also required. One for wrong recording, the other one for reconciliation. For both these purposes, entries may be required. Let me quickly discuss those. Shall we do it, sir? Within 2 minutes, we'll complete these entries. Don't worry. Branch accounts being a big topic, I'm taking 1 hour 20 minutes. Financial statements and cash flow can be completed quickly compared to branch accounts. Okay, right. So let me proceed, sir. Head office expenses 3,500 allocated to branch but not recorded in branch books. Everything please record. They are telling pass necessary journal entries in the books of branch A. So that is what they are telling, sir. Head office expenses allocated to branch. For branch it is what, sir? Expenses only. Am I right or not? So what is the entry? Expenses will debit. Balance to head office. Same logic. Next, second entry, depreciation of branch account assets whose accounts are kept by head office not provided earlier. That is not provided. Now we have to provide it. We have to provide depreciation in branch, sir. So depreciation will debit, but asset is not there with us. So thereby we have to credit head office. So depreciation to head office. So hope it is clear. Next, a remittance of 15,000 sent by branch has not been received by head office. Now, who have already recorded? Branch. Who has not recorded? Head office. Who has to record? Head office. So branch will not record anything. So in branch books, we will not record anything. No entry will be the scenario. Next, branch A incurred advertisement expense on behalf of branch B. Sir, if it is inter-branch, simply look who is receiving, who is supplying. Who is supplying, sir? Branch A. Because incurring means paying amount only. Who is supplying? Branch A. Who is receiving? Branch B. Now we are recording in whose books? A's books. What we feel? We are sending to head office sending to branch. So we feel that payment is done, but for head office. So for payment we'll record to bank, balance will debit head office. Is that clear, sir? The same entries. Next, income of 2,800 allocated to branch by head office but not recorded to income account. So difference will be head office. So head office to income. Next, branch paid 3,000 as salary to head office manager, but the amount has been debited to by the branch to salaries. So they have paid to whom, sir? Head office manager, but wrongly debited to salaries. That means they have debited as if it is branch salaries, but actually it is head office related. So thereby wrongly debited to salaries, hence salaries should be credited. So to be debited to head office but not debited. So we will debit head office, credit salaries. It is rectification, sir. Next, branch incurred traveling expense of 5,000 on behalf of other branches but not recorded in the books of branch. Our branch incurred something on behalf of other branches, sir. We feel that this payment was done to head office paid to other. So thereby if we have done payment to bank, the difference to debit to head office. Sir, are you getting the point? Just remember that one logic, sir. Entries will be very, very simple. Next, head office collected 30,000 directly from a branch customer. Now only we have received the intimation. Branch customer. So thereby debtors should reduce. So we will credit the debtors, debit to head office. Next, goods dispatched by head office amounting to 10,000 but not received by the branch till the date of consolidation. Reconciliation. Goods have been received subsequent. Who have sent head office? Who have recorded head office? Who have not recorded branch? Now we will record stock in transit or goods in transit to head office. Over. Sir, have you all understood this question? Rectification entries or reconciliation entries also very, very important. Over. Now let me move to the last concept, sir. Foreign branches. Within 8 minutes we'll close this, sir. We'll close by 4:20 branch accounts. Okay, right. Now look here carefully. Simple, sir. Foreign branches we'll divide into two branches. One is integral, the other one is non-integral. Integral means we feel it is part of our business, sir. It's just like an expansion of our business. Non-integral means we are giving amount, they are doing their own business, they are giving us returns. That is what we feel. Hello, are you getting the point, sir? Integral means it is part of our business, it is like an expansion. Whereas non-integral means we are just giving amount, they will do business, they will do everything, they will just give us the profits. That is what non-integral. Now integral, we will only supply goods, we will give whenever cash is required, we will do help various things. So that is part of our business. That is what integral and non-integral. Now we should know one point, sir. For the purpose of foreign branches, particularly for recording, items are divided into two types. One is monetary items, the other one is non-monetary items. What are monetary items, sir? Name itself conveys that monetary items refers to any assets expressible in terms of money, either receivable or payable. Either receivable or payable. That means cash will be monetary. Similarly, debtors will be monetary, creditors will be monetary. Usually cash, debtors, creditor, loans receivable, loans payable. So these are the monetary items, sir, usually. Now all other items which cannot be exactly expressed in terms of money, they are called as non-monetary items. Now, sir, what we will do in the case of integral and non-integral? Very simple. So in the case of integral operations, now we have to know just the translation, sir. Monetary items, non-monetary items, then P&L items, opening stock, etc. I should just tell you the rates which you should pick, sir. So if it is monetary, whether integral or non-integral, we will follow closing rate. Which rate, sir? Closing rate. Because it is related to money, sir. When dollar value changes, that also has to change. If it is non-monetary, if it is integral, we feel it's part of the business, sir. That means we feel that fixed asset is also our fixed asset only. If it is our fixed asset, tell me, due to foreign exchange difference, fixed asset efficiency will increase or decrease? Nothing. So thereby that should not be adjusted to asset account. For that reason, it has to be recorded only at the beginning value, not at any changed value. Because if we write at closing rate, that means you are indirectly changing asset value. Asset cannot be increased or decreased for foreign exchange difference. Its efficiency is not increasing or decreasing. That's why we write on the date of purchase, whatever is rate is there, that only we will follow. If it is non-integral, we don't feel it is our business. We have just invested money. It is just like a receivable amount for us. In that everything will be there. May it be cash, may it be stock, may it be fixed asset. We don't bother because we don't feel it is our fixed asset. So simply everything is receivable, money receivable, investment receivable. So we'll simply record at closing. Have you understood, sir? Anyway, if you have understood logic, very good. Otherwise, simply remember. Okay, right. Next, P&L items. So whether it is integral or non-integral, average, sir. Because different incomes or expense are incurred at different rates, we have to simply record at average. Opening stock always recorded at opening rate, whether it is integral or non-integral. So these are the rates at which conversion should happen. Sir, are you getting the point? And sometimes you may have head office balance, similarly goods sent to branch, etc. Now these balances, because will be simultaneously there in branch also. Hello. Head office, if you are having in head office branch, that means in branch also what will be there, sir? Head office will be there. If you are having goods sent to branch, for them is goods received from head office. That means these values will be there in rupees also. If you are, sir, let us assume you are there in one country, they are there in another country. Now, at least one party will record in rupees. Other party is foreign, one party will record in rupees. Simply take the values of the party who are recording in rupees. In other words, home country, directly you will get the values. No need of any conversion rate. In this way, trial balance conversion will happen. Sir, have you understood, sir? Let me quickly show you through a question. I'll take only one branch, sir, integral branch. Just wait, sir, I'll show you. CRD 8, sir. Okay. Everybody look here, sir. I'll just show you the rates at which conversion will happen, because most of the other things will be simple only. Now look here carefully, sir. Head office is there, 22,800. What we will record, sir? Now you could observe, sir, branch is having at Mumbai, whereas head office is, branch is having recordings in dollars, sir. Now head office in India, head office at Mumbai, sir, India. Branch is in foreign country. That's why we say foreign branch. Now look here carefully, sir. Head office account maintained at what, sir? 22,800. Simply go and look into in head office books what is the branch balance, because in head office it is available in rupees. So directly you will record it 8,60,000. So in this 22,800 head office balance, you will simply record it what, sir? Actual 8,60,000. Similarly, now sales, I'll just show you various terms, sir, directly. Now in this question, what is opening, sir? 46. closing is 48, average is 47. I'll show you various items, sir. Machinery, it is the rate on the date of purchase, neither of those three. Opening stock, opening rate 46. Goods from head office, we'll directly take the actuals because in branch it will be available, no, goods sent to branch, so same will be there. Directly we'll record 29 lakh 26. Then sales average, expenses average, debtors closing, creditors closing, cash at bank closing. So head office actual, the difference will be there. If it is integral branch, difference should be transferred to P&L because it is our exchange difference. If it is non-integral, we'll transfer to foreign currency translation reserve. So like that we will transfer. So this is the scenario, sir. So you have to be careful sometimes just in computation of stock, etc., sir. Just be careful. Look at the question. I think you can understand. Just mainly what is required is this conversion, sir. Monetary and non-monetary items. One or the other issues will be there. In this question, for suppose, one big issue will be computing the gross profit, sir. Hello, what is that? Sorry, computing the closing stock. Hello, what is that? Computing the closing stock. Because everything was available in head office in dollars. Because you know sales in dollars, you know opening stock in dollars, you know goods received also in dollars. Hello, are you getting the point, sir? So you can observe goods from head office in dollars, opening stock in dollars, sales also in dollars. Now can you find the closing stock, sir? Yes, provided sales should not be recorded at that selling price, we should record at cost price. Because what is cost of goods sold? Opening stock plus purchases minus closing stock gives you cost of goods sold. So if you find the cost of this, you can find the cost of goods sold in terms of dollars. Then we will convert into rupees, closing stock at closing rate. Now in this question, you could observe how they are sending. Goods are sent to branch at cost plus 10% and branch sell goods at invoice price plus 25. Invoice price is nothing but the price received by the branch. 100 plus 10. Sir, 100 plus 10, 110 is the invoice price plus 25% sale is being done. Can I say for branch this 110 is cost or not? So can I say this is cost plus 25? Yes. So please understand, sir, it is cost plus 25 for branch. So that means this is sale value for branch. So that means on sale how much? On cost 1 by 4, on sales 1 by 5. In that way we'll eliminate the profit. 84,000 into 1 by 5 is profit portion. 4 by 5 is what, sir? Cost portion. So this is cost of goods sold. If we reduce, we'll get the closing stock in dollars. Apply the rate, you will get the closing stock in rupees. Closing rate. So in this way we will compute, sir. That's all. With this we are closing branch accounts. Sir, discussion clear? I think I have done some good discussion, sir, covering almost many aspects. Now quickly let me proceed to two other chapters, sir. Let us try to complete it quickly. But I know branch accounts only will take some time, sir. The other aspects can be completed somewhat quickly when compared to branch accounts. Now we will take half an hour each or at least 25 minutes each for financial statements as well as cash flow statements, and we'll try to complete within 10 minutes extra we'll take, sir, so that we'll close it till 6 o'clock, sir. Break is till 6 o'clock, 1 hour. Only if we take like that, 2 chapters will be covered, sir. Otherwise, I'll take long for 1 chapter and I'll close 1 chapter. So it's up to you. So I think better to... Okay, sir. First, let us try to complete. I'll try to complete quickly. If required, only I will take. Because for standards, I will discuss 3 standards which takes 2 hours. One is AS 10, we'll discuss for 1 hour. Then AS 11 and AS 16. So 3 important standards I will discuss. So first, let me complete these 2 chapters, sir. Then we will proceed. Shall I continue, sir? Till now, we have discussed 6 big chapters, sir. 6 good chapters. Hire purchase, investments, insurance claims, accounts from incomplete records, departmental and branch accounts. Now let me proceed quickly to preparation of financial statements. Preparation of financial statements. Here in this chapter, mainly from 3 aspects they usually ask in examination, sir. What are the 3 aspects, sir? One is managerial remuneration in case of having adequate profits, managerial remuneration in case of inadequate profits, then balance sheet preparation, rarely P&L, most of the times balance sheet. So these are what the questions which will be asked, sir. Now what I will do is I'll discuss managerial remuneration both in the case of adequate and inadequate, and I'll discuss some important points while you prepare balance sheet and P&L. I will not solve any balance sheet question. I'll discuss few important points which you will usually have a confusion while you prepare financial statements. In that way, we'll complete financial statements. Let me start first with the managerial remuneration having adequate profits. Now tell me, how do you pay managerial remuneration, sir? Is it based on profits or any other things? Sir, is it based on profits or any other things? Sir, is it based on profits or any other things? If you are having profits, based on profits. If you are not having profits, then what we say, no profits, no commission, go away. Will we say like that, sir? No. Please understand, remuneration is given for managing the business. Hello, remuneration is given for managing the business. How do we decide how much business they are managing? Based on the capital employed only. How much capital they are managing, we feel that much work they are doing. So remuneration will be based on that. In simple, if they are having adequate profits, remuneration will be based on net profit. Hello, remuneration is based on what, sir? Net profit. If it is inadequate profit, remuneration will be based on the capital they manage, which we call as effective capital. Hello, if profits are there, remuneration will be based on net profits. If profits are not there, remuneration will be based on effective capital. Now, if profits are there, net profit, how remuneration will be there? Very simple, sir. We'll just look after if there is MD or whole-time director or manager, and if there is no MD or whole-time director or manager, two scenarios. Anyway, whatever is the scenario, overall remuneration shall not exceed 11%. Overall remuneration shall not exceed, sir, 11%. If there is MD or manager, for one person shall not exceed 5%. For together, that means for all those directors together, shall not exceed 10%. Sir, are you getting the point? Now, in such a scenario, other directors can have a maximum of 1%. Because already 10% is over, here we will give 1%. Because total is 11%. If there is no MD or whole-time director, because good profits will be there, for other directors will pay 3%. So these are the percentages, sir. In examination, they are not focusing on percentages. They are focusing on computation of net profit, which is as per section 198. Hello, they are focusing on computation of net profit, which is as per section 198. I will not discuss in a clear way how to compute profits, but I'll tell you simple logics which are sufficient for examination, how to compute the net profit. I'll tell you one few simple aspects. Please remember this. You can answer any question in examination, sir, relating to computation of net profit as per section 198. What are the aspects, sir? First thing, never consider any capital profits. Hello, what is that? Never consider any capital profits or losses. These things should not be considered. That is the first aspect. Second one, because you are deciding the profit for which purpose, sir? For applying percentage to decide remuneration. So that means that profit is before tax or after tax? That is before tax only, because first you will find net profit on that remuneration. After this only we will find net profit before tax. Then we will apply tax. Then we will apply any other appropriations, etc. So please understand, any tax or appropriations not to be considered, because we are finding such a profit which is before all these items. We are finding such a profit which is before all these items. First we will apply remuneration, then we will get the net profit before tax, then only we will get what, sir? Tax or any other appropriation. So clearly remember, any taxation related or appropriations given in the question, ignore it. That is not required. Similarly, any managerial remuneration also you please ignore. Sir, they may say already some remuneration paid to managers. Please understand, we are finding proper remuneration. Then you should not consider what is given. So thereby ignore what is given in the question. Hello, you are finding actually how much is to be paid. So first ignore whatever is given in the question. You will get the proper remuneration. But please understand, director's fees is never a part of remuneration, sir. Director's fee can be considered. Remuneration, managers remuneration, etc. will not consider, but director's fee, it is for attending board meetings, sir. It is not part of the limits of this 198. Hence it will be paid as usual. Hence it will be considered. At last, any depreciation you have to consider as per Companies Act. Hello, and not any as per Income Tax Act or anything. You have to consider as per Companies Act. So these 4 points, if you remember, you can answer any type of questions. Just for computation of net profits under section 198, just remember these points, sir. It is sufficient. So what is that, sir? Capital profits or losses should not be considered. Tax or appropriation should not be considered. Managerial remuneration should not be considered. Our director's fee should be considered. Depreciation should be considered as per Companies Act. So let me show you the question, sir, based on computation of net profits here. Just wait. Okay. So please look here, sir, quickly. Sir, we are not having any big time. Please look into the question. Right. Now, just tell me by looking into the question, what can be considered and what cannot be considered. Administrative expense, can we consider? Yes. Regular expense. Advertisement? Yes. Commission on sales? Yes. Director's fee? Yes. Interest on debentures? Yes. Manager remuneration? No. Depreciation? Yes. But as per Companies Act, this amount. Provision for taxation? No. General reserve? No, because that was also appropriation. Investment revaluation reserve? No, that is also appropriation. Then balance from trading account, GP, revenue profit only, can be considered. Sir, don't consider this opening balance. We require current year net profits. Okay, that is opening P&L, sir. We don't require. This is GP, current year gross profit. Subsidies received from government. Sir, subsidies are received only for your operation activities, sir. That's why we feel it is from your operations only. Because in AS12 you will know grants are of two types, revenue grants and capital grants. Capital grants are received rarely, sir, once in a life, whereas revenue grants are received regularly. If nothing is given, we assume that these are the subsidies or grants of revenue nature. That's why we consider these grants also. And profit on sale of forfeit, it is of capital nature, we don't consider. So that's why you could observe, sir, in income side, we'll consider GP, subsidies from government, all these three expenses, administrative, advertisement, etc., director's fee, interest on debentures, depreciation, remuneration alone will not be considered. So we'll apply 11% to find the overall managerial remuneration. So hope everybody have understood that question. Sir, is that clear, sir? With this, adequate profits is completed. Next, inadequate profits. Sir, in the case of inadequate profits, based on limits, will decide the remuneration, sir. If the effective capital is negative or less than 5 crores, 60 lakhs. If it is 5 crores and above but less than 100 crores, 84 lakhs. If it is 100 crores and above but less than 250 crores, 120 lakhs. If it is 250 crores and above, 120 lakhs plus 0.01% of the effective capital. So in that way, limits will be there. But in exam, they don't focus mainly on these numbers. They focus on computation of effective capital. For that, you should remember, you should understand the meaning, sir. If you know the meaning of effective capital, it becomes very, very simple. Let me tell you. Effective capital refers to capital employed in the business. Capital employed in the business for long term. This is the real meaning, sir. Effectively, how much capital you are employing in the long term business. In our business for long term, that is said to be called as what, sir? Effective capital. Right. Okay. Now let us continue, sir. Capital employed in the business for what, sir? Long term. Sir, what is part of this? What we employ in the business for long term? Can I take share capital is part of this? Do we employ in the business for long term or not? Actually, any fund employed, sir. When I say capital employed, any fund employed in the business for long term, because managers will be efficiently managing entire fund. Am I right or not? So thereby, capital is a part of it. When I say share capital, both equity as well as preference. Similarly, securities premium. Now, will this be managed by manager or not? This fund also has to be managed or not? This is also employed in the business or not? Yes. Revaluation reserve, will it be employed in the business? First of all, it is available in cash, means then employed in the business, sir. It is not available in cash, so that's why not employed in the business. Capital reserve, employed in the business, if it is realized, employed. If it is arising from sale of asset, usually it might be realized. If it is realized, no problem, sir, because capital reserve or securities premium fund you will keep idle. No, in the business, that means they are managing only. It is a part of effective capital. So any, sir, not just share capital, any fund managed, sir, is counted. So thereby any debentures, any other long-term funds also, debentures or any other long-term funds, because everything is getting managed, sir. But what you will not consider is short-term funds. Hello, what you will not consider is short-term, because effective capital refers to capital employed in the business for long-term. So thereby any short-term deposits or short-term loans, etc., will not be considered. But of course, any free reserves to be considered, say along with securities premium, any free reserves to be considered. That is also part. Free reserves in the sense general reserve and P&L. But let me tell you one thing. Just like we are considering in this way, here actually we are considering sources, sir. Balance sheet can be linked in two ways, sir. Not just liabilities and asset, but also sources and application. I can say equity share capital, preference share capital, reserves and surplus, everything is source. Fixed asset, investments, current assets, everything is application. Now if I consider this, that means I am considering this also. Am I right or not? If I am looking at source, that means indirectly application also considered. Suppose they have given the question, fixed assets 100 lakhs, will we consider? No, because where you get fixed assets from share capital or reserves and surplus, that means that is already considered for our computation. So either for take only source, only application, both don't take both. Sir, is that clear, sir? That's why we are looking only from source approach. All sources only we are taking. Sir, is that clear? One small point is, sir, suppose out of this fund, some fund is invested elsewhere. Hello, some fund is invested. What is investment, sir? Within the business. What is our definition? Capital employed in the business. That should be what, sir? Business. It should be long term. If there is any investment, is it within the business? No. So thereby, that means when we are writing share capital, are we already considering or not? Yes. So to the extent of investment done, we have to reduce, because that fund was not there in the business. So thereby any investments to be reduced. Sir, is that clear, sir? But suppose it's an investment company. Which company? If you are investment company, your business itself is what, sir? Investing. Then I say these funds are employed within the business. At that time reduction is not required. Then, sir, just like we are considering profits here, if there is any losses, accumulated losses, etc., that has to be reduced. They give in the format, sir, but frankly speaking, that format itself is wrong. These days, in reserves and surplus only, we will write, even if it is negative balance also, we will not write separately something called as accumulated losses. But if because they're in the question, we are learning, sir. So there is any accumulated losses, we have to reduce. That's all, sir. In this way, effective capital computation will happen. Simply remember this definition. You can easily remember, sir. What is that? Capital employed in the business for long term. It is called as what, sir? Effective capital. It should be for business. That's why we are not considering investment. It should be for long term. That's why we are not considering any short term loans, etc. So that is what the meaning. Let me quickly show you a question, sir, where we'll discuss what are to be considered and what are not to be considered. So observe here, sir. Share capital. Will we consider this or not? Yes. Equity share capital? Yes. Capital reserve, out of 5,85,000, we don't consider. 4,50,000 balance we will consider. Securities premium? Yes. Debentures? Yes. Public deposits? Yes. But cash credit from SBI, they are telling short term. So no. Current liability is not required because we are coming from the source approach. Current liabilities anyway is short term. So we should not consider. Assets, will we consider investment? This has to be reduced because to the extent of investment, our fund is not there within the business. Similarly, accumulated balance has to be reduced. In that way, we will find the effective capital. So discussion clear? So with this question also over, sir. So inadequate profits also completed. So let me discuss some special points while you prepare balance sheet and P&L. Special points in balance sheet preparation. Few points, usually you may commit mistakes, sir, or usually you have to apply in more number of questions. Let me tell you those points. First, I'll start with an amendment which was there, which was covered in RTP also. In RTP discussion also I have done it, sir. So what is that? If there is any current maturities of long-term borrowings. Hello, what is that? Current maturities of long-term borrowing. Let us say I have taken a loan of 10 lakhs, sir, and I have said that I'll pay in 5 installments, 2 lakhs, 2 lakhs, 2 lakhs, 2 lakhs every year. Within 5 years, every year I'll pay 2 lakhs along with interest. Now out of 10 lakhs, 2 lakhs is what, sir? Payable within 1 year. Balance 8 lakhs is payable after 1 year. Now this anyway will be shown under long-term borrowings. Where, sir? Long-term borrowings. This 2 lakhs is called as current maturity of long-term borrowing. Previously, this used to be shown under other current liabilities. Now because of the amendment, we have to show it under short-term borrowings. Sir, this discussion clear? Because it is also borrowing and which is to be paid in short term, they are showing under short term borrowings. I don't accept for it, sir, logically, because it is part of long term borrowings only. Just because we are paying short term, we cannot call it as short term. It is actually correct in other current liabilities, but anyway it is different opinion. Once it is framed, we have to accept. So thereby record it in short term borrowings. Okay, that is one amendment you should know, sir. Next, usually one of the amendments done in the questions is dividends. Hello, what is that, sir? Dividend. Dividend related, many of the times you might have seen a company declared dividend on 2nd April. Like this you will have in many of the questions, sir. Company has declared dividend on 2nd April. Actually, this is an amendment point, sir. Previously, they used to give the question like this: declared dividend at the year end. But now they changed it to declaration of dividend on 2nd April. I'll tell you the conflict behind this and reason for this amendment. Listen carefully. Generally, 2 types of dividend will be there. One is proposed dividend, the other one is declared dividend. Hello, what is that, sir? Proposed dividend and declared dividend. Once the books of accounts are finalized, board of directors will propose the dividend. Later on, it will be approved and declared in the shareholders by shareholders in the AGM. This is by shareholders, this is by board of directors. Usually in the question they used to give like this, sir: dividend was declared at the year end. Like that they used to mention, sir, previously. Dividend declared at the year end. Now many will have an opinion that, sir, current year dividend, now they declare exactly at the year end. Now that means dividend, it might be what, sir? Just proposing. It might be board of directors have declared. Like that some people used to argue, sir. That means this declaration is by board of directors. Like that some people will argue, because relating to the current year, how you can declare any dividend in the current year only? It should be declared and paid in the next year. But some argue that no, it is not the dividend related to current year. It is the dividend related to last year getting declared and paid in the current year. Like that, some people argue in such a case, it becomes a declared dividend. Sir, are you getting the point? That means the word declared is getting a conflict, sir. They are getting doubt. Is it declared by board of directors? Or is it declared by shareholders? If it is declared by board of directors, proposed dividend. Declared by shareholders means declared dividend. But frankly speaking, the word declaration will be used for shareholders only. Proposed only will be used for board of directors. But because of the conflict, some people used to call it as proposed dividend. Some people used to call it as declared. Declared means what we will, sir? We have to recognize as a liability. Proposed means we should not do anything. So because of this conflict, what ICAI thought is, let us remove the conflict, because some people are feeling that it is declared by board of directors, some people are by shareholders. They have removed this conflict by simply telling that dividend was declared on 2nd April. If dividend was declared on 2nd April, whether it is proposed dividend or declared dividend has to be recorded only in the next year, not in the current year. That means you please avoid recording dividend in the balance sheet. That is what the simple logic. Hello? Previously they used to write dividend was declared and they used to show it as a liability in the balance sheet. But conflict used to be there. Some people say it is declared dividend, some people say it is proposed, because it can be declared only by board of directors at the year end. Conflict was there. Now they have removed it by simply writing dividend at the 2nd April. When they say dividend on 2nd April, whether proposed or declared will not be recorded in the current year. Like that, they have removed the conflict which was existing. But suppose in the examination they have given dividend declared for the year ended. If they have given like that, properly record it, assume that it is declared dividend only and record in a normal way. Unless they say specifically declaration was done in the 2nd April, don't write in the next year. That means don't stop writing. You please record the dividend declared. This is one of the conflict existing. Sir, discussion clear? Okay. Next, with the last 2 points, I'm going to close the financial statement, sir, because no big time for us. Of course, managerial remuneration, good topic is discussed. Now, still two more good points are there. Sir, usually in financial statements, you will get different questions, sir. Let me show you. Now, few points let me discuss, sir. Sometimes they will give original cost and they will give WDV. Hello, what is that? Because in balance sheet, ultimately what will be given? WDV. Now they have given original cost. If they have given original cost separately, how do you present? Cost minus accumulated depreciation should give you the closing balance. Sir, are you understanding the point? This way presentation should happen, sir. Cost minus, this is what they have given in the balance sheet. This is original cost. You will write this as a accumulated depreciation or provision for depreciation. In that way presentation should happen. That is one point which is regularly applied, sir. Next, another point is, now dividend point I have cleared, sir. If they say on 2nd April, simply ignore it. No need to write. Next, sometimes they may say they have entered into a big contract for erection of machinery. These are called as capital commitments, sir. Hello, what is that? Capital commitments. Usually you will have a head called commitments and contingent liabilities, or contingent liabilities and commitments. Sir, if you have entered into a big contract, not yet executed, you have just entered, now there is a requirement to disclose to the shareholders that we have entered into a big contract. We have already committed for a particular contract. Like that we will disclose. We will not record. We will disclose. When we really execute that contract only, we will record. At the time of entering, at the time of committing, we'll just disclose. Here we have entered into a contract which is still incomplete. That means execution not done. We have just entered because of huge amount capital nature. This is called as commitments. We'll simply disclose in the notes to account, just like a contingent liability. Is that clear, sir? This is one good point that you should know. Next, 2 good points that you should know is adjusted purchases. Hello, what is that, sir? Adjusted purchase. Usually you get in P&L sometimes a point called adjusted purchases. Now what do you mean by adjusted purchases, sir? Let me give clarity. Adjusted purchases means opening stock plus purchases minus closing stock is called as adjusted purchases. Hello, what is that? Opening stock plus purchases minus closing stock is called as what, sir? Adjusted purchase. Usually in P&L, how do we present is, we present under 2 heads, sir. One is purchase of stock in trade. The other one is changes in inventories of finished goods. Hello, what is that? One is purchase of stock in trade. The other one is changes in inventories of work in progress or finished goods. These are the two heads. Here we write opening minus closing. Here we write purchases. In this way we will record, sir. But sometimes they may not give purchases and opening as well as closing separately. If they don't give all these details, suppose if we don't have details, if they simply give adjusted purchases, can you clearly understand what is purchases in it? What is opening minus closing? Can you divide, sir? No. In such a scenario, in P&L, you will not write these two heads. Instead of these two heads, you will write only one head called adjusted purchases. Are you getting the point, sir? If you are able to find these three, we will write these two heads separately. If we are not able to find those three, simply we write adjusted purchases. Because in P&L we are having two heads, no. Sometimes in the question they may not give all these details. One more thing, sir, if out of these three, if two details are given along with adjusted purchase, we can find the third one, sir. Then once again you have to write these two. If only one item is given out of these three, then two items cannot be found. Then simply we record adjusted purchase. What I want to conclude is, if you can find the details of these three, record these two heads. If you cannot find the details of these three, simply record adjusted purchase. That is one presentation point you should know. Sir, discussion clear? Then one last point with which I will close, sir. Suspense account. In one of the question, you will get a point called suspense account. Sir, there is a suspense account 40,000. For this, they will give the description. What is that suspense account? Suspense account 40,000 represents amount received from sale of some of the machinery on 1/4/2020. The cost of the machinery was 1 lakh and accumulated depreciation is 30,000. Like that, they will give a transaction. You should know how to give the effect. Sir, suspense account 40,000 represents what, sir? Amount for sale of machinery. Sometimes what may happen is, in our bank, usually this happen in finalization, sir. Bank, you will be having a receipt of 40. You don't remember that you have done that purchase. You are having a receipt, but you don't know from where you have got it. So temporarily what you will record? Bank account debtor to suspense. Sir, you have received the amount, but you don't know, you don't remember exactly what is the transaction. You will simply record what, sir? Bank account debtor to suspense 40,000. This is what recorded, sir. But actually, what is the transaction there? You could observe 1 lakh is the original cost. Accumulated depreciation is 30. That means 70,000 worth WDV asset was sold for 40,000. There is a loss of 30. What should be the actual entry, sir? Bank account debtor 40, P&L 30, to asset account 70. This should be the point, sir. First asset was there at original cost, sir. First we have to reduce accumulated depreciation from the asset. Similarly, accumulated depreciation also should increase. That means we have to adjust that, sir. We have to bring the asset to WDV. Then we have to record this P&L and we have to remove suspense account. Once we know what is happening, what we should do is, we should give the corresponding effect in our answer, sir, by removing suspense, and in that place we increase the, of course, we have to what, sir? Record the, look here, asset value has to be reduced by 30,000. P&L balance has to be reduced by 30,000. Now here asset has to be credited by 70. Like that it has to be recorded. In other words, sir, already asset is there, sir, at 1 lakh. Now first we will adjust the accumulated depreciation against the asset. Now asset will become 70. Now that was to be removed from the books of accounts. So 70 will be credited, P&L will be debited by 30. Net basis, how much is credited? 40. Instead of suspense, we will record these two in the books of accounts. We will record a sale of an asset. We will record the loss for that. Loss in P&L, sale, we will remove from the fixed asset balance. In that way, we have to record that suspense point. So these are some important points, sir, that you apply while you prepare balance sheet. I can say most important points I have covered, sir. Balance points are usually simple only. With this, we are closing preparation of financial statements. Sir, can I proceed? Sir, you may feel I am doing very quickly, but I can tell you I am covering important points, sir. You can understand also. How many aspects we are covering? That too, how quickly we are covering. We are starting at one point. We don't know when we are there. Suddenly chapter is getting completed. Okay, right. So let me proceed to last, sir, because within one day completing everything, difficult only, sir. If it is group 2, there was 2 days, sir. One for standards, one for normal chapters. Their standards we can take exclusively. Definitely we'll deal in a good manner, very good manner. But here, but their standards for one day. I am only dealing with that. There exclusively we can deal, sir. But here situation is different. So everything on one day means we have to complete it quickly. Now anyway, let us continue, sir. Let me move to the last chapter, cash flow statement. Our last normal chapter, sir. Cash flow statement. If anybody wants, you can continue after 8 o'clock. I will stay. Okay. My voice will not stay. Just wait for that. Okay, right. Calm down. First, let me complete, sir. Sir, we can close, sir. Cash flow is somewhat easy only. I am taking 10 minutes extra, sir. That's all. I will not take more. If anybody doesn't want, you can happily go out. No issue with that. So I will continue. Okay. Listen, sir. We'll take only extra 10 minutes. With that, we can complete some good aspects of a chapter. So always important. Please understand. Okay, right. Now please look here. Let me start with cash flow statement, sir. In cash flow statements, how many methods will be there, sir? 2 methods will be there. One is direct method. The other one is indirect method. Sir, direct method is very simple. In direct method, what is the format, sir? First we will write cash flow from operating activities. Next we will write cash flow from investing. Next we will write cash flow from financing activity. Under each of the activities we write receipts as well as payments. If receipts are higher, we write net cash flow from operating, net cash flow from investing, net cash flow from financing. If payments are higher, on a net base we'll have negative, hence we'll write net cash used in investing, net cash used in operating, net cash used in financing. That wordings are also important. Once we write those 3, we'll get net increase or decrease in cash and cash equivalents. For that we add opening balance, we'll get closing balance of cash and cash equivalents. With that, what is completed, sir? Direct method is completed. But let me tell you one thing, sir. In direct method, sometimes they may not give you cash received from debtors. They may not give you cash paid to creditors. In such a case, you have to prepare debtors account, because they will give opening balance of debtors, closing balance of debtors, sales also they'll give. You just need to find it as a balancing figure. Sometimes payment to creditors directly they'll not give. They'll give opening creditors, closing creditors. You have to find it as a balancing figure. In that way, we will find the payment to creditors or collection from debtors. Usually, that will be the scenario, sir. Most of the times, direct method is very, very simple. Now, let me start with which method, sir? Indirect method. In fact, issues will be there in indirect method only. So, let me start, sir. What is the format for indirect method? First of all, we will start with net profit before taxes. Hello, we'll start with what, sir? Net profit before taxes. Then we will add, we will do 3 adjustments. How many adjustments, sir? Sir, please understand, cash flow from investing and cash flow from financing are exactly same as direct method. Only change is operating activities. The format for operating activities is, we will start with net profit before tax. Hello, we'll start with what, sir? Net profit before tax. For that, we will do 3 adjustments. One is any non-cash items we will add. If there is any depreciation or goodwill written off, we will add. Similarly, if there is any non-operating incomes or expenses, we have to add or reduce. If it is non-operating expense, we will add. If it is non-operating income, we will reduce. Similarly, any working capital changes to be done. Hello, we have to add or less what, sir? Working capital changes. Now, I'll just tell you a simple trick to remember, sir. Because sometimes increase will be there, decrease will be there, stock will increase, debtors will increase, current creditors will increase, decrease, like the different things will be there. I'll tell you one simple trick, sir. Current liabilities are directly proportional, current assets are inversely proportional. Please remember this, you can easily answer. current liabilities are directly proportional, whereas current assets are inversely proportional. That means increase in current assets, what you will do? You will reduce, because increase means opposite. Decrease in current assets, what you will do? You will add. Decrease in current liabilities, what you will do? You will reduce. Sorry, this is addition, sir. We have to increase. I'll write less, add. Decrease in current liability, less. Increase in current liabilities, add, because current liabilities are directly proportional. Sir, current liabilities are directly proportional. Current assets are inversely proportional. If they say increase, we will reduce. If they say decrease, we will add for current assets. Current liabilities exactly reverse. In that way, if we do adjustments, we'll get something called as cash generated from operations. What we'll get, sir? Cash generated from operations. From this, if we reduce taxes paid, what will reduce? Taxes paid, then we will get net cash flow from operations. We'll get net cash flow from operations. This is what, sir, operating method, operating activities format. We'll start with net profit before tax. We'll add non-cash items. We'll add non-operating expenses. We'll reduce non-operating income. We'll add or less working capital changes. Then we'll get cash generated from operations. We'll reduce taxes paid. We'll get net cash flow from operations. Rest of the two are same, sir. Cash flow from investing as well as cash flow from financing. Usually, three adjustments are very, very important, sir. Whenever you solve any cash flow statements question, what are that? First one, in some questions, they will not give you computation of net profit. What is that, sir? Sorry, in other words, they will not give you directly net profit before tax. You should compute net profit before tax. Something I have said, they will not give you directly net profit before tax. You have to find it. If they give directly, we will take it, sir. If they don't give, we have to find from the differences between opening P&L and closing P&L. For that, a process is there. Can you tell me, how do we find closing P&L, sir? It is opening P&L. For that, we will add profits. Can I say I will add entire current year profits, sir? No, because in current year profits, usually it is what, sir? Before tax. Now from this we have to reduce tax. Then we will get what, sir? PAT. From PAT, entire PAT we will add? No. So we will reduce appropriations like transfer to general reserve, etc. Then we will get what, sir? Profit retained in P&L, which we call as retained profit. Actually, what will be added to opening P&L is only this amount, sir. If we add this amount, then we will get what, sir? Closing P&L. Now, what is the starting point for us, sir? PBT. What is the starting point? PBT. Now, using this statement, we will derive the PBT, sir. How we derive? Very simple. Sir, opening P&L plus retained profit gives you what, sir? Closing P&L. Now, what I will do? Closing P&L minus opening P&L gives you what, sir? Retained profit. Can I say like that or not? Yes. First, we will find retained profit like this. For retained profit, what we will do? We will add back appropriations. If we add back appropriations, what we will get, sir? PAT. Here you could observe PAT minus appropriations has given you retained profit. So retained profit, if you add appropriations, you will get PAT. For PAT, you will add tax. You will get what, sir? PBT. This PBT only you will start with in our indirect method. Sometimes they may not give directly, they'll give opening balance and closing. In such a case, find the difference, add back appropriations, add back tax. When I say tax, it is not tax paid, it is provision for tax. So in this way, you have to find net profit before tax. This is one adjustment, sir, that you have mainly. Next, shall I proceed, sir? Next, second adjustment. Now, because we have started with tax, let me tell you about provision for tax. What is that, sir? Provision for tax. You should know how to prepare provision for tax account, sir. Then only you can solve few issues. What is that, sir? Let me tell you one thing. For creating provision for tax, what is the entry? It is P&L account debtor to provision for tax. What is that, sir? P&L account debtor to provision for tax. What is created in the current year will be paid in the next year. Hello, what is created in the current year will be paid in the next year. Provision for tax to bank. In the next year, once again, this is year 1, sir. In the year 2, once again, we'll create provision for that year. P&L to provision for tax. Sir, are you getting the point, sir? In other words, when we create provision, entry will be P&L to provision for tax. In the next year, we'll make the payment. Once again, we'll create the provision for that year. So, if you ask me, what is the provision for tax format, sir? Ledger account. It is like by opening balance. Because last year, you might have created provision, no? So, whatever provision you have created in the last year will be paid in the current year. So, to bank we will write. Usually whatever is opening, that is only will be paid in the current year. And once again, what you declare, what you provide at the year end by P&L, that will be lying as the closing balance, to balance carried down. Sir, have you understood, sir? Usually provision for tax will behave in this way, sir. It is by balance brought down, to bank, by P&L, to balance carried down. Whatever is there as opening balance, that only will be paid. Whatever we have provided at the year end, that only will be lying as closing balance. But sometimes it may be possible like this, sir. Generally, suppose opening balance is 20,000, but because of lack of money, you have paid only 18,000. How much you have paid, sir? Or otherwise you have paid only 15. Current year provision is, let us say 25. Now how much will be closing, sir? Not just to 25. 25 plus 5 not paid in the last year. Closing balance will be 30,000. Sir, are you getting the point? Now opening is equal to paid. Closing is equal to provision. No. So thereby always we cannot assure like that. So thereby I'll give you one simple tip to how to find it. Sir, if in the examination out of these 4, if they give only two items. How many items? 2 items. Then you assume that opening is paid during the year, provided at the end of the year is nothing but closing. Like that you take the assumption. If they give 3 items out of these 4, if they give any 3 items, don't question the question, directly write the 4th one as a balancing figure. Hello, if they give any 3 items, find the 4th one as a balancing figure. If they give only 2 items, you will take this assumption that opening is continued as closing, paid. Now whatever provided at the end of the year is nothing but the closing balance. So this is what related to provision for tax. With one last adjustment, I am going to close the cash flow statement. As promised, I will close at 5:10, sir. Okay. What is that, sir? Sir, in some ledger accounts, majority of the ledger accounts, you might be asked to prepare fixed asset account as well as accumulated depreciation simultaneously. And you will be confused in this aspect, sir. So let me tell you one thing, sir. Sir, for maintaining fixed asset, 2 methods are there. How many methods are there, sir? 2 methods. One we will call as version 1, version 1.0. The other one is version 2.0. Under version 1.0, we will maintain 1 account. Under 2.0, we will maintain 2 accounts. In version 1.0, we will maintain only fixed asset account. Here what will happen, sir? We will record everything in fixed asset only. To balance brought down, we will write here only. To bank purchase also we will write here only. By depreciation we will write here only. By sale, by bank we will write. By P&L, this is for sale we will write. By balance carried down. Everything will be recorded fixed asset only. And I can say these balances are maintained at WDV. This is what version 1 which we follow usually. Sir, are you getting the point? Now, there is another version where we maintain accumulated depreciation. Under accumulated depreciation, what we do is, every year depreciation we will not charge to fixed asset, we will transfer to provision for depreciation or accumulated depreciation, in which case accounts will be like this, sir. To balance brought down, to bank. Now because I am not writing depreciation, I will write depreciation only in accumulated depreciation or provision for depreciation. Every year it will be having which balance, sir? Credit balance, because it will not be closed. Every year getting accumulated. So thereby by depreciation. So that will be lying as to balance carried down. Here it will be lying as by balance carried down. And usually fixed asset account will be maintained at original cost. Now this is not maintained at WDV, this is maintained at original cost. In the balance sheet, we will show these two net value, original cost less provision for depreciation, which represents the WDV. Are you getting the point, sir? Under second method, we will maintain in fixed asset only opening balance and purchases, whereas in accumulated depreciation, we write opening and closing, we will write depreciation every year. In that way, it will get accumulated. At the time of sale, then only important point will come, sir. Whenever there is any sale, now tell me, till now have we charged the depreciation to asset account? No. Then how can we compare book value and sale value to find the profit or loss? Immediately when sale happens, immediately adjust the corresponding accumulated depreciation to asset account. So thereby in asset account by accumulated depreciation, if you write like that, for the corresponding asset, now it will become at what, sir? WDV, because you are reducing depreciation. So once it becomes WDV, sale treatment is common, sir. I will write by bank, by P&L. Are you getting the point, sir? In other words, in this approach, first I will write only opening balance and purchase. Whenever there is sale, corresponding accumulated depreciation I will transfer to asset account to bring it to WDV for that asset. Then I will write the sale and I will record the profit or loss. Here, simply if I write this, automatically it will tally. In this way, the asset accounts will behave. Recording these two is not important, sir. Writing the corresponding items in our cash flow statement is important. What are the corresponding items? These two will be recorded as investing activities, purchase and sale. These two will be recorded as investing activities. This one will be recorded as non-operating income or expense in our indirect method. Are you getting the point, sir? Non-operating income or expense. This will be recorded as non-cash item. So in this way, these items will have an impact in our method, indirect method. Once you know these two accounts maintaining fixed asset as well as accumulate depreciation, once you have prepared the ledger accounts, then you can take those items and record corresponding items in our cash flow statement. That's all, sir. Important aspects of cash flow are also completed. I know I have taken it quickly, sir, but these are some chapters which can be relatively understood better, even if I discuss quickly. Okay, right. With this, we are ending normal chapter. Take a break. We'll continue once again at 6 o'clock. Okay, right. Everything is with respect to standards. Okay. Good evening, sit down. Okay. Shall we make a start, sir? Everybody, are you all ready? Okay. What is that? Accounting standards. Okay. Right. Now, let me start, sir. Altogether, we are having how many accounting standards in group 1? 8 accounting standards. Total 8 accounting standards are there, sir. Listen carefully. Total 8 accounting standards. What are the 8, sir? 1, 2, 3, 11, 12, 13, 10 and 16. Hello? 1, 2, 3, then 10 and 16. So these are the 8 standards we are having, out of which 2 standards are covered in the normal chapters, regular class. I'm not talking about revision. Hello? I'm talking about the regular class. These 2 usually covered along with the normal chapters, and in fact simple only. Because in AS3, if they ask a standard question, they'll simply ask direct method basic models. If they usually ask any standard question from AS3, they'll ask a direct method basic model. Receipts, payments, we'll record. A very, very simple one. Then if it is AS13, usually they'll ask that current investments valuation individually or together. Similarly, maybe long-term investments, sometimes reclassification from current to long-term. That will be the usually questions. Simple only, that we will not discuss. Now, totally how many standards we are having now, excluding those 6 standards. Now, out of the 6, let me pick 3 good standards, because within 2 hours, we can complete max 3 standards only, sir. Now, AS1 is a shorter standard, easy standard. 2 also comparatively easy, and 12 comparatively complexities are less. I don't say it is so easy, but compared to 10, 11 and 16, maybe the complexities will be less. You will be either recognizing in revenue approach, depending on revenue grant or capital grant. That means depending on whether it is for fixed asset or for regular purpose, you will divide. A simple aspect only. So I am not dealing with AS12. So my discussion in this 2-hour session, I will be restricting it to AS10, 11 and 16. In that first hour, let us focus on AS10. Next hour, 1/2 an hour for AS11, another 1/2 an hour for AS16. In that way, we'll complete all the 3 standards. First, we'll try to learn some theory, sir. I'll just tell you conceptually. Then immediately we'll solve some problems. Is that clear, sir? So thereby first for AS10, let me tell you few theory. So few important concepts. Let me explain you. Then we'll apply the relevant concepts through some questions. Then application also will be clear. So let me start with AS10. In AS10, for examination usually or even in the chapter, 3 concepts are very, very important, sir. What are those 3 concepts, sir? One is initial recognition. Hello, what is that? Initial recognition. The other one is subsequent recognition. And another important one is depreciation. So these 3 are the most important topics, sir. There are some miscellaneous points also. Based on the time, we will discuss the miscellaneous points also. But usually I can say most of the important points are from these 3 topics only, sir. Initial recognition, subsequent recognition and depreciation. Suppose in AS10, 15 questions are there. Out of 15, 10 to 12 questions will be from these 3 topics only. Only 2 or 3 questions will be from other aspects. So thereby, let me cover these 3 important aspects. Are you all ready? Okay. In that first, let us start with initial recognition. What is that? Initial recognition. Initial recognition in the sense it is at the time of purchase, sir. Hello, it is the type of purchase or manufacturing. Let me divide this for 2 types, sir. One is an asset acquired and if the asset is self-generated. Sir, we can divide into 2 types. When the asset is acquired, when the asset is self-generated. Similarly, acquired also I would like to divide into 2. One is acquired for cash or credit. The other one is acquired by way of exchange of assets. Initial recognition, I am dividing into 2. One is acquired, the other one is self-generated. Even in acquired, we'll divide into 2. One is cash or credit, the other one is by way of exchange of assets. Now, first let us deal with cash or credit. Then we'll proceed to exchange of assets. Then at last to self-generated assets. First, cash or credit. If you have purchased an asset on cash basis or credit basis, now what is the cost of such asset? What is the cost of that PPE? Now usually cost of PPE is divided into 3 types. How many types, sir? 3 types. One is purchase price. The other one is directly attributable costs. The other one is decommissioning, restoration and other similar liabilities. Decommissioning, restoration and other similar liabilities. Sir, 3 aspects will be there. Cost of the PPE usually consists of 3 aspects. One is purchase price, the other one is directly attributable cost, and the last one is decommissioning, restoration and other similar liabilities. I'll give you clarity, don't worry. First, what do you mean by purchase price here, sir? It is very simple. The basic price you pay for the asset. Basic price plus non-refundable duties and taxes. Non-refundable duties and taxes minus trade discount. So these together gives you purchase price, sir. These are the components of purchase price. First we'll write basic price. For that we'll add non-refundable duties and taxes. For that we'll reduce trade discounts. Now, Sir, what do you mean by non-refundable duties and taxes? Sir, usually when we pay some taxes, it will be refunded to us. If it is refunded, is it really a cost to us? No. So that's why only non-refundable duties and taxes will be added. If it is refundable, it is not part of the cost of PPE. Examples may be usually, if we take GST, hello, what is that? If it is GST, you will be having input tax credit. Hello, what is that? Input tax credit. So if ITC is there, we will call it as what, sir? Refundable. But don't think that only GST is the tax we are having. Though Modi ji says one nation, one tax as GST, but still there are many other taxes. Maybe in introduction to GST you might have heard, there are many taxes which are not subsumed within GST, like some local taxes, maybe customs duty. So there are some taxes which are not subsumed within GST. So still some taxes are there. So what we say is, if it is refundable, don't consider. If it is non-refundable, consider as the part of the cost. So hope it is clear. Next, directly attributable costs. So what do you mean by directly attributable costs? Very simple. Those costs which are required to make the asset ready for use. Those costs which are required to make the asset ready for use, that costs are said to be directly attributable costs. Usually, what costs will incur for getting the asset ready for use? Let us say this is the company, sir, we are there in, and here is the supplier. A godown is there for supplier. Now we need to purchase a particular plant and machinery. Now what are all the costs that we incur for getting the asset ready for use? First, for bringing this out, we have to pay something, sir, which I would like to say purchase price. Because I have to pay basic price, I have to pay any taxes, reducing trade discounts. This is purchase price. If I just pay that amount, I can start using the asset. No. So I have to incur various other costs, just like what, sir? I have to bring it to my godown. Am I right or not? So freight charges will be there. What will be there, sir? Freight charges. Now, sometimes you might bring big plant and machineries, sir. When you bring big plant and machineries, first of all, that site has to be made ready for installation. Hello, what is that? Site has to be made ready, which we call as cost of site preparation or site restoration costs. Hello, it is called as cost of site preparation. Unless we make it ready, we cannot install plant and machinery. So site preparation costs also are required. Later on, okay, sir, site is prepared, set is also brought, immediately we can use no. Installation is required. Hello, what is required? Installation is required. So any installation charges are also required, sir. Okay. Now, installation completed. Immediately can be used, sir? No. Sir, we have to check whether it is running properly or not. Hello, we have to check whether it is running properly or not. For that, what we will do, sir? We will do trial run. Hello, what we will do? Trial run. I think in costing you will get all these aspects, sir. We will do what, sir? Trial run. That means we will check whether the asset is running properly or not. Now, do you think we know the functioning of the asset? Can we really check whether the asset is functioning properly or not? No. Usually we call for some engineers. Hello, they will come and check whether this is working properly or not. Engineer, what he will do, sir? He will just say how to operate it. Will he just bring the materials? Will he just do all the work required? No. So once again, some material are required, some laborers are required. Now all these costs together we will call as cost of trial run. Either it may be amount paid to engineers or material costs or labor. All these are required, which we call as cost of trial run. Okay, sir. Let us say using trial run, some products are manufactured. Now what we will do with that products? Trial run only. So damage it. Will we damage it, sir? No. Will we destroy it? No. So we will sell it in the market. So from this, if we get any sale value, so we have to reduce. That is the net cost for us. So less sale value of any product manufactured in this process. Any product manufactured in this process. So hope you are getting, sir. These are all considered as what, sir? Directly attributable costs. What are the costs, sir? Sir, I could have given the list, sir. But if you learn like this, what is happening in process, you will never forget those costs, sir. First, freight charges will be there, site preparation is required, then installation is required, then trial run is required. Trial run in the sense, all those we pay for engineer, materials and laborers. Now then we'll reduce the sale value of any products. Now these together are called as what, sir? Directly attributable costs. First, purchase basic price, non-refundable duties, trade discounts. These are all purchase price. Here we can say, now I am writing it quickly, it is freight charges, then site preparation costs, then installation charges, cost of trial run, net of sale value of the products. So these are the directly attributable costs, net of sale value of products manufactured. So these are the directly attributable costs. Hope everybody have understood what are directly attributable costs. Next, decommissioning, restoration and other similar liabilities. What is this, sir? In AS10, a new concept was brought, sir, where we feel that if an asset has to be removed at the end of its life, tell me, we are removing some asset at the end of its life, sir. For removal also costs will be there. Am I right or not? Now, where we shall charge? Actually, this is clearly related to the asset. But can we add it to the asset? At that time we remove that? Not possible, because asset is not having any more FEB. Because life of the asset is completed. That is clearly related to the asset only, but still we cannot add to the asset because life is over, no more FEB. That's why a new concept was brought in AS10, where they say that if you feel some amount will be incurred at the end of the life for removal, at the time of purchase only recognize it. At the time of purchase only recognize. How do I know today, sir? Estimate. Make a estimation. Whenever there is a change, you change the estimation. Now, sir, I will incur after 10 years. No. Today only you are asking me to recognize. Okay, recognize only at present value. Hello, are you getting the point, sir? Decommissioning. Commissioning means installation, sir. Decommissioning means removing. At the time of removing, if we incur any cost, that we will call this, sir, we'll simply call this as present value of cost of removal or restoration, etc. At that time, whatever costs we incur at the end of the life, that present value only we call as decommissioning, restoration and other similar liabilities. These three are considered to be the cost of the PPE. Present value of cost of removal, restoration, which happens at the end of the life. These three are to be added, sir. These are the components of the cost. Whereas some costs which are not to be considered. Let us say after trial run is completed, I think the asset is ready for use. Am I right or not? Now we have done a lot of hard work. We have purchased, we have imported some machinery, we have installed it, trial run is done. I think whenever a big machinery is imported, we want to communicate everybody. We are having great plant and machinery, good production will be there. We are a top company. Like that we want to communicate sometimes. So like that if you do grandly, some costs will be there called as inauguration costs. Hello, just like house is completed. Whenever house is completed, so inauguration will be done. Exactly in the same way, housewarming will be done. Exactly, if a plant and machinery you have purchased, everything is ready, then you may go for inauguration costs. Is it necessary for the asset to make it ready for use? No, already asset is ready for use. So this is not a cost of the PPE. Similarly, sir, first time we have bought a new plant and machinery. Now production will happen now itself. New products are getting manufactured. To bring more and more sales, I have to do marketing. Hello, I have to do what, sir? Marketing. Now marketing is required to get the asset ready for use. No. So once again, this is also not cost of PPE, not part of the cost. Similarly, first time we have brought a plant and machinery, sir, how to operate it? For employees, training may be required. Hello, what is that? Training to employees for manufacturing products using this plant and machinery. Training to employees. And Sir, when we have taken a new plant and machinery, when products are manufactured newly, you may not have big demand, due to which in the first few years, you may have losses for 1 or 2 years. Now, these losses, can I say, due to this asset only, I'm having losses, so I will adjust to asset. Can you say like that? No, sir. So, it is not required to get the asset ready for use. So, if there are any initial operating losses, they are also not to be considered as cost of the PPE. Similarly, sometimes, now you may need to shift from one location to another location. After some time, you may need to shift, sir, suddenly for different reason. Then for shifting, if there is any cost, this asset I am removing here, I am installing another place. For this, some costs I have incurred for this asset only. Can I say, shall I add it to the cost of the asset? No, because is it increasing the efficiency of the asset? No. Is it required for getting the asset ready for use? No. You are suddenly taking a new decision, shifting from one place to another. It is not required to get it ready for use at the first time. So thereby, this is also not cost of the PPE, that is cost of shifting from one location to another. One location to another. Sometimes you may incur some general administration overheads. Hello, what is that? General administration overheads, which you cannot link it to asset itself. Sir, if it is possible to link to asset, you can link it, sir. Sometimes we will incur for organization as a whole. Now you cannot say it should be added to the cost of the PPE, just like inventory. In AS2, what we will do, sir? If there are any general administration expenses, will we add it to the cost? No. So these are some expenses which cannot be linked to any asset or any particular product. So never part of the cost. So these are the costs not to be considered. Sir, in the examination, they'll give list of the cost. They'll ask whether it is part of purchase price or whether it is part of directly attributable costs or whether it is decommissioning. Like that, under these 4 heads, they may ask you to classify, sir. That's why I'm giving you list clearly what are part of the cost, what are not part of the cost. In the cost also among these 3 heads. Hope everybody have understood initial recognition, that too for the first type. What is that, sir? Cash or credit. Now let me move to the second one. What is that, sir? Exchange of assets. Sir, for exchange of assets, I'll give you 3 principles. If you remember the 3 principles, you can easily answer any question, sir. First one, if in the case of exchange of asset, usually we record at which value, means it is fair value of the asset given up or asset acquired, whichever is higher or lower. Whichever is higher or lower. Clearly evident. Generally we see the word whichever, we used to write higher or lower, but not here. It is whichever is clearly evident. Sir, we have to record at the fair value of the asset given up, because we are giving one asset for getting another asset. Both are assets only. I want to get PPE, for that I am giving another PPE or another investment or any other asset I am having, stock, etc. For exchange of assets, I am giving investment, I am giving stock, but I am getting PPE. So in such a case, you have to take fair value of the asset given up or acquired, whichever is clearly evident. Suppose both are clearly evident. Sometimes both may be clearly evident, sir. Both fair values are clearly evident. Suppose both are clearly evident, then preference should be given to asset given up, because ultimately what we give is our cost. Suppose we are paying cash, that is our cost. If we are giving something, that is our cost. So then prefer fair value of asset given up. If both are clearly evident. If both fair values are not known, sometimes it is possible that both fair values are not known, then what you will do, sir? Simply carrying amount of the asset given up. Because if I don't know fair value, at least I will know the book value, no? So simply I will take carrying amount of the asset given up. Sir, in the case of exchange of assets, we take fair value of the asset given up or fair value of the asset acquired, whichever is clearly evident. If both are clearly evident, fair value of the asset given up. If both fair values are not known, we will take carrying amount of the asset given up. All these principles holds good if asset has commercial substance. If asset has commercial substance. Now, what do you mean by this commercial substance, sir? Now, very simple, sir. Sir, using exchange of assets concept, many people have started doing some frauds. Hello? Using exchange of assets concept, many people have started doing some fraud. So, using exchange of assets, frauds can be done, huh? Yes, sir. Let me show you. Let us say A Limited is one company, B Limited is another company. Both are friendly companies. Let us say both have started companies at the same time. Both are having similar plant and machinery. Let us say plant and machinery of A Limited is 19 crores. Plant and machinery of B Limited book value is 20 crores. Let us assume the fair value is, let us assume 24 crores. Sometimes what may happen is fair value of the asset may be higher if such products are, such assets are not being manufactured, if demand is higher. Let us say this is the scenario. Outside value is 24 crores, book value is 19 crores, for B Limited 20 crores. Now A Limited is trying to book some excessive profits. Can A Limited do anything? He want to show some higher profits in his P&L of the current year. Already losses are there, so he want to show to the shareholders that he is having higher profits. He want to do some fraud. Can he do any fraud? Now please understand. So you may think, sir, he can revalue. No, if he revalues, it goes to revaluation reserve, not in P&L. Hello. If he revalues, it moves to revaluation reserve. Suppose he exchanges this plant and machinery with B Limited, because both are similar. Now what he will do, sir, he'll write an entry like this: plant and machinery 24 crores, because he is acquiring at 24, to plant and machinery 9 crores, to P&L 5 crores. Like that, he may try to book some profit fraudulently. Here, why I am telling fraudulently is because really, do you think this transaction will happen? No. In books only this will happen. A Limited will keep with A Limited only. B Limited will keep with B Limited. Who will come and check? Both are similar only. No. Who will understand whether transaction has happened or not? Like this, they may try to fraudulently book the profits. Sir, are you getting the point, sir? Standard don't want to allow this. What they are telling is, commercially, is there any substance here? Commercial substance means, really, is it a good transaction, good commercial transaction? Really, is it a business transaction getting entered? No, this is some dummy transaction, not at all genuine. So what they say is, if the transaction is like this, I will not allow you to book profit or loss. Further, they have brought a concept called commercial substance. If the asset is having commercial substance, then you can book profit or loss. If the asset is not having commercial substance, in this scenario we say asset is not having commercial substance. In this scenario, you cannot book the profit or loss. Now what the standard has brought principle is, if asset is not having commercial substance, then transfer has to be done at book carrying amount of the asset given up only. That means you cannot record this asset at 24. You have to record at carrying amount of the asset given up 19. As a result, can you book any profit or loss? No. That is the principle brought, sir. So what they have said, all the above principles holds good. That means you can record an asset at fair value when you can record if it is having commercial substance. If asset doesn't have commercial substance, you cannot recognize what, sir? Profit or loss. You can't recognize profit or loss. For that purpose, what principle was said? It has to be recorded at carrying amount of asset given up. If you recorded that value, you have to credit that amount, debit also same amount, then you cannot record any profit or loss. That is the intention behind that principle. Anyway, to give you simple way of understanding when we can say commercial substance is there and when we can say commercial substance is not there, I'll just give you 3 examples, sir. With the 3 examples, you can clearly understand when commercial substance is there and when it is not there. Sir, plant and machinery with a plant and machinery exchange is happening and both are similar plant and machineries. In such a case, commercial substance is not there. commercial substance is not there. We are exchanging old plant and machinery with an advanced plant and machinery. Now tell me, I think there might be some necessity for which they are taking a new advanced plant and machinery. Now if they really exchange it, benefits will be there or not? Commercially something can happen or not? Yes, in this situation we feel that commercial substance is there. Another scenario, suppose I am exchanging plant and machinery with furniture. Now tell me, commercial substance will be there or not? Definitely yes. How you can say commercial substance is not there? Because you cannot show to anybody, I have exchanged plant and machinery with furniture, then furniture should be there with you. But you want to continue with plant and machinery. So thereby, so usually only in one scenario commercial substance is not there. If two similar assets are getting exchanged, then that might be a fraudulent transaction. We say commercial substance is not there. Then you cannot book profit or loss. You have to record it carrying amount of the asset given up. So hope everybody have understood. So with this exchange of assets also completed, sir. Sir, is that clear? Now let me move to the last one. Here self-generated. Now what is this self-generated, sir? Very simple. Sometimes we may construct the assets, sir. All the principles we have said till now holds good. Only 3 points you should know, sir. One is internal profits should not be considered. Hello, what should not be considered? Internal profits. When you are manufacturing, you should not consider any internal profits. Second one, any abnormal losses should not be considered as the part of the cost. Sometimes any material loss may be there or some other abnormal loss might be there. You cannot treat it as part of the cost. It is a loss only, but not cost for the PPE, but it's a loss, abnormal loss to be recorded in the general P&L. Sir, are you getting the point? Similarly, sometimes interest may be incurred, sir, because we are constructing. In the course we may take some loans, sir. Interest may be there. Interest to be added if it is a qualifying asset as per AS 16. Because if you are constructing a building, sometimes what it may happen, sir? It may be a qualifying asset, then interest has to be added. Interest to be added if it is a qualifying. If you just remember these three, all other principles remains the same for self-generated. So internal profits to be eliminated, abnormal losses to be not considered, and interest to be added if it is a qualifying asset. That's all. With this we have completed initial recognition. Sir, discussion clear? Now let me move to the next one. What is that, sir? Subsequent recognition. Now let me tell you, subsequent recognition can be done in two ways, sir. Two models are there for that. One is cost model. The other one is revaluation model. Subsequent recognition means at the year end, sir. At the year end, at what value you should record the asset. For the two models are there. One is cost model, the other one is revaluation model. Under cost model, how do we present, sir? It is original cost less accumulated depreciation. Hello, what is that, sir? Original cost less accumulated depreciation less impairment loss, if any. Sometimes impairment loss will be there. Then we will get what's the cost. Then under revaluation, what we will do, sir? It is fair value less subsequent accumulated depreciation less subsequent impairment loss gives you carrying amount of the PPE. Here in this way carrying amount will be computed. Here in this way carrying amount will be computed. Two models are there. One is cost model, the other one is revaluation model. Cost model means original cost less accumulated depreciation less impairment loss. Revaluation model means fair value less subsequent accumulated depreciation less subsequent impairment loss. Now you may get a doubt why we are using the word called subsequent. Now let me tell you, sir, when we compare cost and fair value, sir, when we compare carrying amount and fair value every year, no. Whenever we feel substantial difference is there between book value and fair value, then we will go for revaluation. So what I say is, at that time you might have recorded some fair value. After that date, any accumulated depreciation after that date, any impairment loss to be reduced to find today's carrying amount. Because fair value not done regularly, it may be done on any particular date. From on that day, what is the fair value? From that date onwards, what is the accumulated depreciation? What is the impairment loss? If we reduce it, we will get the values. This is the model of writing, sir, but this is not important for examination. What is important is how you will do revaluation. Whenever there is revaluation, what is the accounting treatment for it? Sir, are you getting the point? Usually we maintain in this way, sir. Original cost less accumulated depreciation gives you the carrying amount. This is what the normal method, sir. Let us take some values. Let us say original cost of an asset is 1000, accumulated depreciation is 400, carrying amount will be 600. Now what we thought is this asset is to be revalued to 1500. Hello, what is that? This asset should be revalued to 1500. 600 worth asset should be revalued to 1500. Now how the entry will happen? What is the accounting treatment? So tell me one thing. Have you already charged depreciation to asset account? No. It is maintained in accumulated depreciation. Now if you want to increase this to 1500, what is being increased, sir? WDV. It's not original cost. What is being increased? WDV. So to make this possible, first bring the asset to WDV, then make the revaluation. How to bring the asset to WDV? Provide that accumulated depreciation now. Adjust it. That means how to adjust, sir? Accumulated depreciation to fixed asset. How much, sir? 400. If we provide, now today asset value will become how much, sir? 600. Once that has become 600, how much increase was there? 900. So we'll simply write fixed asset account at R2, revaluation reserve 900. Sir, are you getting the point? In this way we will account. This is one approach. But the problem in this approach is, in the balance sheet, how do we present, sir? Suppose once I have done revaluation, how do I present? Can I continue showing this is the original cost, this is the accumulated depreciation? Can I continue showing? No, because already I have adjusted accumulated depreciation. Directly I have to show WDV. Actually, the purpose of showing this is, we want to communicate to the users, this is the total cost, this is the usage already done, this much asset portion can still be used. Like that we want to communicate, sir. 40% of the asset is used, still 60% can be used. Like that we want to communicate. But if we apply this method, we cannot communicate like that, because entire accumulated depreciation is getting cancelled. So there is yet another method. In fact, this method is only followed. Now what is that method? To understand that method, we should know the impact, sir. Let me show you. This is before revaluation. Hello, what, sir? Before revaluation. Now something I will write after revaluation. Then I will write due to revaluation. Three things I will write. One is before revaluation, the other one is due to revaluation, the other one is after revaluation. Now we know one thing. After revaluation, carrying amount should be how much, sir? 1500. Accepted or not? After revaluation, carrying amount should be how much? 1500. Can you tell me how much increase was there? Hello, how much increase was there? 900. How much percentage increase was there? Increase was there. How much, sir? Increase is 900. Increase is 900. Percentage is 150%. Accepted? It is 150% of 600. On 600, how much percent increase was there? 150. Now standard says go and apply the same percentage for accumulated depreciation as well as original cost. What is 150% of 1000? 1500. What is 150% of 400? 600. Now you please add it to the existing original cost. As a result, new original cost will be 2500, new accumulated depreciation will be 1000, new carrying amount will be 1500. In this way they have derived another method. Now here what we will do, due to revaluation, whatever is happening, that only we are going to record. In this method, entry will be, asset will still continue at original cost or not? Yes. That's why we have to increase the asset. How much, sir? You could observe 1500. fixed asset account at are 1500. To accumulated depreciation I should increase. How much, sir? 600. To increase we will transfer to revaluation reserve 900. This is what another method, sir. Under this method, what we are able to achieve, still we can continue to show under this approach where we can show original cost, where we can show accumulated depreciation, where we can show net amount. So we can show to the users that still this is the total 40% usage was done, still 60% usage is pending. Like that we can communicate. Like that totally how many methods are there, sir? 2 methods are there. In the first method, we eliminate entire accumulated depreciation against fixed asset, then we will revalue. In the second method, we will increase original cost, we will increase accumulated depreciation proportionately in the proportion of increase in carrying amount. Whatever increase was there in carrying amount 900, for the same proportion we'll increase the original cost, we'll increase the accumulated depreciation. In that way we'll get the new values of the original cost and accumulated depreciation. So for that we'll pass the entry. Because we are increasing the asset by 1500, we'll debit fixed asset 1500. Because we are increasing accumulated depreciation by 600, we'll credit 600. Revaluation reserve balance 900. In this way revaluation will happen. Sir, this is important concept. They have not tested till now. I feel maybe in one of the coming attempts based on this question they will be asking. Example is there in study material, but illustration was not there. They are not asking that this question, but concept is important, sir. Probability is there that one of the coming attempts they may ask this question. That's why I am discussing. Till now they have not asked, sir, but possibility is there. They can ask you to give the impact of revaluation under any of these methods. Sir, can I proceed? Sir, understood? I know I am discussing quickly, sir, but still required, sir. Within 1 hour, AS10 means AS10 takes 10 hours. So it's not 1 hour topic. So thereby, let us proceed, sir. With this revaluation main point is completed. Let me tell you one point. Sir, I am having 5 assets. Now, can I follow for 2 assets cost model, for 3 assets revaluation model? Is that allowed? Can I follow like that? Point is very simple. Standard has never said you should follow for everything cost or for everything revaluation, but for same class of asset follow the same model. In other words, usually in income tax you'll get block of assets. Hello, there only you'll get class of assets also, sir. Similar, that means for all plant and machineries follow one thing, sir. For all buildings follow one thing, either cost or revaluation. Similarly, for all vehicles you follow one, but follow the same for that particular class. Sometimes you may feel that all buildings are of same class. Don't feel like that, sir. Sometimes due to nature, within buildings alone you may have different classes. Let us say office buildings and factory buildings. Hello, what is that? Office building and factory building. Sir, factory building means every day production will happen subjected to greater usage and damage. Whereas office building means it's like a head office, no big activities happens, it usually used less. Are you getting the point, sir? The nature of both the buildings are different, the purpose are different, so hence we feel as different class. Discussion clear? So thereby for each class same model. Sometimes within the asset itself you may have 2 or more models, so please be careful. For each class you can follow same. That means for these two, can I follow same? Should I follow same model? No, not required. Both are different class. That is what the conclusion with respect to subsequent recognition. Sir, hope you have understood. Now let me move to the last important topic, depreciation. Let me quickly discuss depreciation within 8 minutes and then we'll solve few problems, sir. AS10 only. Depreciation, sir. Let me give you the important aspects of depreciation. First, you should know when the depreciation will be commenced. In other words, when you should start providing depreciation. When you will start providing depreciation, sir? When the asset is put to user or when the asset is ready for user? Hello? Put to use or ready for use? It is not put to use, sir, because you might have heard something depreciation for wear and tear also. Hello, what is the depreciation for wear and tear? Now, even if you not use it, wear and tear will happen. So thereby, when it is ready for use only, depreciation will start. When we should stop providing depreciation, sir? when it is held for sale. Usually when it is held for sale, depreciation will be stopped, or another possibility might be if residual value is greater than carrying amount. Sir, sometimes residual value might be higher, sir. You may have higher sale value at the end. Then what is the need of providing depreciation? For land, why we will not provide depreciation, sir? Every day land value will increase. So we feel that final sale value will increase rather than today's book value. That's why we say land is a non-depreciable asset. Same logic, sir. If your residual value is greater than carrying amount, for what value you will depreciate? So thereby depreciation should be stopped even if residual value is higher than carrying amount. That is what cessation, sir. Then what is the method of depreciation that you should follow? Which method you should follow, sir? 3 methods are there. Either of the 3 methods you can follow. It is SLM, WDV or production units method. Now based on usage only we have to pick the method. Based on what, sir? Usage. I can say if the usage is consistent, we'll follow SLM. If the usage is declining, we'll follow WDV. If the usage has no trend at all, then we follow production units method. Continuous decline, WDV. No, sir, every year equal, SLM. No trend at all. Simply based on number of units produced, you follow the depreciation pattern. This is what? Method of depreciation. Now, after method, the important point, one important point will be, whenever there is change in, sir, useful life or residual value, sometimes there may be a change in method of depreciation also. How you should account for, sir? Let me tell you one thing. Previously, method of depreciation, they used to account on a retrospective long back, sir. Now because of the amendments, there is no big difference whether it is method of depreciation or change in useful life or anything. Any change in the value of asset, any change to be accounted on prospective basis only. Which basis, sir? Prospective. Whatever the change might be, everything we will account for only on a prospective basis. So that is what? Change in useful life or residual value. Then some special points, sir. I'm just giving those points which can be asked in examination, sir. If something cannot be asked, I'm not giving. What are the special points? Sir, if an asset have significant components, then component wise depreciation is to be provided. Hello, what is that, sir? Component wise depreciation. Sir, you might have heard, sir, some concept called component wise accounting. Generally, if an asset is having some significant different components, then for different components separately depreciation to be provided. Let me give a big example, sir, simple example. Let us say you have purchased a refrigerator. Hello, what is that, sir? Refrigerator. Now usually in refrigerator what will be there, sir? Whenever you purchase, they will be giving you some warranty. How many years they will give warranty? I think you might have heard like this. For compressor, hello, this many years. For other body parts, this many years. Have you heard like that? Similarly, anything, sir, any washing machine or anything, whatever you purchase, for motor, they'll say this many years. For other body parts, they'll say other different years. Am I right or not? This will happen because usually the compressor or the motors, these are, or engines, these are built with some good quality, sir. That is the main part. Now I can say in a refrigerator, now compressor and other body parts are two significant aspects. Now usually compressor may have a life of 10 to 12 years, sir. But other body parts may have a life of generally 5 years to 6 years, sir. But what we do? Let us say out of 20,000 refrigerator, Now usually what we do, sir, let us say compressor is 12,000 or 14,000, body parts is 6,000. To be frankly speaking, if they are having different useful life, depreciation also to be provided separately. But previously what we used to do is, for entire 20,000, we consider some average, maybe 7 years or 8 years. For that 8 years only, we used to provide depreciation. Now standard has started telling that if you feel within the asset, different components are there, significant components are there with a different useful life. With a different useful life, then or different nature, then provide depreciation separately. Accounting also will be done separately. Entry will be recorded like this, sir. Refrigerator in that compressor. Similarly, refrigerator in that body parts. To bank. In that way we will record. Subdivision will be there. 14,000 and 6,000. Depreciation also will be provided on this separately, each of them. So here what is happening, sir? Component wise we are providing depreciation. This is a separate concept called component wise accounting or component wise depreciation. This is one important aspect in depreciation. Sir, is that clear, everybody? Now, so these are the important points, sir. Now let me stop here. If we continue discussing more and more aspects, but these aspects are sufficient. Most of the problems given in study material, you will be able to solve it, sir. I can say one simple aspect, subsequent expenditure. What is that, sir? Subsequent expenditure. If it increases the FEB, future economic benefits, we have to add it, sir. If it is to just retain the benefits, we have to ignore it. So this is what subsequent expenditure. Maybe in your lower levels you will learn like this. If it increases efficiency, we will add. If it doesn't increase efficiency, we will not add. The day-to-day repairs, etc., we will not add. But major part replacement, which will increase the efficiency, has to be added to the cost. So these are some important aspects. Sir, have you all understood till now? So let me take up few questions, sir. At least 6 or 7 questions, good questions, and we will solve it. So that we will complete this AS7. Sir, in the case of standards, discussion will take more time. Questions will be done very quickly. Now you will see it. We will take some CRDs and I will solve it, sir. Now, look here carefully. Usually more questions are asked on initial recognition, sir, that cost. Now, cost of the plant, this will be part of the cost or not? Yes. Initial delivery and handling costs? Yes. Site preparation costs? Yes. Consultants used for advice on the acquisition? Yes. Interest charges paid. Usually interest is not a part of the cost unless it is a qualifying asset. So this will not be part. Estimated dismantling cost to be incurred after 7 years. This is decommissioning restoration. Yes. Operating losses before commercial production. No. Initial operating losses is not a part. That's all. If you add these elements, it is the cost of PPE. Over. Sir, clear? Let me move to the second question. Srishti Limited contracted with a supplier to purchase machinery which is to be installed in Department A in 3 months' time. Special foundations were required for the machinery which were to be prepared within this supply lead time. The cost of the site preparation and laying foundations 1,41,870. Will we consider or not? Yes. Site preparation costs. These activities were supervised by a technician who is employed for this purpose for 45,000 per month. Technician services were given by Department B to A, which billed at 49,500 by adding 10% profit. 45,000 plus 10%, 4,500. Will we consider any internal profits? No. Internal profits has to be eliminated. So only 45,000 to be considered. This is per month. How many months, sir? 3 months. I think 3 months, sir. So thereby into 3, you will get the amount to be considered. Next, the machinery was purchased at 1,58,34,000 inclusive of IGST at the rate of 12%, for which input credit is available. So shall we consider that IGST? No. This amount is 100 or 112? 112. So we divide by 112 into 100 gives you the cost to be considered. 55,770 transportation charges. Will we consider or not? Yes. An architect was appointed at a fee of 30,000 to supervise the machinery. Will we consider or not? Yes. So these are the costs, sir. Technician salary, delivery, architect's fees. Now here divide by 112 into 100. Site preparation cost 45,000 into 3. That's all. Question number 2 also completed. Question number 3, not so important, not regularly asked, sir. So let me proceed to 4. Entity A has an existing freehold property which it intends to knock down and redevelop. During the redevelopment period, the company will move its production facilities to another site. So what is this, sir? Shifting from one place to another. When you are shifting from one place to another, for that whatever cost you incur, removing and incorporating another, rent, removing, all this will be considered? No. So cost of shifting will not be considered. So I will say, sir, these costs are not to be included because they are not directly attributable to bringing the asset for ready for use. These are in the nature of cost of relocating or reorganization. So they do not meet the cost of PPE. Next, an amusement park has a soft opening to the public to trial run its attractions. Tickets are sold at 50% during this period and the operating capacity is 80%. Official opening day of the amusement park is 3 months later. Management claimed that this soft opening is a trial run necessary for the amusement park to be in the condition capable of operating in the intended manner. Accordingly, they want to add it to the cost of the asset. Very simple, sir. There is an amusement park. They are selling tickets at a lower prices. What they say is, if I sell like this, some people will come so that I can do a trial run. This is what management is claiming. Do you think it is trial run? Is it trial run? Trial run means, should they call outsiders? Their employees only can do it. No. Hello. It's an amusement park. Now, should they call any outsiders, sir? No. Nothing required. They can do on their own. Already amusement park is ready. In the first few months, you have to give lower prices only, sir. That we can say as initial operating losses. These are some initial operating losses. You cannot charge higher prices. Are you getting the point? For that reason, he is claiming that trial run. How you can say trial run? Trial run means do it with your employees. Hello? You cannot do with outsiders. Suppose something happened to them, what you will do, sir? Hello? Now you will say trial run cost. Like that, will you give some compensation? No, sir. Once like this happened in Queensland, sir, Chennai. Some from Titanic or something, 10 or 20 people fell down. That Queensland itself is stopped. Exhibition. Because I am talking about this amusement park, I am telling, sir. From the Titanic, now we will just move like this, no wave. So from there, 20 people fell down. Okay, right. Almost from a height of 10 feet or how much? Something. 10 or 20. Okay, right. Let me continue. Let us not go to Queensland. Let us be there here only. Now look here carefully, sir. Question number 6. Sir, hope you have understood this. This should not be capitalized. They are like something called as operating losses. Okay, right. Next. Now look here carefully, sir. 6 and 7. Entity A exchanges land with a book value of 10 lakh for cash of 20 and plant and machinery valued at 25. They are giving what, sir? Land. They are getting what, sir? Cash and plant and machinery. Sir, are you getting the point? Now tell me, first of all, commercial substance is there or not? One is land, the other one is plant and machinery. Definitely commercial substance will be there. But for your easiness, we have only given in brackets, sir, but in exam they may not give. Hello? This is not there in study material. For your easiness, we have given. Okay, right. Now, I think you can analyze whether it is having commercial substance or not. Now, the point is, when it is having commercial substance, you can record at the fair value only. Now, what is the entry? You are giving what, sir? Land. Now, entry will be a cash account. I'll just write here, sir. You are receiving what, sir? Cash, 20 lakhs. Plant and machinery, 25 lakhs. To land, how much, sir? 10 lakhs is the book value. Entire balance, 35 lakhs, you can transfer to P&L. That means because asset is having commercial substance, you can book the profit or loss. Sir, have you all understood, sir? So that is the entry. Since transaction is having commercial substance, plant and machinery will be recorded 25 lakhs. How do you get 25? They are telling like this. 45 minus 20 is 25. How do we get this 45 only in this way, sir? Okay, they're bad computations. Leave it, sir. But anyway, plant and machinery has to be recorded 25. You can recognize a profit or loss of 35 lakhs. Next, question number 7. Entity A exchanges car X with book value of 13 lakhs and fair value of 13 lakh 25 for cash of 15,000 and car Y which has a fair value of 13 lakh 10. Commercial substance there are not there? Not there, because both are cars and both are having similar fair value, which tells that both are similar. And they are also telling, they are only giving in the question for your clarity. Transaction lacks commercial substance as the company's cash flows are not expected to change as a result of exchange. It is in the same position as it was before the transaction. It might be for doing the fraud. Now, can you book the profit or loss? No. Because sometimes they may try to book profits, sir. Sometimes they may try to intentionally book losses. Both are not allowed. Simply you have to record it. Carrying amount of the asset given up. So neither profit nor loss. Can you tell me entry for this? What you are giving? What you are giving? Car X. What you are getting? Cash of 15,000. Car Y of 13 lakh 10,000. Sir, please remember, you are getting cash. You are getting car Y. For that you are giving car X. Now tell me, I have to record these two together at which value? Together at carrying amount of the X. Then only I don't get any profit or loss. What is the carrying amount of the asset? 13 lakhs. So thereby here 13 lakhs. They have said the cash 15,000. This should be the balance. Then only I don't get any profit or loss. That's why I have to record at 12 lakh 85. Let me read it, sir. The entity recognizes the assets received at the book value of the car X. Therefore, it recognizes cash of 15 and PPE of 12 lakh 85,000. So, hope everybody have understood. Now, this is a revaluation model, sir, where we have applied two methods. Similar will be there, sir. Let me take this question regularly asked in the exam. Now you could observe in the year 2016-17, entity has acquired a new freehold building with a useful life of 50 years. Entity decide to calculate depreciation charge per annum using a straight line method. It has identified the following components. Now this is what, sir? Component wise depreciation. Because within this freehold building, you are having land, you are having roof, you are having lifts, you are having fixtures, you are having balance building. Everything is having different lives. Based on that only you should provide depreciation. For land, nil. For roof, 10 lakhs divided by 25. For lift, 5 lakh divided by 20. For fixtures, 5 lakh by 10. Here 50 lakh by 50. In that way, we have to separately compute the depreciation. So hope it is clear. So that is what separate depreciation, sir. That's all, sir. So some of the important aspects we have covered. Okay. So with this, we are closing AS 10. Sir, I cannot cover everything at a time. Calm down. What is that? Now, so still some important aspects might be there. But of course, most of the aspects I have covered, sir. Usually what is asked in the exam, I have covered. Usually initial recognition, that cost computation, and what are part of purchase price, what is directly attributable cost, like that they may ask. Sometimes this component wise depreciation, sometimes this exchange of assets, like this they may ask, sir. These are the questions which are usually asked. Depreciation I have explained in theory. Small points they can ask sometime. When you should start, when you should stop. So important concepts are everything covered. So let me proceed to the next concept called as, next standard, AS 11 or 16. Shall we proceed to AS 11 or 16? 11. Anyway, with half an hour gap, sir, what is it? AS 11. Because if I tell you some AS 11 aspect, later on in AS 16, I am going to use this. Some description will be there. So let me start with AS 11, sir. Look here carefully. Sir, in this chapter, mainly three aspects will be there. One is accounting for foreign currency transactions. Accounting for foreign currency transactions. That means we will do exports, imports, purchase, sale, any purchase of fixed asset, etc. from the foreign country. Second one, it is not export, it is not accounting actually. Second one, translation in case of foreign operations. That means integral and non-integral. I am not going to discuss this because I have covered it in branch accounts. The same aspects, sir. same aspects, integral, non-integral, monetary items, non-monetary items, P&L items. How do we recognize? At what rate we should recognize? That is translation in the case of foreign operations. Last one, it is forward contracts. So these are the three important aspects which will be there in the standard, and I am not going to discuss second one, translation. I will discuss the other two. One is accounting for foreign currency transaction, the other one is forward contracts. So let me start with foreign currency transactions. Sir, foreign currency transactions, I can divide into two. One is initial recognition, the other one is subsequent recognition. Initial recognition means when you have entered into transaction. Sir, always initial recognition has to be done at the rate existing on the date of transaction. Existing on the date of transaction. Suppose I have done a purchase on 1st Feb. Then using the rate on 1st Feb only, you have to record. That is called initial recognition. What is subsequent recognition? This is at the year end. Hello, this is at the year end. Now, subsequent recognition depends on whether it is monetary item or non-monetary item. Sir, for our entity, we will apply the rules of integral, because we feel it is our business. I have said you already, integral our business. So our business, integral, same principles will be there. For monetary, which rates are closing rate? Non-monetary items, actually in the case of non-monetary, subdivision will be there, sir, depending on is it valued at historical cost or is it recorded at fair value. Because generally sometimes inventory or investments are recorded at fair value. Are you getting the point, sir? Because cost or fair value, whichever is lower, sometimes we use fair value. That is non-monetary. Here also historical cost also sometimes non-monetary. If it is historical cost, rate on the date of purchase. Whatever the asset was purchased, on that date, whatever rate is there, at that rate only we have to record. If it is if we are recording that non-monetary asset at fair value, just like stock, is it a monetary item? No, it's a non-monetary item. If it is a non-monetary, we are recording at fair value, then the rate on the date fair value is computed. On which date you have computed fair value, on that date only whatever rate is there, you please consider. The rate on the date fair value is computed, that alone is to be considered for deciding this. Okay. Sir, what you are telling, sir, at the time of transaction, you will record the date existing on the date of not purchase, sir, right? Date of transaction. Because it may be purchase transaction or sale or any loan or given or loan taken, any other transaction. So usually we say the rate existing on the date of transaction. At the year end, if it is monetary, closing. If it is non-monetary, the rate on the date of purchase or the date on which fair value is computed, etc. Usually for us now scenario will come for monetary items. Which items? Because at the time of purchase we are recording at one value, but at the year end we are recording at another value. That means exchange difference will be there. Are you getting the point, sir? Suppose I have done a purchase, sir, $1 lakh worth items I have purchased, sir, dollar value 50 at the time of purchase. Now by the year end rate has changed to 54. Now creditors, no, if creditors value is changed, is it a creditors monetary or not? Monetary. So thereby to this extent exchange difference to be considered. At the time of purchase, what you will write, sir? Purchase to creditors you have to record at 50 lakhs. Now at the balance sheet date, you will record creditors at which, sir? At what rate? 54. Already recorded 50. So you will record foreign exchange difference to creditors 4 lakhs. Later on we will transfer this foreign exchange difference to P&L. Are you getting the point, sir? In this way, any foreign exchange difference may arise. So what I say is, now foreign exchange difference arising, whatever foreign exchange difference was there, will divide into two, sir, if transaction settled within same year. What is that, sir? Transaction settled within same year. Purchase was done same year, then payment to creditors also done within the same year. Within same year. If transaction settled in another year. Sir, whatever foreign exchange difference was there of the transaction settled within same year, of the transaction settled within another year. If it is settled within same year, entire exchange difference transferred to current year P&L only. No big discussion, sir, because it is 1 year only, we'll transfer to current year P&L. If it is settled within same year. If it is settled in another year, then what we will do, sir? We will observe rate on transaction date and rate on balance sheet date. This difference will be charged in current year P&L. Similarly, rate on balance sheet date, because already we have recorded that value, and rate on date of settlement, because settlement happened on another day. This difference will be recorded in the year of settlement. That profit or loss will be recorded in the year of settlement. Suppose purchase done in the current year, sir, 1st Feb, payment done in May of next year, then the difference between the rate on 1st Feb and 31st March will be recognized on 31st March only, and the difference between 1st April and settlement date will be recognized in the next year. Like that, foreign exchange difference will divide into two, sir, of the transaction settled within the same year or settled in another year. Sir, is this clear, sir? This is what the regular or the basic foreign exchange difference treatment. Now, let me proceed to a good point, sir, which we call as para 46 or para 46A. I am not going to give you history, sir, because in regular class, for understanding para 46, we spend 1.5 hour, 1 to 1.5 hour. So, I am not discussing this. So, what I will do is, I will explain logically, quickly. I will not deal deeply. Simply, I will tell you. Conclusion, I will tell you. Sir, if loan is, if you have taken any loan, generally, you may take some foreign currency loan, sir. Then if the foreign exchange rate was difference was there, you may have to record the loan at a different rate. Now entire exchange difference has to be transferred to P&L. Now the point is, sometimes assets value may be so high and fluctuation may be so high, which makes it difficult for you to record entire amount in the P&L. Sir, are you getting the point, sir? Let us say you have purchased an asset worth $10 lakh and exchange rate at the time of purchase, let us say last year 50, due to some unforeseen circumstances, let us say Ukraine war, Russia-Ukraine war, something. Now exchange rate increased to 70. Now tell me, 20 rupees different means significant amount for a asset. Almost 30 to 40% of the cost of the asset will be increased. Of course, forget about the cost, sir. We are not telling asset value will increase. That is exchange difference has to be transferred to P&L. So nobody will be ready to bear. So what they say is, if such a scenario happens, that is what para 46 or para 46A. So it is long-term foreign currency monetary items. Hello, what is that, sir? Long-term foreign currency monetary items. With respect to these differences, foreign exchange difference arising from these items. What is that? Long-term foreign currency monetary items. That is what we are going to discuss. We'll divide into two. If it is relating to a depreciable asset, if it is relating to other items. If it is relating to a depreciable asset, if it is relating to other items. If it is relating to a depreciable asset, what we say is, because, sir, simply you can remember as long-term foreign currency loan. Hello, this is what, sir? Long-term foreign currency loan. About that only para 46 or 46A. If it is related to depreciable asset, because huge differences may be there, we are giving an option. Sir, this is not compulsory. This is not compulsory. So para 46A is only a option, not compulsory. What is that option? Now foreign exchange differences can be adjusted to the cost of the asset only. You need not charge to P&L. You can adjust to the cost of asset. How to adjust, sir? Loss means we will add, profit means we will reduce. Because if loss means extra cost for us, sir, we will add to the cost of the asset. If there is profit on foreign exchange difference, you have to reduce. Some of you may feel, loss only I will consider, sir. Profit I will transfer to P&L. Not accepted. Hello? If you follow fully, sir, this year loss is there, I will add. Next year profit is there, I will transfer to P&L. Not accepted. Once option is taken, you have to implement it definitely in the same manner. You cannot take option 1 year and you cannot revoke it in the other year. Once you have taken, you have to follow the option. So this is what with respect to depreciable assets, sir. This is what with respect to depreciable asset. If it is other items, what we should do? It is transferred to an account called to SCMPE account. Foreign currency monetary item translation difference account. TDA means translation difference account. Like that we'll transfer to an account called FCMI TDA. What we will do, sir? First we will transfer to this and amortize to P&L over the life of the loan. Hello, what is that? Amortize to P&L over the life of the loan. That means we are giving a chance, don't charge to 1 year P&L, but amortize it over the period. How much period, sir? Life of the loan. Because you are telling long-term loan. That's why we are telling long-term foreign currency. Because you are telling life of the loan is 5 years or 10 years. Over that life, you can amortize it instead of charging to 1 year P&L. Sir, suppose next year also loss. Accumulate it, once again spread over the balance life. Another year loss. Once again accumulate it, spread it over the balance life. That is what the procedure. Now, if it is here also, actually what is happening is, if you add to the cost of the asset, every year depreciation will increase. Hello? Every year depreciation will increase. Instead of charging to 1 year P&L, we are charging over the period. In both the cases, same treatment, sir. Because asset is there, we are adding to the asset. Because asset is not there, we are transferring to another account temporarily. That is what para 46 or para 46A, where it is an option for long-term foreign currency loans. You can do either of these. It is an option, sir. Sir, in the question, will they clearly mention, have we taken that option or not taken the option? If they mention, do accordingly. Because what we are telling, sir, till now, any foreign exchange difference has to be transferred to P&L. Now we are giving an option. If it is related to depreciable asset, you can add it to the cost. Now, how do we recognize whether option is taken or not? If it is given, follow accordingly. If it is not given, write in both the ways. Hello? Because in ICAI, they used to write alternatives, sir. Let us not take any risk, write in both the ways. Because standard means 1 or 2 lines answer only will be there. Quick answer you can get. So thereby write in both the ways. So they will award you marks. Hello? If there is no clarity in question, don't give clarity in your answer also. Write both the ways. Is that clear, sir? Okay, right. Now with this concept also completed, let me move to the last concept, forward contracts. Sir, with this accounting for foreign currency transactions over, now let me move to the third concept, accounting for forward contracts. So how do we account for forward contracts? Now look here carefully. Sir, forward contracts are done for 2 purposes. One is for hedging purpose. The other one is for trading or speculation. I'll tell you what is this, don't worry. One is hedging purpose. The other one is trading or speculation. Now, what do you mean by hedging? What do you mean by trading and speculation? Hedging means to minimize the risk, sir. trading or speculation means it's like a gambling. Now, what is this? Let me take an example, sir. Look here carefully. Let us say I have purchased a big plant and machinery, or I have purchased some goods, sir, worth $1 lakh. How much, sir? Worth $1 lakh. Today the purchase price is, today the dollar rate is 50. How much, sir? 50. Now, actual payment is to be done somewhere in the next year. Hello, payment is to be done somewhere in the next year. Let us say this is done on 1st Feb, payment is to be done on 1st June. Now you are expecting that the currency rate may increase. India, dollar rate will always increase. So you are expecting that currency will increase. Already 50 gone to 52. Now, or some other rate. Now we thought that by the time I pay, dollar rate may be 55 or 56. My amount has to pay it is 56 lakh, 5 lakh loss. Now every time what you may feel is 5 lakhs loss, 3 lakh loss, 4 lakh loss. You will not have proper sleep also. Hello? Because exchange rate, how much loss will be there? We don't know. You may not have proper sleep also. So thereby, to minimize the risk, now there is a chance that you can enter into a contract with bank. What is that? Usually bank only will sell foreign currencies, sir. They are only legalized, authorized persons. They are only legal persons allowed to do that. Now you can enter into a contract with bank. Suppose bank is telling like this. If you want to purchase $1 lakh on 1st June, today itself if you are ready to enter into an agreement, I will say $1 is equal to 52. Today how much, sir? 50. But still he will be ready to enter into this contract because maximum how much loss? Of course, loss is 2 lakhs. Now he can sleep peacefully. Hello, are you getting the point? Anyway, exchange rate will fluctuate. Irrespective of knowing how much fluctuation is there, better to have some loss and sleep peacefully. Sir, are you getting the point? This type of contract is forward contract called for hedging. Hello, what is that? Hedging. Now let us say there is one friend of mine who have seen this entire transaction. Now he is strongly believing that on 1st June, dollar rate will be 54 or above. He is very confident that dollar rate will be 54 or above. He has not entered into any purchase in foreign country. Nothing he has done. But he is very confident dollar rate will be 54. He have understood that bank will sell dollars at 52 only on 1st Jan. Now what he thought? Why can't we purchase $1 lakh from bank at 52? Why can't we sell at 54? Because I feel that on the date rate will be 54 or above. So I am speculating that the rate will be 54 above. So today I will enter into an agreement and I will enter into agreement for 52. On the date I will sell for 54. As a result, per dollar 2 rupees. $1 lakh if I purchase, 2 lakh rupees loss without doing anything because of the foreign exchange. Are you getting the point? Like this is called gambling, where you don't have any asset, where you don't have any risk, where you don't have nothing to minimize, but still you are speculating or gambling. So this is called trading or speculation purpose. Both are forward contracts only. Have you understood the both types, sir? Now quickly let me tell you the accounting treatment in both the scenarios. In the first case, hedging purpose, sir, already transaction rate how much, sir? 50. You have entered into contract with bank for 52. Suppose on the date of settlement, exchange rate is 49 only. Now what you say, bank, no, wrongly entered into contract. I don't want this contract. I will take at 49. I will pay 49. Do you think will bank accept it? No. Once entered into contract, you have to agree. Suppose dollar rate is 55. Bank can say 55. No, contract is cancelled. You have to take at 55. Can bank say like that? No. Once contract is entered, it is pakka, has to be entered. So what I say is, no big discussion, sir. 2 lakhs loss is very clear. Am I right or not? This has to be spread over the period of settlement. This has to be spread over the period of settlement. In other words, let us say transaction is on 1st Feb. When the payment is to be done 1st June. Now can you tell me, in current year, how many months are there? 2 months. Next year, once again, another 2 months. Totally 4 months. Total foreign exchange loss, 2 lakhs. So there, because 50, 52, how much loss is there? 2 lakhs. Now 1 lakh, half 1 lakh has to be recorded in current year and balance 1 lakh in next year. In other words, at the inception itself, we should start recognizing the loss. When, sir, when you have entered into contract with bank itself, you should record the loss. At the inception only loss to be booked. Loss to be booked. But how it is to be booked, sir? It has to be amortized over the period of settlement. Sir, balance sheet date rate changed, sir. Shall I worry? No. Year settlement date rate changed, sir. Shall I worry? No. Whatever is it, bank will not leave you, you will not leave bank. Rate is fixed. Loss is fixed. This fixed loss only has to be apportioned or amortized over the period of settlement. Sir, have you understood it? This is what in the case of hedging, sir. If it is trading or speculation, at the time of inception, can you book any loss? Can you compute any loss? Are you having any asset? To say, I have purchased at 50, so tomorrow 52, 2 lakhs loss. First, you have not entered at 50 only. You have not any asset only. So today you cannot recognize anything, sir. At inception, nil. Hello. At inception, nil, nothing. You don't have asset, sir. No asset. So nothing you can recognize. At inception, nil. What we should do, sir? Sir, by the balance sheet date, if they have given any change in rate, shall I consider? Now, when you are going to execute this contract, 1st June, not on the balance sheet date. So if there is any balance sheet new rate, will you consider, sir? No. But please observe carefully. There is one concept, sir. Now forward contract rate you already have entered, sir. How much you have entered? Let us assume here you have entered into 52. Now, sir, suppose somebody is ready on 31st March to purchase dollars on 1st June. Somebody is coming on 31st March to purchase dollars on 1st June. Now, you have executed contract on 1st Feb, sir. Now, somebody is ready to execute similar contract on 31st March. For them, bank is quoting a rate of 53. Sir, please understand. That means bank is estimating how much rate? 53. Are you getting the point, sir? Now you already, when you have entered, when bank has entered with you 52, today bank is only estimating that rate will increase to 53. Sir, are you getting the point, sir? Now standard say, sir, I am not taking the rate on balance sheet date. On balance sheet date, 2 rates may be available, sir. One is spot rate. That means immediately if you need to purchase, what is the rate? Suppose spot rate is 51. I don't consider, sir. They are telling forward rate. That means on 31st March, if I enter into a contract to purchase on 1st June, how much? This many dollars, what is the rate? 53. Then I have to compare 53 and 52. I should not compare these two, sir. I have to compare 52 and 50. That comparison is proper. Have you understood anything? Because I am not talking about execution on balance sheet date. I am talking about execution on date of settlement. So if I get a forward contract like that, the difference can be accounted. In the next year, once again with this 53 and whatever rate existing on the date of settlement, whatever difference is there, once again you can recognize in the next year. Like that you can recognize. At the inception, nothing, but the whatever at the year end, you can observe your rate and rate of bank on that day, you can recognize. Once again, rate of bank you have already recognized and the rate on the date of settlement you can recognize in the next year. Sir, but in ICAI questions sometimes they may not give you rate of bank on 31st March. They may give you 31st March spot rate. 31st March spot rate will be considered? No. On that rate, if we have any forward contract rate of 1st June, that only we shall consider. Suppose I don't know the forward contract rate on 31st March, sir. Simply ignore, sir. Don't do anything on 31st March. Recognize entire loss in the next year. Recognize entire loss in the next year. This is what? Hedging or trading and speculation. Let me quickly solve 1 or 2 questions. Sir, shall I proceed? Have you all understood, sir? Every concept was discussed, sir. Standard, limited concepts will be there. Limited important concepts that I am covering. Okay, right. Let me show you 2-3 questions, sir. You will have clarity. First, let me show you this forward contract, now itself completed. Now, look here carefully. Rao Limited purchased a plant for US dollars 1 lakh on 1st February. Dates all the same. Payable after 3 months. Okay. Company entered into a forward contract for 3 months at the rate of 49.15. Exchange rate per dollar on 1st Feb was 48.85. This is forward rate, sir. This is the rate on the date of transaction. How will you recognize profit or loss? First tell me, this is a forward contract for hedging or speculation? Hedging or speculation? If you have purchased a plant, that means it is hedging to minimize your risk. So thereby hedging means what, sir? Loss is fixed. So thereby immediately amortize over the period. So how much loss is there? 48.85 is today's rate. Now forward rate is 49.15. I think 0.30 to 0.30 into 1,30,000. This is to be amortized over the period of settlement. How much settlement period? 3 months. In the 2 months fell in the current year, 1 month in the next year. So 20,000 in current year, 10,000 in next year. So hope everybody have understood. Now CRD 8, let me show you, sir. Mr. A bought a forward contract for 3 months of US dollars 1 lakh on 1st March at $1 is equal to 47.10. When exchange rate was 47.02. Tell me, is it for hedging or speculation? If there is no underlying asset, it is what, sir? Speculation. Now on 31st March 2018, when he closed his books, the forward rate of 2 months. Now you observe, on 1st March, they have considered 3 months. Now today still how many months are left? 2 months only. They are clearly giving the forward rate after 2 months. How much, sir? 47.15. Now can I consider this difference and recognize the loss? Loss or gain? Yes. Should I consider anything about exchange rate on that day? No. I should take my forward rate. I should take the rate of bank on the balance sheet date. Of course, forward rate. So my forward rate is 47.10. Today updated rate of bank is 47.15. Gain or loss? Gain for me. So thereby 0.05 per dollar I will recognize. 1 lakh into 0.05, 5,000 in this year. In the next year, now on the settlement date, it is 47.18. So another 3 rupees gain. So this 3 rupees will be recognized in the next year. Of course, 3,000 rupees will be recognized in the next year. This is what? Speculation, sir. Sir, for the same question in ICAI, sometimes they may not give clearly that is forward rate. If they don't mention clearly as forward rate, simply recognize entire loss in the next year. Sir, discussion clear? So let me discuss one last question. This is your integral operation, sir. Integral, non-integral. You can deal with that. Now, let me deal with one question which is important. Okay, so let us deal with this question, sir. Problem number 4. With this we'll close AS 11. All concepts were discussed. Problems we are discussing. Few problems. Good problems. Opportunity Limited purchased an equipment costing 24 lakhs on 1/4/2015, and the same was fully financed by what, sir? Foreign currency loan. We have purchased the asset by loan. And payable in 4 annual equal installments, which communicates this is which loan? Long-term foreign currency monetary item. Sir, is that clear? That means para 46 or 46A may be applicable. Exchange rates were $1 is equal to 60 and 62.5 on 1/4/15 and 31st March 16. First installment was paid on 31st March 16. The entire difference in foreign exchange has been capitalized. You are required to state how these transactions should be accounted for. Tell me, on first initially at the date of purchase, now what you should recognize, sir? At what value you should recognize? First of all, tell me 24 lakhs. That means how many dollars, sir? Because today if you don't know how many dollars, tomorrow how can you compare the difference, sir? So you should know the how many dollars. How many dollars? 24 lakhs by 60 on that date. $40,000, sir, on that day. $40,000 was the amount spent. Now at the year end, it became to 62.5. That means what is the exchange difference? 40,000 into 62.5 minus 60, which is how much, sir? 1 lakh. Sir, have you all understood? This 1 lakh, what we should do? Is it a long-term foreign currency monetary item or not? Yes. Is it relating to depreciable asset or not? Yes. So thereby, you are having option. Don't say that it has to be added to the cost of the asset. You are having only a option. Have they given in the question whether option is taken or not? No. Have they given option taken or not? They are telling they have capitalized, but they have not said option was taken or not. We have to say, now you could observe what was given in the answer. Entire loss should be charged to P&L. And what was given? The above answer has been given on the basis that company has not availed the option. However, as per para 46A, now exchange differences arising on long-term monetary foreign currency items, if they are different, can be added to the cost of the asset and should be depreciated over the life. Accordingly, if you take that option, then this 1 lakh will be added and cost will become 25 lakhs. So you could observe how we have written, sir, because there is no clarity in the question. In our answer also we have not given clarity. So discussion clear? With this we are closing AS 11. Let me move to the last standard, AS 16. Borrowing costs. Exhausted, Who should be exhausted? Okay. Listening also not so easy. I know it, sir. I feel teaching is only easy rather than listening for that many hours. I cannot listen. Okay, right. Now, let me continue, sir. Let me deal with the last topic, AS 16. I'll tell you one statement, sir. If we understand that statement, AS 16 is over. What is that statement? Borrowing costs that are directly attributable to acquisition, production or construction of a qualifying asset should be capitalized. Sir, if you understand this statement, over, sir, standard is over. Because in the standard the same, this is the purpose of the standard also. Borrowing costs that are directly attributable to acquisition, production or construction of a qualifying asset should be capitalized. To have clarity on this statement, we should know what is borrowing cost, we should know what is qualifying asset, we should know the rules of capitalization. Hello, are you getting the point, sir? So three aspects we are going to concentrate. One is what is borrowing cost, the other one is what is qualifying asset, the other one is rules of capitalization. Once we complete these three, the standard is over. So let me quickly start first with borrowing costs. Sir, if I say borrowing costs, usually what will be there, sir? Interest. But standard doesn't say interest alone. It also says any ancillary borrowing cost. Sir, some extra things will be there. I will not discuss everything. What is required for exam, I will discuss. Ancillary costs, if at all there, we have to consider. This is just like documentary charges, etc., sir. Any, what I can say is, loss on issue, we can say amortization of premium, sir. This, instead of writing loss on issue, you can write amortized premium or discount. This is premium on redemption. This is discount on issue. Sometimes for raising funds, if you are issuing debentures, you may pay premium on redemption. Is it loss for you or not? Yes. Now similarly, discount on issue, that is also because of borrowing only or not? You are incurring some extra expense because of you taking funds that amortized every year, how much you recognize, that also is part of the borrowing cost. Like that 3 or 4 will be there, sir. I will not talk about all these 3. I am going to discuss about one important point. Look here carefully. Listen. Foreign exchange differences, to the extent they are considered as adjustment to borrowing cost. This is also considered as borrowing cost. Something I have said, what I have said, foreign exchange differences, to the extent they are considered as adjustment to borrowing cost, is also part of the borrowing costs. Borrowing costs usually interest, sir, and also includes this. Among these things, the main one is this one, sir, foreign exchange differences, to the extent they are considered as an adjustment to the borrowing cost. Now what is this point, sir? Usually this is the only difficult aspect in this standard, sir. Frankly speaking, AS16 is easy only. Only this aspect make this standard difficult. Just like in departmental accounts, memorandum markup and memorandum stock. Here also this aspect. There will be foreign exchange difference. Something they will say AS11, something they will say AS16. There is one question based on that. So that question alone is difficult, sir. So let me clearly explain you. Are you all there, sir? The last 25 minutes is there. So let us listen. You listen well. I'll explain well. Okay. Let me continue, sir. The foreign exchange differences, to the extent they are considered as an adjustment to borrowing cost. What is this? We will not understand straight away. We'll take a example. Now look here carefully. Let us say, sir, I have purchased something worth $1 lakh. How much, sir? $1 lakh. Or I have taken a loan. I want a loan, sir. Hello. How much? What, sir? I want a loan. I have taken a loan worth $1 lakh. How much, sir? Loan worth $1 lakh. Let us say on that rate the dollar rate is 50. On that day dollar rate is 50. Okay. That means how much I require, sir? 50 lakhs loan. Hello. How much I require? 50 lakhs loan. I am an NRI. Let us assume whom, sir? I am a NRI. That means I can take loan in India. I can take loan in America, wherever I want. Hello. Because you are Indian but not residing in India. Both you are available. So look here carefully. Let us say in India, interest rate, hello, rupee interest rate, let us assume 12%. How much, sir? 12%. Dollar interest rate, this rupee interest rate, dollar interest rate is 9% only. Now tell me, what do you feel? As an NRI, where do you prefer to take the loan? India na America na? In India, 12% interest you have to pay, sir. In America, 9% only interest. Now tell me, where do you prefer, America or India? America. Why? Somebody is telling India, we are having patriotism, more patriotic. I will not leave India. Okay. Money we will raise from across the world, sir. Leave it. Now, because interest rate is lower. Hello. Because what, sir? Interest rate is lower. I may prefer America. Now look here carefully. Let us say by the year end, this is on 1/4/2020. Now because you are so lucky, on 31st March 21, dollar rate gone to 54. Hello, dollar rate gone to 54. Now tell me one thing. On 1/4/20, when you have recorded that loan, at what value you might have recorded, sir? 50 lakhs. Am I right or not? Today, at the year end, because it's a monetary item, you should restate the loan or not? Yes. How much value? 54. The loan becomes 54. Now what is the entry? Foreign exchange difference account at R2, loan account 4 lakhs. This 4 lakhs has to be transferred to P&I. This 4 lakhs has to be transferred to P&I. Now, what you will feel, sir? I thought of 3% reduction in interest. I am getting an extra loss of 4 lakhs. Because of this AS16 only, I am getting a loss. Like this, who will feel? AS11 will feel. Something I have said. Hello, you are having a foreign exchange difference of 4 lakhs or not? Unnecessarily some amount to be debited as per AS11. Immediately AS11. Now a discussion will happen, sir, between AS11 and AS16. What they will do, sir? Discussion. Simply they will say AS11 say, because of you, if that person not bothered about that interest, he would have stayed in India, then he would not bother me. That foreign exchange loss would not be there. Am I right or not? This is what the discussion of AS11. Then AS16, what it says? Nothing to say. Hello. Because of interest only, they have gone to foreign country. Today they have to bear that loss. But AS16 is telling, okay, AS11, what you have said is correct only. So because of me, you are just blaming me that because of me, you are facing some loss. Okay. Tell me, because of me, how much loss is that? To that extent, I am only ready to bear. Like that, who is telling? AS16. Now listen carefully. What AS16 is telling is, look here carefully, sir. I will divide this 4 lakhs loss, sir. Please observe carefully, sir. Total loss, how much, sir? 1 lakhs into 54 minus 50. Am I right or not? 4 lakhs is the loss. Now tell me one thing. AS16 is telling like this. Tell me, because of me, how much loss you have bear? Like that, who is asking? AS16. You tell. Because of interest, how much loss was there? Because of AS 16, how much loss was there? Will you say entire 4 lakhs? Let me clear you one thing, sir. Suppose, now AS 16 is telling like this. Okay, I'll tell you the computation. Now, suppose loan was borrowed in India only. Hello? Suppose loan was borrowed in India. What will be the interest? What will be the interest, sir? Sir, interest if loan borrowed in India. How much, sir? 50 lakhs into 12%, 6 lakhs. Accepted? Hello, is that clear, sir? Yes. Okay. Now. What is the actual interest payment? Now, today, already you have taken loan in foreign currency. What is the interest you are paying? Actual interest payment. How many dollars it is? 1 lakh, right? So 1 lakh into 9% will give you how much, sir? $9,000. But when you will pay interest, sir? Year end only. Am I right or not? So year end, what is the rate? 54. So 9,000 into 54. What is the actual interest you are paying? 4,86,000. Am I right or not? So what AS 16 is telling is, if you borrowed in India, what should be your interest? 6 lakhs. Because you have gone to foreign country, how much saving was there? 4,86,000. Saving was 1,14,000. Now AS 16 is telling, hello, due to this 1,16,000, he has gone there. Now to the extent of me, this is what interest difference, sir. 1,14,000, I am ready to bear your loss. Who is ready to bear? Because AS 16 says like this, even if it is taken in India, interest will be 6 lakhs. So I am ready to consider a borrowing cost of 6 lakhs. Already how much borrowing cost was there? 4,86,000. Because anyway, interest is borrowing cost, sir. Hello? Anyway, interest is borrowing cost. It is ready to take something extra as borrowing cost. What is that? In foreign exchange difference of 4 lakhs, whatever difference was there, to this extent, this 1,14,000, who is ready to take? AS 16 is ready to take. Though it is a foreign exchange difference, we are going to apply AS 16. Whereas balancing figure 2,86,000, it has to be recorded as per AS 11. It is a foreign exchange difference. Now let me read this point, sir. What I am telling? Foreign exchange difference. To the extent, out of the foreign exchange difference, to the extent they are considered as adjustment to borrowing cost. Original borrowing cost how much, sir? 4,86,000. We are considering extra 1,14,000 as borrowing. This 1,14,000 only we are talking about now, sir. To the extent they are considered as adjustment to borrowing cost. I can say total borrowing cost is equal to how much, sir? Actual interest 4,86,000 plus adjustment to borrowing cost. This is what we have learnt in our definitions. Adjustment to borrowing cost 1,14,000. This is only we are referring. Total is 6 lakhs. This is AS 16. AS 11 how much, sir? 2,86,000. This was the classification of foreign exchange difference of 4 lakhs and the total borrowing cost. Sir, have you all understood? Anything have you all understood? Okay. Let me quickly take one question relating to this in the material. For the same question I will do in the similar way, you will have a good clarity. Because this is the question which is usually considered difficult, sir. But if learnt logically, simple only. Placed in last, I think. Placed at last. Okay, right. Now look here carefully. Let me show you pictorially once again. Tip Top Limited borrowed a sum of $10 lakh at the beginning of the financial year 14-15. Okay, for its residential project at how much percentage, sir? 4%. Okay, interest is payable at the end of the financial year. At the time of availment, exchange rate is how much, sir? 56. And rate on 31st March is 62. Okay, if the Tip Top Builders Limited borrowed in India, the pricing of the loan would be 10.5. That means interest would have been 10.5. Because in America 4, they have gone to America. Now there was foreign exchange loss. Okay. Compute borrowing cost and exchange difference for the year ending. Now please tell me, sir, how much was the total foreign exchange loss first of all? 62 minus 56. How much, sir? 6 rupee. How many dollars? 10 lakhs. So total foreign exchange loss will be 10 lakhs into 6, which is 60 lakhs. Sir, have you understood, sir? Now we will divide. First we will find due to interest how much. How we will find, sir? Interest if borrowed in India. Tell me, if borrowed in India, how much interest could have been there, sir? Everybody look into the question. So on that day, what is the rate? 56. 10 lakh into 56. That means how much loan is required for them actually? 56 lakhs. So 56 lakhs into India interest rate, 10.5%. How much, sir? 56 lakhs into 10.5%. How much, sir? 80,000. Sir, this is what the interest if borrowed in India. Now, what is the actual interest payment? Sir, different value? 5 crore. Okay. 5 crore 88 lakhs. This is 5 crore 60 lakhs. Okay. 5 crore 60 lakhs into 10.5%, 58 lakh 80. Okay, right. Okay, sir. Actual interest payment. How much, sir? How much dollars? How many dollars you have taken? 10,000. Interest rate 4%. Sorry, 10 lakh into 4%, which is how much, sir? $40,000. Hello, how much? $40,000. 10 lakh into 4%. So, which is $40,000. Now, apply the year-end interest rate. $40,000 into 62. 62. Tell me the amount, sir. 34 lakh. 24 lakh 80,000. 24 lakh 80. Okay, right. Understood. 24 lakh 80. So what is the difference, sir? What is the difference, sir? 34 lakhs. I can say 34 lakhs is because of AS16. AS16 is ready to take that blame of 34 lakhs. Balance blame has to be taken by AS11. AS11 balance difference of 26 lakhs. Total borrowing cost, if anybody asks you, don't say only 34 lakhs because anyway 24 lakh 80 is a borrowing cost. 24 lakh 80 plus this is an extra adjustment because of AS16. This is an extra adjustment. Foreign currency difference to the extent they are considered as an adjustment to the borrowing cost because AS11 is telling because of you only I am facing loss. So thereby we are considering. Sir, is that clear? Okay, right. So let me show you. Presentation, we'll write all the four, sir. Interest, this is actual interest payment. Interest if borrowed in India. This difference is the amount. Then increase, this is the total loss. Out of this 34 is towards what, sir? AS16. Balance 26 is towards AS11. 26 lakhs would be considered as AS11. Total borrowing cost will be 58.8. 24.8 plus 34 lakhs. Together 58.8. In this way, this problem has to be solved. Sir, this question clear? Sir, have you understood this? So that means you have understood the first aspect of my statement. What is borrowing cost? Let me move to the second aspect. What is that? Qualifying asset. Hello, what is that, sir? Qualifying asset. What is a qualifying asset? Qualifying asset means an asset that take substantial period of time for getting ready for its intended purpose. An asset that takes substantial period of time for its intended purpose. Example may be building. Sir, usually for construction of building, it takes longer time. Am I right or not? So if you are constructing anything, usually it takes longer time, sir. When you have taken any fund and that fund if you are using for a particular asset, which is taking longer time for getting ready for its intended use, we will call it as a qualifying asset. Let us say I have purchased a car. Qualifying asset or not? Immediately after purchase, I can drive the car. Am I right or not? I have purchased furniture. Qualifying or not? Immediately after furniture, I can sit. Hello? Qualifying or not? Yes. I have purchased land. Qualifying or not? Immediately after purchasing, I can use it. So qualifying? No. So all these scenarios, it is not qualifying because it is not taking substantial time. I am constructing building. Qualifying because it takes substantial time. I am purchasing a plant and machinery. Not. Purchasing truck? No. Because immediately after acquisition, I can use it. If it takes substantial period of time, then only it's a qualifying asset. Sir, hope it is clear. Only for qualifying asset, we should compute the interest. Let me show you in this question. Suppose you have taken funds, sir, for what assets you will qualify. Construction of ceiling across the city, construction of bridge, etc. takes longer time, is a qualifying asset. Purchase of equipment, not a qualifying asset. Working capital, first of all, not for an asset only. How it will be for a qualifying asset. Next, purchase of vehicles, not a qualifying asset. Advance for tools or cranes, you can use it immediately, not a qualifying asset. Purchase of technical know-how, immediately you can, not a qualifying asset. So thereby, out of the total interest 80, we will divide proportionately, sir. Only for 25, we have to add to the cost of the asset. Balance has to be charged to P&L. 80 into 25 by 32 capitalized. Balance everything we have charged to P&L. We'll maintain column like this, whether qualifying asset or not. If it is qualifying asset, we'll capitalize. Otherwise, we'll charge to P&L. This is the concept of qualifying asset. But there comes a question. What do you mean by substantial period of time? Hello, what is that? What is substantial period of time? Usually, substantial period of time means what, sir? 12 months. More than 12 months. But that is not a rule, sir. It can be proved against also. Anything more or less is okay. But what we say is, if it is taking genuinely some time factor for construction or for manufacturing our asset, you can take it as a qualifying asset. Is that clear, sir? Simply, immediately after acquisition, if in use, that is not a qualifying. After some time, by doing some process, if you can use, that becomes a qualifying asset, because significant time is there, interest will be huge. We cannot ask you to charge to P&L. We are allowing it to add it to the cost of the asset. That is what qualifying asset. Now let me move to the last aspect, rules of capitalization. What is that, sir? Rules of capitalization. Don't worry, sir, I'll close it within time only. Rules of capitalization. Sir, 3 rules: when we should commence, when we should suspend, when we should stop, cessation. Start, pause, end, the end. Start, pause, and the end. Now when we should start, sir? Very simple. First you should incur borrowing cost. Next, using that funds you have taken, you should start the activities relating to qualifying asset. You should incur some expenditure on qualifying asset. Simply to make you understand, you should take loan. If you are using your own fund, borrowing cost will not be there. Loan should be taken. Then using that, you should purchase some materials. Then that materials you should start using for building. Hello, materials used for construction. Simply materials bought, labor was not there. Can you say work is being done? No. So thereby, borrowing cost should be incurred. Activities relating to qualifying asset should commence. You should incur expenditure on qualifying asset. Like this, some factors will be there, sir, but not required for exam, not so important. Suspending is important, sir. When you will stop capitalization, if the active development of qualifying asset is stopped. Hello, what is that? If the active development of qualifying asset is suspended, then you have to stop capitalizing. Sometimes it may happen like this, sir. Suddenly, due to a particular reason, your work may be stopped. Maybe during Corona, suddenly work stopped, sir. Or because of rainfall, suddenly work may be stopped. Because of different reasons, work may be stopped. Sir, if your active development, that means your construction, etc. was stopped during that period, you should not do the capitalization. You should suspend it. But there is one principle, sir. If such suspension is necessary, then we have to continue capitalization, sir. If such suspension is necessary. Sometimes it may happen like this, sir. Now you have entered into a contract for construction of bridge. Now let us say bridge means 5 or 7 years it may take, sir. And you know very clearly that every year 1 month big rainfall will be there, some or the other time your work will be stopped. It is part of your overall plan. And when the rainfall is being done, will you do the construction? No. It is necessary. You stopping at the time is necessary. You suspending is necessary. If it is necessary for proper development, you can continue the capitalization. Labor strike. Due to labor strike, work was stopped. Labor strike necessary. Hello, for doing construction, if laborers do strike only, I will do construction. Not required, sir. So thereby, definitely, it's not to be considered. It is not necessary. Then you should stop capitalizing. What is cessation? When the asset is substantially ready for use. I am not telling completely ready for use. Substantially, if it is ready for use, sufficient, you can stop capitalization, because we will consider only those costs until the asset is ready for use. So if it is substantially ready for use, we will stop the capitalization. Hope it is clear. After knowing all these things, one basic aspect you should know is computation of borrowing cost. Only if you know computation, you can charge to P&L or you can add to cost. So remember one thing. If because of this principle, that is borrowing cost relating to a qualifying asset and capitalization rules also satisfied, then you can add to the cost of the asset. In all other scenarios, any interest to be charged to P&L. Interest can be done only two things, sir. Either you can charge to P&L or capitalize. If clearly it is capitalization scenario, capitalize. Otherwise, simply charge to P&L. Are you getting the point, sir? Now, sometimes, sir, when you have taken fund, interest computation is simple. Fund into number of months usage into rate of interest. Sometimes using that fund, we may get some temporary income. If there is any income, sir, that income has to be reduced to find the actual cost for us. Are you getting the point? Sometimes, now this is the point here. We have taken a loan, sir. This much loan was taken, but we have used that loan for investing in the meanwhile. We have earned some interest. Now, total interest is 12 lakhs, but temporary income of 3 lakhs. Net to cost for you is only 9 lakhs. 9 lakhs only will be considered as your borrowing cost. That is one point, sir. And sometimes you may not take amount from one loan, sir. You may have different loans. Hello, you may take funds of different loans. Then what you should do? Apply an average rate. Find total interest, divide by total amount. You will get average rate. That average rate only, which is called as weighted average rate or capitalization rate. Using that rate only, we should do for our fund. Sir, hope it is clear. Balance aspects by reading you can understand. So with this, we are closing AS 16. So hope everybody have understood. Okay, right, sir. So within 1 minute before only, with cessation we have ended it. Okay, right, sir. So hope you have enjoyed the session. Thank you. Bye-bye.
ఒకసారి కూర్చోమ్మ. So, thank you very much, sir. Thank you, Rajkumar, sir, from the bottom of our heart for his efforts of this marathon class. Thank you very much, sir. So, as usual, every day I am telling you, your feedback is highly appreciated. Please post mails if you are truly benefited from these classes. Thank you.